each presenter. To kick things off, please welcome Chris Sayer of Big Trends. Chris is the lead consultant at Big Trends with decades of experience in the financial markets, including roles as a portfolio manager and registered investment advisor. He has spent years helping traders harness the power of options trading strategies, DT options on the triple, up to 500% winners. And you'll see how traders are using opening and VWAP intraday opportunities with defined targets, controlled risk, and the potential for outsized gains. So, Sayer.
Anthony, thank you. Your microphone was cutting in and out. I don't know if it's on your side or my side. So if people can't hear me, please let us know. As Anthony said, my name is Chris Sayer. Anthony, thank you on behalf of Price Headley, our founder and CEO, and the rest of our team for having us today at your Investor Summit. Ladies and gentlemen, as you can see here on the opening slide, our newest strategy is called Zero DTE Options Trader. And given those factors that Anthony shared to you in the opening, all the unrest around the world, new Fed chair, all the different things, we have found most traders do not want to hold positions overnight. So Price Headley, again, our founder and CEO, and his team of analysts went to work and they created this strategy, again, called Zero DTE Options Trader. Now, before I go any further, got to read this to you, so please bear with me. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So real quickly, as Anthony was saying, I do represent Big Trends. I told you Big Trends was started by Price Headley in November of 1999. So that means we're over 26 years old. As Anthony told you, I have a background in the financial services industry. And you can see on the last bullet point there, I've been a part of Price's team for 15 years, but I was actually a client of Price's shortly after he started Big Trends. So Price and I've known each other for multiple decades. If you have any questions during the presentation today, please submit those. But if you're thinking about something after the presentation, you see our contact information at the bottom. Our office hours are Monday through Friday, 9 a.m. until 5:30 p.m. Eastern time. So what are you going to learn today? As I said, our newest strategy is called Zero DTE Options Trader, how to trade same-day options on QQQ. If you're not familiar with QQQ, it is one of the most highly traded liquid securities out there. It tracks the NASDAQ 100. And you're going to be using our unique techniques, 26 years of experience, success stories and chart examples so you can see what these trades look like. Then I'm going to reveal some of the components of the Zero DTE Options Trader to you so you can see our newest strategy. And I will have a special offer for you so you can be a subscriber to our Zero DTE Options Trader as well. So you've heard me mention Zero DTE from Investopedia. What does that mean? It just simply means 0 days to expiration. So I'm 57 years old. I've been trading and investing for almost 40 years. My grandmother gave me some money when I was 18 years old, took me to the brokerage firm, and that's where it all started. Back then, all we had were monthly options. Those are options that expire the third Friday of every month. We still have those, but then the options exchange started creating weeklies, options that expire every Friday. And then some securities went Monday, Wednesday, Friday. And then some securities now have options that expire every day, hence the name Zero DTE. And as it says, 0 days to expiration options are unique contracts that must be acted upon the same day they are traded. So, as Anthony was saying, all the noise that's out there in our world right now, as I told you, what we've heard from traders just like you, a lot of folks do not want to hold positions overnight. So these were created for a narrow window of action. Traders use these options for rapid gains. That's what we're doing here at Big Trends, rapid gains. We're not doing premium collection, but the need for fast decision making that comes from us and the importance of our expertise to mitigate risk. Okay. Anybody out there currently trading zero DTEs? Throw it in the chat box. Love to know how you're trading. So let's kick off today's event with a recent winning trade example. Then I'll explain more about how zero DTE options trader works. So all the charts that you see today, and more about this here in a few minutes, but all the charts you see here today are 15-minute charts. I'm going to write that up here. 15 minutes. Okay. 15-minute charts. Now, what we're trading, we're only trading Q, 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 right? One of the most highly liquid tradable securities out there. As you can see on this trade example, we can go short by trading puts. So just a few weeks ago, got a signal on March 20th to trade puts. Now, what are we looking at here? We're looking at a 15-minute chart. We're looking at the volume weighted average price, or as it's known, VWAP indicator at the bottom, along with some moving averages at the top of the chart. So every candle, red or green, represents 15 minutes. We're looking for a move down below this window within the first 15 minutes of the day. Okay. And I told you incorrectly. We're looking in the first 15 minutes of the day. Each bar is a 5-minute. My apologies. Each bar is a 5-minute candle. Okay. So we're looking for a move within that first 15 minutes below this window. We got it there on March 20th. We entered the trade. As you can see over here, we sold 6 of the 8 contracts at 50%. So part of the system is designed to sell 2/3 of the position, 2/3 of the position when you get 50% or greater. We got that. Here at Big Trends, when you do that, that creates, and more about this in a few minutes, what I call an RF trade. That stands for risk-free trade. You got your original trading capital back. Now let's see what happens with the remaining contracts. The remaining contracts were closed, as Anthony said, we're targeting 500%. We got 500% here on this trade, and if you'd allocated up to $1,000 to this trade, you'd have made $1,586 gross profit before any commission or subscription investment. And look at that, $1.22 a contract. And ladies and gentlemen, don't forget this all happened within the same trading day, trading these zero DTE options. So what is zero DTE options trader, and why should you care? So let me lay out some of the strategy guidelines for you. Average holding period, less than 1 trading day. You're in the first hour of the trading day, okay? And you're out by 3:30, okay? You're out by 3:30, same day. What type of strategy? Opening range breakouts filtered with the VWAP and volume. What options do we trade? Out of the money, that's what OTM stands for. Out of the money options expiring on the same day as the entry. Now, nobody commented in the chat box that I can see, but this is a very, very popular way to trade. In, out, highly liquid security, can trade either direction. Okay. 5-minute chart. What time frame? 5-minute chart. Now, the 5-minute time frame allows us to identify the opening range from the first 15 minutes. Okay. First 15 minutes using that 5-minute time frame. And here is opening range. As you saw on that first chart, our system paints that window for breakout or breakdown. That first case study was a breakdown. The 5-minute chart also catches breakouts quickly because we only need 1 bar to close outside of the range. Trades are issued, here you go, between 9:50 a.m. Eastern Time and 10:05 a.m. Eastern Time, which means you only need 15 minutes per day to catch these entry signals. And there's not going to be a trade every day, but you know, every morning when you wake up each trading day, I need to be available in that window to see if Big Trends is going to send me a zero DTE options trader trade alert. Now, intraday breakout patterns have resulted in ample trade frequency, something I've heard in my years of being here at Big Trends. Traders want to trade, right? Large profit potentials like you saw on that first case study. So how we're maximizing leverage and stability, details. Same day expiration options have allowed for large winners, like you've seen, without overpaying for premium. Do you remember what that first contract was? $1.22 a contract. That means for a single contract, $122. Now, the idea is to trade multiple contracts. Stay with me. Out of the money options can be seen as aggressive, but we use a 50% stop to mitigate that risk. So when I was reading the definition to you of zero DTE options, remember it talked about mitigating risk? We have parameters in place to assist in that. Check this out. The average contract price has been less than 85 cents a contract since 2023. Okay, 85 cents. So what does that mean? 100 shares represented in one options contract, $85. As I said, we use a 50% stop loss. So you know even before you put a trade on, okay, this is my pain point, if you will, where I will exit the trade. Now we will give you those exact stops. Okay? We're going to give you the exact stops. Now, as I taught you on that first case study, a 50% target on 2/3 of the position, right? So let's just do simple math. You buy 3 contracts. If it gets to 50%, you're selling 2, right? That's a dollar sign. You're selling 2, which means you have 1 remaining. And as I said, you would have 1 remaining here, and you're looking for that 500% final target. Very simple concept. Again, we give you the trade instructions for each one of these levels. Now, here's a look at the overall performance. Going back to January of 2023 through this morning, if you just started with a $5,000 account back then, allocating $1,000 a trade, all wins, all losses, no commission, no subscription investment, you'd be up $24,489, no compounding. And what I want to point out up here at the top left, almost 490%, 489.78% return under those parameters. Now, past performance doesn't guarantee future results. What I want you to remember, we're trading one security and one security only, QQQ, and we're in and out the same day. Now, Anthony told you all earlier, the SEC, Securities and Exchange Commission, has come out with an announcement that they're going to make the pattern day trader rule go away. Now, if you're not familiar with that, research that. But to me, it is a great thing for us as traders and the options industry. We're very excited about it here at Big Trends. Now, this graphic this way, same time frame, same $5,000, same $1,000 per trade. 5,000 would now be $29,489. Again, a 489.78% return under those parameters. Now we're going to look for a specific setup. So we filter for new trades. How do we do that? We identify the high to low range for the first 15 minutes for QQQ. Remember, that's the only security we're trading. We then look for a 5-minute candle to close outside of that range. Remember that first case study, it was a breakdown. And that's why we traded puts. When a breakout occurs, we confirm that momentum with VWAP, volume weighted average price, and our unique BTVC indicator, which stands for Big Trends Volume Confirmation. We only take breakout trades, again, between 9:50 a.m. and 10:05 a.m. Eastern time. If the breakout doesn't happen quickly, there's no trade. Again, as I said, you wake up each trading day, you know I got to be available between 9:50 and 10:05. And that's it. That's it. Looking for new trading opportunities. Now, the exact settings, as you can imagine, are proprietary, but they are revealed to the subscribers of the Zero DTE Options Trader strategy. So when you subscribe today, not only will you get trade alerts, we also give you what we call the settings and rules sheet. Now, it is a 2-page PDF with bullet points outlining the trading systems for you, the system for calls, the system for puts. It talks about the option selection process, how our team arrives at trading those out of the money options. Price Headley, again, is our founder and CEO, and he has recorded a strategy session, which you would have access to as well. Now, do you have to read the settings and rule sheet? Do you have to watch the strategy session video? You do not. You can just simply sit back and trade if you'd like. Now, here are some trade examples from a variety of market environments, starting with October of 2025. So remember, these are 5-minute charts. Let me write that up there. 5-minute charts, right? 5-minute charts. 48 cents a contract. Now, remember, these trades are based off allocating up to, but no more than $1,000 a trade before any commission or subscription investment. Now, this is the window, as you can see in this colored area here, that our system has to determine that is important in that first 15 minutes of the trading day. We get the break, as you can see here in the black oval. We get the confirmation with the volume down here. We enter the trade. We close it all the way up here, okay, for $1,218 in gross profit on that trade. We sold 14 of the contracts at 50%. We sold the remaining 6 at 306.25%. Now, as you saw in that example, not every trade winner will hit its final target of 500%. Some are time stopped at 330. So this 330. So remember that first window that I've taught you about, that first 15-minute window, when you're looking for your new trades. If the trade has not worked out, we will send out another alert at 3:30 reminding you, hey, you need to take action. The trade has not done what we wanted to do today. You need to shut it down because why? We're trading 0 DTE options. Let me share another example with you. Here's a trade. Again, we're only trading the Qs. We get in. You see we're outside the window here, right? We're well above on the volume indicator, the big trends volume confirmation. We get the breakout. We close out 2/3 of the position there for 50.43%. Remember, when we do that, now that we have a risk-free trade, what do we do with the remaining 2 contracts? We close them for 95.65%. Why? Because it was 3:30. It was time to take action. Now, on this trade, if you'd allocated up to $1,000, you'd have made $568 in gross profit on that trade. Why do we require confirmation from multiple indicators? Now, I don't know if you heard Anthony and I talking earlier. You may have picked up on it when I came on the air. Big Trends is based in Lexington, Kentucky. We like to say we're the horse capital of the world. Now, there's a big race taking place on Saturday just down the road from us over in Louisville, Kentucky. If you're not aware, it's called the Kentucky Derby. It's one of the 3 races in what is known as the Triple Crown. Now, growing up here in Lexington, again, I told you I'm 57 years old, been around horse racing my entire life. Okay. Mess with horses a little bit myself. Now, 1 voice is noise. 3 voices are an edge. So you got the trainer, you got the jockey, and you got the handicapper, the morning line. We believe if you get multiple sources, right? As it says down here at the bottom, 3 tips from 3 independent witnesses. Now you've got an edge. So that's why we like multiple indicators with confirmation. If you've been trading anytime at all, you know if you're only trading a single indicator, you can get whipped around a lot with false signals. So that's why we like the opening range, the VWAP, and volume. As you can see right here, opening range, VWAP, and volume. So 3 voices, in our opinion, give us that edge in our 0 DTE options trader. Now, listen, as I've told you on the graphics, not every trade's going to be a winner. So let's talk about a losing trade. We get the setup that we like. I've told you on the breakout to the upside using calls, we're looking for this window here outside it. We get it. We get the volume action that we like. And then the trade lost 50%. Remember, that's the stop that we're using. Now, the beauty of this strategy is that these are same day trades, no waiting around, no expensive options contracts. As I taught you, the average since inception, less than 85 cents a contract. Now, here's a big one. No overnight risk. No overnight risk. We are finding more and more traders do not want to be holding positions overnight. And as Anthony and I have told you, there's changes coming in the options industry about the pattern day trader rule. Again, we here at Big Trends are extremely excited about that. Here's another case example, trading the Qs. We get in. Why? Because we got the breakout above our window. We got the volume action that we like. Look at that. In just a few bars, we're selling 14 of 20 contracts at 50%. Remember, we're looking to sell 2/3 when we get up 50%. And as I've taught you today, when you have those remaining 6 contracts, now you have a risk-free trade. Let me take that ink off there. Well, it doesn't want to come off. But that trade generated $1,218 in gross profit on that trade. Now, remember, that's based off a $1,000 allocation before any commission or subscription investments. 48 cents a contract. So you don't have to be a $1,000 trader. I would say you could do this strategy for about $300-400 a trade if you wanted to, because remember, the idea is to buy multiple contracts. All right. Now you can trade a lot more than 1,000. Why? Because it's the QQQ, one of the most highly liquid tradable securities out there. But always trade with what fits in your financial situation. Here's another example. Beginning of the year, we get in, we get out. Now we have our risk-free trade. Why did we get in? We got the breakout above the opening range that we like. We got that confirmation. As we talked about, we enter, we exit it, 2/3 of the position there. Close the remaining 4 contracts at 131.34%. That trade generated $692 in gross profit. Okay, 67 cents a contract. Now, sometimes we'll hit the first target of 50%, and the remainder will be closed at a loss. This system is designed for that to be and I've taught you this, risk-free scenario. So what does that look like? Well, let's talk about it. So we get the breakout above the opening range that we like. We got our volume confirmation down here. We get our original capital back when we get 50%, right? 62 cents a contract. Now we're selling 11 of the 16, so that means we have 5 remaining. So the trade is essentially risk-free now, right? What do I mean by that? Well, you'll see right here. The 5 remaining contracts lost everything. Took a 0 on the 5 remaining contracts. That can happen, folks, trading these 0 DTEs. Now, that trade generated $31 in gross profit under that scenario, okay, before any commission or subscription investment. So essentially covers your commissions on those contracts, right? So position yourself accordingly about what your risk tolerance level is. Now, the trades we just looked at were bullish call signals, but as I showed you from the very first case study, this strategy also trades puts. So here's a put trade. Enter 12 contracts, 79 cents a contract. Now, remember, we're looking for this breakdown down when we're trading puts below that window. Get the volume action that we like. We close 50% there, right? And then we close the remaining 4 contracts, hitting our full profit target of 500%. This is a perfect example of what this system is designed to do. Now, as I've shown you, not every trade is going to do that, but this is the ideal scenario, whether it's to the upside with calls or to the downside with puts. Sell 2/3 of the position at 50% and sell the remaining third at 500. We get to 500, we're shutting it down, looking for the next trading opportunity. That trade generated $1,900 gross profit in just a few hours. Because remember, each one of these bars is what? 5 minutes. And you're only trading one security. You only got to worry about one thing and one thing only, the Qs as they are known, QQQ. Here's another example with puts. Breakdown, 2/3 sold there, 50%. Now we have our risk-free trade. Hit another 500% here on the remaining 9 contracts. 34 cents a contract on that trade. $1,870 in gross profit on that trade. Here's puts again to the downside. Get the break that we like, right? You're learning we're down below that window. Within that first part of the trading day, we have the volume confirmation using the Big Trends volume confirmation. We're selling 5 of the 7 in here. Now we have our risk-free trade. We closed the 2 remaining contracts, 500%. So think about that. Within just a couple of hours, because each one of those candles represents 5 minutes of trading action. That trade generated $1,675 in gross profit. Now, here's a call trade from earlier this month. It's hard for me to believe. I don't know about you guys, but it's hard for me to believe that today is the last day of April. So earlier this month, that hit its time stop for a nice winner. So time stop, what do I mean by that? We're going to shut these trades down at what time? If it hasn't hit our stops or our profit targets, time stop 3:30 p.m. Eastern time. Okay? Again, we will alert you if action needs to be taken. We enter April 13th, so just a few weeks ago. We get the breakout, as you can see here, above our window. We got our volume confirmation there. We're selling 6 of the 8 there for 50%. Now we have our risk-free trade. What happens with the remaining 2 contracts? They made 224.56% all the way over here. Due to the time stop, that trade generated $854 in gross profit on that trade. Traders Corner special offer. Anthony, Marie, their entire team gave us Big Trends the opportunity to present today at the Investor Summit. What I have for you, an opportunity where you can get real-time trade alerts when this strategy triggers a new signal. Now, the trades are only available to the first 21 traders, and you may be able to see, I don't know, but there's more than 21 of you in the room. So let's talk about it. So the name of the strategy, the trading system, the newsletter, the subscription, Zero DTE Options Trader. Okay. 12 months of trade alerts from the Zero DTE Options Trader Alert Service. Resources. You heard me mention some of these earlier. Price Headley, our founder and CEO, does weekly video updates. He recorded a strategy session. It is a deep dive into the trading system. As I taught you earlier, the settings and rules sheet, it is a 2-page PDF that our analyst broke down based off Price's strategy session. Do you have to watch the weekly videos? Do you have to watch the strategy session? Do you have to read the settings and rules sheet? You do not. You don't. You can just sit back and get your trades. You're going to get a dedicated email address to contact the analyst team. Should you have any questions about the trades, the option selection process, the settings that are being used, we reveal all of that to you as I shared with you earlier. Now, 12 months at retail is $3,564. That's based off the monthly list price of $297. Okay, $297. But as I told you, I have a Trader's Corner special offer for you. So 12 months of trade alerts, as we just established, retail $3,564. That's going away. First 21 of you today can get in for just $297. Think about that. The monthly list price is $297. So you can think of it as buy 1 month, get 11 months free if you'd like, but it's $297 and it does not automatically renew at the end of April next year. No surprise charges from us here at Big Trends. How do you take advantage of it? Well, you go to Big Trends, as you can see is plural, bigtrends.com/corner. Now, I'm going to put that in your chat boxes for you. So give me just a second. I'm also going to put our contact information in there should you have any questions. Let me put that out there. There you go. And let me take you to that checkout cart. Let me show you how simple this is. Billing information, first name, last name, email. Put in your email address there so you can get all the necessary information. Contact information, I just put that in your chat box. It's also in the checkout cart in 2 locations. Just below that, you see that we accept the 4 major credit cards: Visa, MasterCard, Amex, Discover. Okay. If you slide down that column, you'll see in the golden rectangle down there that we also accept PayPal. So 5 ways. One time, $297, okay? $297, and as I told you, it does not automatically renew. What will happen is 3 days prior to your expiration, our team will send you an email giving you the opportunity to renew. If you miss it, you ignore it, your subscription would simply expire April 30th of 2027. Terms and conditions are there, and their contact information is listed a second time. It's 1-800-BIG-TRENDS, 1-800-244-8736, or email client@bigtrends.com. And just below that, it says we're here to help. Now, if you just joined me in the presentation and you missed about who we are at Big Trends was started by Price Headley in November of 1999. November of 1999. So that means we're 26 years old, quickly approaching 27. I told the group earlier, I was a client of Price's shortly after he started Big Trends. I joined Price and his team almost 15 years ago. Why do I share that? We've been around, we've experienced a lot of things, we've been through all kinds of different market environments. Join us today by going to bigtrends.com/corner. Lock in your 1 year subscription for just $297. FAQ, frequently asked questions about our zero DTE options trader. What type of strategy is used? Buying calls or puts, as I've shown you today. How are you going to receive those trade alerts? Real time via email. So again, put that email address in that checkout cart. Now you'll notice out here to the right, WhatsApp is also available. Let me answer this first. Do you have to use WhatsApp? You do not. But what is it? It is a free, no cost application that you can put on your computer, your laptop, your tablet, your mobile device, or all of them. It's free. We give you setup instructions in 2 locations, in your welcome email and in your Big Trends account under the My Account section. Again, you don't have to use it. You can simply sit back and get your trades via email. But WhatsApp is a nice feature because it will send you a push notification similar to texting. But we have found that WhatsApp is faster and more efficient than texting. When are the new zero DTE trades sent? Remember this 15-minute window between 9:50 a.m. and 10:05 a.m. Eastern Time. You need to be available then to be a subscriber. Trades closed using the time stop. Remember, we're getting in and out the same day regardless. If we haven't hit the stop, we haven't hit our profit targets, we're going to send you an alert at 3:30 telling you to shut it down. Shut the trade down. How many trades per month will you receive? Up to 10 trades per month. Okay, so again, not a trade every day. I've taught you this throughout the presentation. What is the recommended price of a zero DTE trade? Averaging less than 85 cents a contract. Now, remember, the idea is to trade multiple contracts. So when I say you can do it for $300-400 ish, right? But as I taught you, you can do it for a lot more as long as it fits in your financial situation. Resources. Remember, you don't have to use these, but they're there if you want to be educated. Price Headley's weekly video updates, the settings and rule sheet, the strategy session, and the dedicated email address to Price and our team of analysts. Should you need any assistance understanding the trades, the system indicators, any of that, we're here to help you. Here's a reminder of how this strategy has performed over time. Since January of 2023 through this morning, $5,000 account starting balance back then, $1,000 a trade, no commission, no subscription investment, $24,489. That factors in all wins, all losses, no compounding. And as I shared with the group earlier, ladies and gentlemen, it's almost 490% return. Trading one security and one security only. 489.78% return. Now, past performance doesn't guarantee future results. We have to say it, you have to see it. Here's another way to see it. 5,000 goes to $29,489 in gross profit. Same scenario, just a different visual for you. Anthony, thank you for posting that. Really appreciate it. So here's a trade example on the puts, okay, that I shared earlier, just about a month ago. 6 of the 8 contracts sold at 50%. Why? Because the rule says you sell 2/3, right? And if you don't have an exact 2/3, you round up. So we got out there. What have I taught you today? Once you do this, now you have a risk-free trade. Risk-free trade. Why did we get in? We got our volume confirmation. We got our move below the window there. Now, somebody was asking, Andrew, thank you for your question. What are the green and black lines on your charts? It's a great question, Anthony. That is revealed to our subscribers of Zero DTE Options Trader. Okay. They are moving averages. but I won't be able to give you the settings today, Andrew, or others. So we've taken off 2/3 of this position. We have 2 contracts remaining. Now, this was a full profit target. Why? Because it's 500%. 500% in this trade, if you'd allocated up to $1,000, made $1,586 same day. And remember, these are 5-minute bars. You only need to be available in that first 15 minutes, that window, 9:50 to 10:05 a.m. Eastern time. Okay, how about another trade to the call side? We get the break above, got our volume confirmation down here. 6 of 8 contracts sold there, $1.14 a contract. Now we have our what? Risk-free trade. The remaining 2 contracts, 224.56% all the way over here. This was a time stop trade because remember, we'll get out at 3:30 p.m. Eastern time if we haven't been stopped out or hit the 500% profit target on the remaining third of the trade. That trade generated $854 in gross profit. Think about it, folks. Depending on what size trader you are and how a trade performs, you could easily cover your 1-year subscription for $297. So remember, it starts off with 12 months, total package value, $3,564, right? Based off that monthly list price. 12 months, 3,564 if you just joined me, that goes away because we have today's special. Anthony, Marie, their team invited us. Our team said, let's do something special for the Investor Summit here at Traders Corner. So what are we doing? For the first 21 traders, you can get in for $297 when you go to bigtrends.com/corner. Let me put that in your chat boxes for you one more time. You see what we got over here. Anthony's doing it too as well. Anthony, thank you so much. Appreciate that. There we go. Let me take you to that checkout card again. Folks, this is so simple, so easy, so secure. You've got your billing information up here. First name, last name, email. You see email field highlighted in red. I know you're excited. You want to get signed up. Type it in correctly so that way you get all your necessary information. Contact information, we just put it in the chat question box for you. Again, it's also listed here in the checkout cart in 2 locations. Just below it, you see that we accept the 4 major credit cards, Visa, MasterCard, Amex, Discover. But remember, down here at the bottom of that column, we also accept PayPal. So 5 ways for you to get signed up. PayPal or one of the 4 major credit cards. No coupon codes necessary. Just simply put in your information, click agree to the terms and condition, click complete my purchase. Remember, contact information is down here as well. And don't forget, we're here to help. Remember, we've been around for more than 26 years assisting traders. I was a client. I was a client shortly after Price started Big Trends. And then as I told you, I had the opportunity to join him and his team almost 15 years ago. Okay? We've been around, we've seen a lot of things. Join us today by taking advantage of this special. Big Trends is plural, okay? Big Trends, multiple.com/corner. 297 does not automatically renew. Again, what'll happen April 30th of 2027. No surprise charges. 3 days prior, we will send you an email alerting you that your subscription is about to expire. If you miss it, you ignore it. It'll expire April 30th of 2027. Now, I showed you earlier, 297 is the monthly list price, right? Monthly list price, because 12 of those equal this number that's up here, 3,564. But you're getting all 12 months for just 297. Like I said, it's like buy 1 month, get 11 months free. Think about that. You get the opportunity to get to know us. You get the opportunity to trade one of the most liquid securities out there. Okay. QQQ. That's all we're trading. Now, we have been asked, do we anticipate adding other names DTE options trader? Because there are other securities out there that have 0 DTEs. The answer is yes. There is no timeline or any hints on what names will be next. Okay. Right now, we're only trading QQQ right? One of the most highly liquid securities out there. Bigtrends.com/corner, $297, your opportunity today if you're one of the first 21 traders. Anthony, that's all I've got for you in the Investor Summit crowd today.
Big earnings out tonight, which is Apple. This is the two of the biggest trading earnings nights of the year, yesterday, today. And again, we've had just a beautiful, amount of volatility, I guess you could say, since January. Some people like to go long, some people like to short. I actually prefer to short. So Meta today was a short, Microsoft was a short. And again, I do a different stock every day. So I have no idea what I'm going to do tomorrow, but it is very exciting to trade in 2026. So if you have questions, you can feel free to plop it in the room. This is me. You can also call me at 99-3200 GAP. And you can email me at melissa@thestockswoosh.com. The best place probably to follow me is YouTube because I have a lot of videos on YouTube. I sometimes put the room videos up on YouTube. And that's a good place to follow me. I also appear on TV. I talk about the stock market. I talk about the economy. There's so much going on right now. I mean, I could talk for hours and hours and hours about my thoughts of what's going to happen with Iran. But, the market really has had a lot of volatility this year because of the war. I think there's more volatility to come. So it's an interesting time, like I said, to trade. And right now it's earnings season. And it's a good time to trade. Why? Because stocks have big moves on earnings. You don't know if they're up, you don't know if they're down, but you do know one thing, they're going to move. So again, two big shorts today were Meta and Microsoft, and they had earnings yesterday. This picture of Central Park. I actually live in New York. This picture looks fake. I took it with my phone. It's a beautiful picture of Bow Bridge. And one of the nice things about trading for a living is that you only work Monday through Friday. I only trade in the morning. And again, that allows me the opportunity to have lectures like I'm talking to you right now, go out, walk in the park, and pretty much have a life. My previous career was doing mortgages, and I really had no life. I was working 7 days a week. Realtors would call me on a Saturday and a Sunday when people were looking at houses. And I just wanted a completely different career. And I was lucky to find out about trading. So I put the year-to-date stats for the trading room in here. I'm risking a lot of money on my options. I've been doing options for a long, long time. I'm risking $9,000 in options trade, but you could risk 100, 1,000. You could do one contract. This is not updated through the last 2 weeks. Again, I'm kind of behind here right now because we've been so busy. I have to update these trades. Yesterday we did Hood. That was another really good short. Again, I didn't update. This is the room trades for the year. Up 606,712 for the year in the room. Again, that doesn't include the last week and a half. Most of the trades are shorts. You say, wait a minute, how can you be shorting when the market's bullish? Well, we've had a lot of downtrend swings in the market. Again, even today, the market fell. So you can short a bullish trend. You can short in a bearish trend. You can short wherever, all over the place. Okay. It's about finding the right pick, finding the right entry, and again, finding something that actually has momentum. So this is not even up to date, but 2026 through the end of pretty much, it was like March, beginning of April here, up almost 2 million for the year. And that is because we had so many opportunities to take trades. Normally, again, we would just have normal earnings season at the beginning of the year in the winter, and now we're in spring earnings season, but we just had so many opportunities with the market. One thing we did go long was we went long CVX. Let me just flip to this here. We went long this earlier in the year. We took this all the way up, up. In fact, this is rallying today. We were in this very early, got the run up. And again, this we did some day trades, but we mostly did options in this, which was calls. So when I'm doing an option, I'm buying the call, or when I'm doing a put, I'm buying the put, and then I'm selling it to exit it to get out. Okay. And any questions, you can plop it in the room. But my point here is that you need a good system to get these kinds of results. You need a good system to make any money at all. Even if you don't know how to trade at all, sometimes you'll make money. You can make a big mistake or do something dumb that isn't even right, and you can make money. And that's how people get sucked into the market. And they think they know what to do and they can make money all the time, and then they lose. So again, you have to have a good system to be consistent in any and all market conditions. And that's extremely, extremely important. Okay. So how do you earn money in the market? 3 steps. I'm going to break it down for you. Step 1, learn a good system. Again, this sounds very trading 101, but a lot of people just don't realize that they do need a system. And time is money. So you got to invest in yourself, learn a good system. It will help you when times are easy. It'll help you when times are tough. It'll help you to make a lot of money on big trades, to hold something. It'll help you have a longevity in this business if you really want to do it for a living, and it'll help you to be consistent. It's one of the things I really, really am. I don't trade anything other than my own system that I embedded, literally. People are always trying to talk me into doing other stuff. I say, why? I don't need to. I'll just risk more money in the trades I'm doing. So again, having goals, getting clear with the goals is important. And the number one key ingredient to becoming successful as a trader is having a specific system and strategy that can offer you reliable and consistent profits on a regular basis. You need a system that produces results in order to make money trading. And my system is based on stocks gapping. Okay. So again, what is a gap? Let's just take a look at it here. Here's Apple. Again, a gap is the difference between the close and the open. Okay. Apple closed here, gap down, open, dropped, fell. That was one gap. This is back in early April. Here was another gap. Now here was a trade. This is a day trade. Again, when I say day trade, I'm shorting the stock on margin. By the way, they've changed the margin requirements now. Now you can open up an account. You don't need $25,000 to trade a margin at a retail broker. That's something new. Call your broker, find out more information. I think the minimum's $2,000 now, and you can get 4-to-1 leverage. That's great for people. They didn't used to have that prior to that passing. So you don't need $25,000 anymore to do margin trades. And you don't have to go prop because you could go to a regular broker. Entry was 271.20. Risk was 5,100. Again, this is my day trade. I added a 271.10. Again, I'm shorting shares. 6,000. Average price was 271.15. Got out. 265.85. Made $31,800. Here was the day. Here was the gap. It was a short. Stock closed here, gap down, rallied, dropped. Again, this was the day that they announced that Tim Cook was stepping back from Apple. He's going to be still the chairman of the board, but again, he's not going to be the CEO anymore. And the stock just tanked. And again, I was telling you earlier, Apple has earnings out tonight. I'm not in it. I don't know what it does, but I'm certainly going to be watching it. So this was a big trade. Big trade. It was a short. Again, how do you make this kind of money? It has to do with the size. But you got to get the pick, and you got to get the entry right, and you got to get the direction right. Okay. And like what I'm saying, you got to have conviction. When you have conviction in a trading strategy, you can produce positive results. When you do not have conviction in a trading strategy, guess what? Do not expect positive results. A lot of people don't have a strategy, and then a lot of people also trade and they expect to lose. You say, well, that's crazy. Why would you trade if you think you're going to lose? People gamble. That's just the reality. They gamble, which is nuts. You can't do this and think you're gambling. So why are gaps so profitable? Large institutional money. Gaps are created with large institutional money. That's what makes a gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. So by having a formula to rate and qualify the gap, you get confirmation and conviction that the large institutional money is on your side, and then you play it. And that's that. Gaps are an event, and they create a sense of urgency, like quick, hurry. And again, it could be up, it could be down. Thus, an action is being forced by participants of the stock. They're pushing it. They're pushing it down, or they're pushing it up, okay? And this is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power money, okay? So again, Meta is a great example today. Just flip over here. Doop-a-doop-a-doo. So what happened here? The power money people dumped it. Again, I don't read the earnings or see what they say, and I don't even care. I don't have time to do that. But again, institutional money dumped it. Boom. Or it wouldn't be red. It's 11:22. Okay. That was a short. That was a short we did. Gaps are a strategy or foundation for your trades in the market. When you choose to take a trade, there has to be a support system behind why you're taking the trade in the first place. Gaps are the support system or reason why you would enter a position. And an entry in a stock should not be taken unless the trade has a foundation supporting it. So a lot of people say, well, I'm taking this because it's on support, or I'm shorting the resistance, or it's on the moving averages. That to me is not a strategy. You're describing then a setup, an entry. There's two different things. And the entry won't work if the strategy isn't behind it. You follow what I'm saying? A stock gap from the opening price today is different from the closing price of the previous day's trading. A gap is a break in the price action from one day to the next. Now, here was another one we did. Netflix, it was a good one. Stock closed here, gap down. This was earnings too. Actually, this was the start of earnings season. Shorted at 97, boom. Got out at 94.10, another huge trade. Made 20,300. This is a margin trade. I just shorted the stock. I took 7,000 shares. You could have taken less. You could have taken 1,000. You could have taken 1,000 shares and made almost $3. You could have made $2,900. This is a nice trade. And again, you can now trade at a retail firm without the 25,000 and still trade a 4-to-1 margin. So here's the gap. And this was the day we did the short. So we actually did the day after. See that in there? Boom. And that was a nice one too. Again, a short. Oh, so this was here. I was going to tell you this about the margin. Exciting news is that this opens up a lot of opportunity for people to day trade now that there's not the 25,000 margin requirement. There was a lot of people that had, 10, 15, 20 grand that couldn't short stocks or couldn't buy stocks, couldn't trade on margin. Having that leverage really helps you. And again, when I take a trade, I put the stop in. The stop is like the insurance. It protects me. Okay. So how do I pick which gap to trade? I use a rating system. And this is my system. This is what I do every day. I've done it since I figured it out. I started trading in 2008. I've been trading for almost 20 years. And again, I don't do anything else. And so I'm very good at what I do because I focus on one thing. It's like somebody that plays a sport. If somebody that's good at golf plays golf. They don't play golf and baseball and football and soccer. You know what I mean? So this is it for me. And I think a lot of people, like I said, they're just all over the place trying to be like, do this thing, that thing, the other, and they never really make any real money. Never really get anywhere because they don't want to focus and get good at something. And you have to get good at something to do this. Anyways, my system is based on a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. So I go through the checklist in the morning. This is what I teach in the class. I teach a class usually once a month. Sometimes I skip a month. But the next gap class is in 2 weeks. It's on a weekend, May 16th and 17th. And then if people take my class, they have an opportunity to join the live room. So you have to have taken the class as a prerequisite to join the room to get my trade calls like the mudda we did today. But the system I use to find the right gap is going through this checklist. It's something you can learn in the class. It uses technical analysis. So the 26-point golden gap rating system helps you pick which stock to trade each day. You could do it as an option, you could do it as a day trade, you could do it as both. I like to do both, okay? Like we did a Meta put, we did a Microsoft put, okay? So it pinpoints ahead of time which stock will have the move in the day with volatility to trade. Having a checklist keeps you organized and focused, and man, does that help, particularly when you get in a tweet every second and breaking news every hour. You got to be focused on what you're doing. Having a checklist forces you to look at what you should be looking at in a chart and in a stock to make the correct decision. And having a checklist helps to assist you with directional bias. Having a checklist keeps you on track to reach your goals. A checklist is a plan of action. Everyone that puts money into the market should have a plan of action and a checklist. On a professional level, all high-income career field specialists have checklists. Again, if you would go and you would fly a plane, the pilot has a checklist. Okay? It's normal. So again, my system is based on what? Institutional money. There's another one. This was SCHW. Stock closed here, gap down. This was earnings. Open, rally, fell. Do. Again, this was a short. What happened here? Institutional money dumped it. They dumped it and it fell. Okay? Here was the CVX. I was talking about this one. This is an example of institutional money buying a stock. So SCHW, they dumped it. This, they bought it. Actually, this is getting bought today too. So the whole philosophy behind this system is what? I'm looking at the overall trend on the direction of bias for the gap, and all large traders of every kind look at large time frames to make decisions, particularly institutional traders, to make entry decisions and exit decisions based on a small time frame and the 1-minute chart, which is a high degree of focus and accuracy. Using the daily chart to make the decision for the stock pick allows accuracy in the direction. using the 1-minute chart allows for good risk reward trades with accuracy. Okay, so step one, to be successful, you need a good system. Step two, master that system with the help of a mentor. I mentor people. I call the live trades in the room. I call the trades on the options newsletter. I send them out to people in an email. I put the targets on them. That's important. If you have questions, you can call me. You can email me. I run the room. You can follow me in the room. You pick your sizing. If you want to take 1,000 shares, 100 shares, one contract, that's your decision. But basically, I'm calling the entries and the stop. Now, this was the month of March. Again, I didn't update the stats through yesterday or today yet, but again, we had a great month of March. Part of the reason we had such a great month of March was market fell off a planet, and we had a lot of big moves to the downside. Again, the market flipped and then made new highs, and we'll see where we go. But we did a lot of different stocks here. We did the market some days, but most of the trades were just different kinds of, ticker symbols. And again, now it's earnings season. So, to be able to make that kind of money in 1 month, that really sets the tone for your year, because it's only April. Now, tomorrow is the first month of May, but we still have 9 more months left in the year. If you're not making money in the first, couple of months of this year, first 4 months, if you are not doing as well as you want to, if you're losing, okay, or 8 more months we have in the year starting tomorrow, you still have 8 more months left to go to pick it up. You can even turn your entire year around, even if you've been losing for the last 4 months, because you have plenty of time to do it. But I wouldn't wait. And again, because of the fact that there's so much opportunity right now because of earnings season, it's a great time. So how did I pick those stocks to trade in March? How did I pick the stocks I did today? Using the Golden Gap 26-point rating system. And again, I review this stuff in the room. The system uses a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning. Since there are so many stocks each day at the gap, using a system is significant to your success. It takes away this gambling mentality. It takes away the guessing or 50-50 or I got to have the market or what's Trump going to tweet. That kind of thing stresses people out. And you know what I mean? If you've been trading, you know exactly what I mean. Been trading the last few months. So every day I'm trying to find stocks to trade that have, number one, a high probability of directional bias for the entire day. 2, big moves on the day. Again, Meta was a big move. Microsoft was a big move. Early confirmation of my bias in the move. I had that today. And then precise entries with follow through and a good risk to reward. And again, 1-to-1 I think is good. Some of these trades, again, were way more than that. But again, 1-to-1 is normal. It's normal. So how do I make the daily picks? I use a rating system. I rate the gap. It reads the price of the gap, and using technical analysis and an advanced level pinpoints which stock to trade that day and in what direction. Now, any questions here so far? How are we doing? Again, having a mentor is invaluable. Having a daily mentor helps motivate you. When you get down or something doesn't work right and you want to know why, or if you're saying about holding it, if I say hold it, it's good. That kind of thing. Again, how do I know? Experience doing this for a very long time. Like I said in the room today with Meta, I said 100% conviction, this is going to go. And it did. So that kind of thing, when you have someone calling the trade and saying to do it, really helps. Okay. So why does the Golden Gap system work? I am trading the side of power money. If you're not trading the side of power money in the market, you will have a hard time seeing lasting and consistent success in your trading. You'll be scalping or you'll be losing more than you're winning. You have to learn how to read and trade on the side of institutional money. That's what's in charge. Institutional money is in charge of the market and stocks at all times. Let's quick look at the cues. So again, what's happening here? Again, right now we're rallying. We made a brand new all-time high today in the morning. And again, institutional money, we'll see where we go, what happens with this. So far, the market's been sideways, trying to fall, not falling, trying to rally, not really rallying. It's been going nowhere for the last 2 weeks, actually. Maybe it's been waiting for earnings, all these big earnings to come out. Again, Apple's tonight, that's going to move the market tomorrow. But again, institutional money is going to take control if something happens with the war, something happens with Apple, or we don't know what. Is it going to drop? Is it going to sell off? Is it going to fall? Is it going to rally more? So again, it's big money that comes in and controls the market. And it's a heck of a lot easier to make money when you're on that right side of it, okay? So let's look at 1 week of trades. I showed you the stats for March for the whole month in the live room. 1 week of trades. We did CBX. Again, I'm going back to March here, 316. Again, this was a long. We've been doing this along quite a bit. 196.60 was the entry, got out. Again, $1 or more. 197.30, made $2,800. Again, this was 316, had the rally, take it up. Boom. There's the rally. Again, you could have done a call. You could have done a day trade. You could have got in, got out. Again, just a little tiny move like that. And you're just like, whoa, that still worked pretty good for a day trade. Then we did Amazon 317. Again, Amazon fell, boom, okay. Shorted it at 213.50, got on at 212.20, again, $1 more. When do you have 1,000 shares or 500 shares? That's a good trade, okay. Risk 500, trying to make 500. Risk 1,000, trying to make 1,000. Again, this is a short, and that was a gap. Then we did BA 317. BA earnings are already out. Here was the BA. We got in this, dropped, boom. This was 210.80, got out at 210.40, made a little bit here, 1,400. March 17th and the 18th, I lost in the Qs. Where's the 18th? Oh, here. Close here, gap down. I shorted this. I was up in it, but I didn't get out. Then it flipped. Lost in the Qs. Then I did the BA again. That was the big day of the BA when it fell hard. Close here, gap down, fell off a planet. Had a great trade at the BA, 209.30, added at 209.10, got out at 206.88. Again, this was a short. Again, anything that's $2, $3, $5, these stocks I'm trading have big moves. Again, the market has big moves, you know. Then 319, we did BA again. It just tanked. Closed here, gap down, fell off a cliff. 201.95, exited at 199.60. That was a great trade. And again, it kept going, Made 15,400. That was the 19th. And then we did SMCI. This was 320. Here's the gap. Stock closed here, gap down, dropped, fell off a cliff. Shorted at 22.15, got out at 20.90. Again, $1, $2, whatever you can pull out of it. And this kept going. 62.50. And then I also did the SPY. This was 320. Again, we had a bunch of Fridays in March. The SPY just and the Qs just tanked and tanked and tanked. And this was one of the nice days here with this tank too, and fell and had a monster trade in this. Again, take it over, see where it went, broke 645, shorted it early, got in early. I'm always in early, 655.25, added, got the drop, boom. Again, if you have a margin account, you could do these trades. You could do 100 shares. You do 100 shares, the stock drops $10, you can make $1,000. So again, you need something that has momentum, that can move. You got to pick the direction right. Follow me? But those were all shorts and those were all gaps, and that was a huge week. So the fact is you can make real money trading. You can't make any money at all if you don't know what to do. But it certainly could be your career. Certainly. And if you have a small account, you can build it up. But you got to be consistent. So this is a week it was over 100 grand. Again, we've had a huge start to the year because of the volatility we've seen in the market. Again, even if you go back here, go back. This was March, where you see where we started to get in short early here. We were in way early, and we got this whole shebang down. In fact, the date of this was 3:30. So again, we'll see what happens here. See what happens tonight. But beautiful, beautiful sell-off in that. So it's all about correct trade selection, getting the directional bias right, consistently knowing when to take the trade, knowing when to get out. And then trading success means really focusing on taking trades with institutional money. It increases your odds. Do you know what I'm saying? You're not going to move a stock yourself. You could be in a trading with other people, you're not going to move it. I don't trade low float stocks or cheap stocks or stocks with no volume. If you want to get paid, the key is to be in the trade with the large directional moves. If you're trading with institutions, not only are you on the side of momentum, you are also trading with professional traders. As an individual trader, you will be more successful if you trade like a professional, even if you just work for yourself. But that's how you have to think about it. Do you know what I'm saying? And the fact is you have to win more than you lose. I mean, it's just the reality. And then some of the trades have to be big winners. That's the only way to consistently make profits. And you have to also win way more times you lose. And that means you have to be right. And you have to be right a lot. And what helps me be right a lot, and you, if you want to come and learn and take my class, is the 26 points. That rating system is what told me that Meta would fall today, told me that Microsoft would fall today. Like that is the key for me. Any questions here so far? How are we doing? I feel like I'm talking fast today, but that's okay. So step 1, learn a good system. Step 2, find a good mentor. Step 3, add size to earn more money. Again, you can't add size until you learn it. Got to gain your own confidence level. Certainly helps, again, if you have a mentor to direct you. But if you have a big enough account, you can add the size. So 1 pick a day also is what I focus on because I think it's easier to trade one thing at a time. And you can do options or margin day trades using the system, and that's nice. So let's talk about some options. We did this meta back in here, 318 was a month ago. Expired 327. This was a huge trade. Again, the one we did today was earnings, but this was not earnings. Okay, again, the trades get sent out by email in the newsletter. This was sent out at 3:18, 10:30 in the morning, and we did it here. And then it fell off a planet. Boop. And in fact, you could have held this the last day. I did not. I usually don't if I'm up a lot, but you could have actually held this the last day. So we did the 610s, and I just want to show you where this went. This went almost $100 if you held it the last day, which was insane, but this was a great trade. 975 was the cost, sold it at 63. I got out of it the day before the expiration date. Made $53,250 or 546%. If you held this, you could have held it and made more the last day. Now, what if you had a small account, small, tiny, and you did one? You could have made $5,325 on one contract. That's insane. Again, I'm going to go back and show you the chart. You did the trade, got the drop, boom, out, done. That's momentum, that's selling. And again, a put is a short. So you would have bought the put. So the newsletter is you get the newsletter and you take the trade when you get it. Okay. And that's what you would have done this morning. You were on the letter with me. So it's really, again, the only difference between a beginner trader and an advanced trader is size. But you can't risk more money per trade until you know how to do it and you have the money. Okay, but that should be your goal. And this is how you get somewhere if you really want to do this as your career. But one play like that can make your whole week. 2 or 3 great plays can make your whole month. We also shorted the Qs, 585, 319. This was one that expired the 27th, 319. 585s here, close to your gap down, fell, boom. You see this down in here, we did the 585s, you see where it went, dropped, boom. Again, this was one that was, I mean, I don't want to say cheap. Some of these market ones have been a little pricey. Of course, the Qs is expensive now, but one contract was $8, sold at 20, profit was 14,400, made 150%. That's a good trade. I would have made more if this had gone immediately, but it backed up a little bit. If you were a beginner, you could have done one, could have risked $800, made $1,200. That's still a great trade. That's still a great trade. So the difference between options is you're risking the cash. It's not a margin trade. The difference with options is also you can hold options overnight. Okay. And you have a fixed risk. I don't hold my margin trades overnight. So what are your goals? I don't know. I don't know if you want to do this or if you want to trade why, but it's about working smarter, not harder, and taking actionable steps to achieve those goals. The longer you wait, the more you're pushing out the further achievement of your goals and your own financial success. Time keeps ticking. You want to spend your time wisely. I mean, do you want to be in a better place 6 months from now than you are now? Or do you want to be at the same place? Or do you want to be worse off? You know, people just don't get it. They don't want to plan ahead. They have such a difficult time thinking about the future. People feel like the future is so far away, and yet time is going so quickly. It's almost Memorial Day. In a month, it's going to be Memorial Day. Then it's going to be July 4th, the 250 celebration. There's so much going on in the country right now. Time is going fast. You know, before you know it, it'll be the holidays. It's crazy, really. So don't make excuses for I'll do it when I have more time. Nobody has more time. Everybody's busy. Whether you have family or kids or a spouse or a full-time job, you just got to make the time to do it if it's something you want to do and spend the money. Take charge of your own finances because no one's going to do it for you. And you got to take charge of your own life. Financial freedom is up to you. Don't waste years of your life trying to make a little bit of money while you're actually losing money in the market by taking plays and doing trades that are not of value. This is a story I hear from so many people in all the years I've had the stock swoosh. You've got to learn what trades are valuable. People pay for cheap services, don't get anything out of them, and then they take bad trades and lose money, and then they do it again and again and again and again, and years go by, and they just waste so much time. Really, you got to think about the quality of the trades you're taking. Any questions here so far? So empower yourself today to become a success. That's what you want, right? You don't want to be a loser. You want to be a winner. Take actionable steps to make it happen. And spend the time, energy, and money to get somewhere. Stop wasting time. So my class is called the Golden Gap Course. It's a complete system that I use to trade. I teach the entries, the exits. I teach money management. I teach the 26 points, which is a system. And remember, a checklist is invaluable. It tells you what to trade and what to look for every single day. And to get good results, the kind of results that I achieve, you need a good system. Again, it's the reason for my success, and I don't use anything else. So whether you do options or day trades, that was up to you. So the class is called the Golden Gap Course. It's a class that teaches a strategy on how to trade gaps. It teaches the 26 points, and it teaches how to find the best stock to trade each day. The course teaches you how to play the stock on the day, and the course teaches you chart analysis and technical analysis on an advanced level. Class is online. You can be anywhere in the world and take it. And again, the class I teach once a month is on bearish gaps. So it's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. So the class for May is in 2 weeks from this weekend, May 17th and 18th, 9 to 5. Cost of the class is $69.99 US dollars. And again, you can sign up and get in to the room right now. I'm doing an earnings season special. If you want to join, if you want to sign up, it's a great package because again, there's been a lot of great trades. Like if you had signed up yesterday, you would have gotten these trades today and already made money. But the special is going on through Sunday, May 3rd. If you sign up for the Golden Gap Course combo, you get the Golden Gap, you get the trends. You'll do both those classes in May. Class tuition for both these classes and the special is $79.99. And again, deadline is Sunday. You get the trading room free for a year. That takes you into May of 2027. Options newsletter free for a year, and market report. You will get all my trades free for a year, which is totally worth it. And again, you'll do the classes. So, but you can get in and start trading before the classes, which I know a lot of people want to do because of the fact it's earnings season. Any questions from anyone about anything at all? Let me see if there's any questions. I don't see any unless I missed them. Or I can't see the questions. I don't know. Hello, is anyone there? So think about what I said. Invest in yourself to become a better trader. You want to do it. You want to do well. There's plenty of opportunity in the market. Plenty of opportunity this year in 2026 and plenty of opportunity to do well, to make money and to trade. And again, think about the quality of the trades you're doing. You got to have a good system to be consistent. You got to have a good system to make a lot of money. You've got to have a mentor. You need somebody to actually go to ask questions, to explain stuff to you. Some days are easy, some days are hard. But if you know what to do, the hard days won't bother you that much. And again, some trades are going to lose for you, but then you have to have still more winners and losers, and then you got to have some big winners. You know. Well, thanks for having me, Anthony. Are you there?
Hey, Melissa, I'm here. I didn't see any questions
great.
or anything. Yeah, I put your email in there. Is there anything else you want us to?
No, just good luck, and if anybody's interested in the class, email me. And have a wonderful, wonderful weekend.
Well, thank you, Melissa. We appreciate you being here.
Thank you. Have a good day.
Thank you, you too. Another excellent presentation and a very practical approach. Melissa has said, contact her at her email if you're interested in doing some classes and learning from her, and she could become a great coach and teacher for you as well. So it's not just market shout outs as to what to buy and sell. It's more than that. It's to make you also a better trader, which is really important. So thanks again, Melissa. We appreciate you. We have about 13 minutes until our next presenters. So Uh, Now might be a good time to grab some coffee or some tea or something like that. So yeah, maybe check the markets. I'm gonna put myself on mute and yeah, grab yourself something to drink and get ready for our next presenter, who will be Jeff Tompkins of Altos Trading. And yeah, it'll be interesting. Jeff is a hedge fund manager, and it's always interesting to see what he has to say as well. So take some time to get yourself something small to eat and something to drink. Hi, Jeff, are you there? Jeff, if you could hear me, our previous presenter, Melissa, um, her presentation ran a little short today, so if you wanted to go a little bit early, we could. Hi, Jeff, are you there? Jeff, if you're there, I think you're on mute. All right, audience, I'm going to give an introduction to Jeff, and hopefully soon he can hear me and he'll be able to present his screen. We have here Jeff Tompkins of Altos Trading. Jeff is a hedge fund manager with over 2 decades of experience trading stocks, options, and futures. His presentation is going to be the golden one-day options trade. He'll show a unique setup designed to potentially profit in just one day without needing to predict market direction. So, Jeff, if you could hear me, if you could hear me, and I can't hear you, just give me a thumbs up maybe as well. And we do have a new system here, so there might be some new technical difficulties as well. I know that earlier today, our first presenter, Chris, said he couldn't hear me too well. So I think they're still trying to work out some bugs within the updates that they did at GoToMeeting. So I don't think a lot of the issues are on our end. I think everyone's still trying to adapt. Well, not just adapt, but I think they had some critical issues at GoToMeeting they need to fix, I think. Jeff, are you there?
I'm here.
Oh, okay. Hey, we got a new setup here, and I just gave you an introduction so the audience knows who you are. And if you could project your screen, and it's all yours whenever you're ready.
All right, great. Let me get that set up here. All right, you should see it.
Yeah, we got it.
Okay, great. Well, thanks for having me. Great to be here. Welcome, everybody. So in today's session, we're going to cover my golden one-day options trade. These are power play trades for volatile markets. I think a timely topic. So before we dive in, I'll just cover a quick risk disclosure and disclaimer. Of course, trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. Of course, need a broker to trade securities and options and must meet suitability requirements. We're going to be going over some results at our session today. I'll be do my best to share real world, real money results. But just know that anything that I do share due to the time critical nature of trading, brokerage fees, activity of other traders, so on and so forth, don't guarantee that anyone will mirror that performance. So past results are not indicative of future performance. All right, so by the end of our session, you're going to discover one trade setup that has the potential to profit regardless of whether the market goes up or down. And these opportunities occur on a regular basis with astounding reliability. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. Markets have become a lot more volatile, more erratic, and a lot of that is due to the advent of short duration option contracts, zero DTEs. But when we look at one of the most difficult aspects of trading, I think it can be boiled down to accurately and consistently forecasting and timing market direction. Of course, if we had a crystal ball and we knew which way the market was going to go, that would make things a whole lot easier. It still wouldn't be a guarantee that we make money. We could still screw things up, right? But it would be a whole lot easier if we knew which way the market was going to go. And this, I think, is a good way to visualize why that's become a little bit more challenging. This is a equity market volatility tracker put out by the St. Louis Fed, looking at a period in the market over the course of about a year and the equity volatility that took place. So I'll point a couple things out. Number one, right? Volatility is not static, so it's constantly contracting or expanding, and it tends to go up over periods of time, right? So when you're in expansion, this is when you see a rising VIX, and we saw that this year. Um, the market environment changes dramatically, right? But it doesn't stay elevated and it doesn't stay low. So it's, again, constantly contracting and expanding. And this is often what creates challenges for us in our directional trading. So we have a way to address that. What if we don't need to know whether a stock will go up or down or when? So we don't need to necessarily time anything or worry about the market direction. So we're going to eliminate that difficulty using the golden one-day options trade. So what I'll give you today on our session to make this easier is, number one, you'll discover the golden one-day options trade. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to apply the setup to any optionable security. We'll look at some real world, real money trade examples. And then I'll show you how you can get expert guidance to do this for yourself in the live markets. All right, so before I dive in, I'll just give you a brief background on myself. I'm Jeff Tompkins. I've coached around 30,000 students on a platform called udemy.com. I have a 4.5-star instructor rating. I love getting out there and teaching. I've been trading for over 2 decades. I've traded virtually every asset class: equities, ETFs, options, futures, and went through a lot of the struggles that most of us go through on the retail trading side. But I also trade on the institutional side. So I got my first kind of glimpse into the institutional side of the trading world back in the early 2000s, and as an intern at the trade desk at Morgan Stanley. And a little over a decade ago, founded Altos Trading. So I currently serve as the chief investment strategist at Altos Trading. We've rapidly grown to over 60,000 members in over 100 countries across the globe. And I also manage money for my clients at Altos Capital. So I trade my own personal account. I trade on the retail side, but I also trade on the institutional side. So my main goal as an educator is narrowing that gap between the retail and institutional side. That was a very wide gap when I first started trading and first started kind of working on the institutional side. It's narrowing, but it's still very wide. And so again, that's my goal, is to narrow that gap, level the playing field, and get the retail trading crowd, up to speed and using methodologies, strategies, and tools that I use on the institutional side. All right, so let's get into some strategy. What if we could profit regardless of which direction the market goes? So the market could rally to the upside, or it could, we could have a black swan event and the market could crash, and we could still make money in either scenario. So what we're going to do to accomplish this is use what's called a market neutral strategy. Now, there are no special indicators needed for this strategy. So you don't need a MACD, a stochastic, an RSI. There's no complicated chart analysis. In fact, you can do this trade without even looking at a chart. We will incorporate a little bit of chart analysis because I'll show you a way that it can kind of give us a little additional edge. We don't need to guess trend direction, right? So again, we're going to eliminate that difficulty. One of the biggest challenges, right, is timing a directional trend. So we're going to remove that. No need to time the market. We don't need seasonality or trying to figure out, when a stock's going to break out of its consolidation channel, right? There's also no uncertainty when to take profit. So anytime we get into a Golden Monday options trade, we know exactly where we're going to get out with our profits. And this is all a proven strategy based on statistics. So it has a statistical built-in edge when we trade it the way that I'll demonstrate. And it has a positive expectancy. So it's important that any strategy trade has a positive expectancy. In other words, you have a built-in edge, and if you execute it correctly, you will make money over the long run. Okay. A lot of people don't realize they're trading strategies that have negative expectancy, so they can, make money in short bursts or brief periods of time, and then lose money in the long run. All right, so you're going to discover on the session why volatility is one of the only leading indicators of impending trends, how to identify when markets may be primed for a big move, how to build a trade that can profit regardless of which way the market goes, how to set accurate profit targets with limited defined risk, how to play smart money trades. And what I mean by that is, again, we're going to be looking at some tactics that I think are highly underutilized on the retail trading side, but I use in virtually every decision I make in my hedge fund, and you'll see this used widely on the institutional trading side. Okay, and there's a whole lot more. So we've got a lot of great stuff to cover. Let's start to dive in. We're going to focus a little bit on volatility first. So we looked at that St. Louis Fed tracker, right? Looking at market volatility, it's constantly changing, right? We don't have a static VIX. We're not in a static vol environment. It's either contracting or expanding, and there's different ways to measure that. The two kind of high level baskets of volatility are historical volatility and implied volatility. And as the name suggests, right, historical volatility is what has happened in the past, and implied volatility is what is expected in the future. So we're mainly concerned with implied volatility, right? Who cares what happened in the past? It's in the past, it's gone. We want to know, how is the market moving forward going to impact our trades? So implied volatility is the option market's forecast of future price movement. And it's going to tell us with a high degree of accuracy how much an underlying asset's share price is expected to change by a future date. And we can find this information very easily. It's readily available in any retail options platform. And it's going to tell us the exact number of points the market is forecasting the asset to move up or down. All right, and we'll look at some examples, but I want to break implied volatility down a little bit more so that you have an understanding of why we're concerned about this. So it's, and I'll just refer to it as IV. Okay, so IV is a measure of how much the market expects the price of an asset to fluctuate in the future, and it's a key factor in determining the price of an options contract. So there's a direct correlation there, right? And some of you might be familiar with the Black-Scholes model, right? It's this very complex formula that determines how options are priced. But essentially, it can be boiled down to implied volatility. So when implied volatility is elevated, the premiums are relatively more expensive, and when IV is low, right, the premiums are relatively inexpensive. So that's often how it's used, right, to gauge whether options are cheap or expensive, but also to determine the possible outcome of an options trade. So like any other market, right, it's influenced by supply and demand and the market's expectation of the amount of stock will move. So here's the key. It tends to increase ahead of a major announcement or event and then decrease after the event is passed. And the example that I like to use there is a company's quarterly earnings announcement. So if you plot implied volatility on the chart below a stock that has upcoming earnings, you're going to see it increasing leading up to that, what I call known unknown event. We know it's coming up, but we don't know what the outcome is going to be and what the market reaction is going to be. But once that information is known, you'll see implied volatility drop off a cliff, and we call that vol crush. So you get vol crush after these types of events. Keep that in mind because that'll be important as we move forward. Now, there are different ways to measure it. When we look at IV percentile, it's measured on a scale from 0 to 100. So this is my interpretation of levels of implied volatility. And that is that 0 to 20 I consider to be extremely low. IV 20 to 40 is quite low, 40 to 50 more in the medium range, 50 to 80 moderately high, anything above 80 extremely high. All right, now IV forecasts the expected move up or down in the underlying security with remarkable accuracy. It's not perfect, which is okay. It doesn't need to be perfect for the purposes of the golden one-day options trade. But over the long run, it's remarkably accurate. So the options market is very good at forecasting or pricing in expected moves. Now, it's not going to tell us which direction the underlying stock will move. But again, we don't care about that. With a market neutral strategy like the golden one-day options trade, the market could go either direction. It could rally to the upside or it could crash to the downside. It doesn't matter. All right. So let's look at an options chain, and I'll show you where to find this and then how we're going to use it. Now, this isn't a current chain. This is a past chain of the SPY, the S&P 500 ETF. And I'll demo this out of the Thinkorswim platform. This information might be found in a slightly different location in your respective broker platform, but it should be there somewhere. And if you can't find it, I'll show you a way to estimate it. All right, so if we go over to the right of the expiration cycle, and we're just going to go 1 day out in expiration, okay? And again, I'll talk a little bit about more about short duration option contracts. But now we have 0 DTE contracts. So on a lot of the index products and now individual stocks, even we have option contracts that expire each day of the week, which is really great. Now, but we'll get more into that momentarily. For now, if we go over to the right of the options expiration cycle, we see a percentage and a number there, and we'll ignore that percentage. It's an annualized vol percentile. We're concerned with that number where it says plus or minus 3.98. Now, what is that number telling us? That is what's referred to as the implied move or the expected move. And it's telling us that over this period of time, in this case, about 24 hours, because we're going 1 day out in expiration, the options market is forecasting or expecting the SPY to move up or down by roughly 4 points. And we'll round here just to keep it simple, right? Because we're not concerned with exact numbers to the penny. We just want to get a rough estimate. So that's good to know, right? Some light bulbs are probably starting to go off. You can imagine all kinds of ways you can use that information, right? Setting realistic profit target goals or stop loss levels. For instance, if I'm day trading the SPY, right, I go long shares of the SPY, which at this point in time is trading around 573 a share. Would I want to set a profit target for the day up at like 580? No, because that would be outside the expected move. I'd have a low probability of reaching that price level. Or for on the other side of the coin, right? Would I want to set a stop loss at 570, let's say? Well, if I subtract that expected move from the underlying share price, right, that would get me below 570. So I'd have a high probability of getting stopped out with a stop at 570. So again, there's all kinds of ways we can use this. We're going to apply this in a really powerful way using the golden one day options trade. Now, if you're not able to find this, this expected move number in your platform, there's a way to estimate it. You just add up the at the money straddle. And that means you take the strike price closest to the underlying share price. In this case, that would be the 573 strike. And you add up the premium at the offer on the call and the put side. And that'll give you a pretty rough estimate of the expected move. So let's start to build some strategy into this. Again, we're going to use a market neutral, non-directional strategy. So we don't care which way the market goes. Okay. And there's a lot of market neutral strategies out there. We'll look at some of the common ones. One's an iron condor. So iron condors have the potential for consistent gains, but they carry high risk relative to reward. So there's an unfavorable risk reward skew. Not to say it's a bad strategy, but it has some inherent challenges, right? So you could have a string of successful trades that are wiped out by one bad trade. So we're not going to be using iron condors. Another is an iron butterfly. Now, iron butterflies have limited risk and limited reward, and they essentially profit when the underlying asset stays within a narrow range. So you have to be pretty precise on where the underlying finishes at expiration. So there's some inherent challenges there, and we won't be using iron butterflies. Another is a short strangle. So this is where you sell out of the money call and put premium, the same expiration, same underlying asset. It has a limited profit potential with unlimited directional risk. So you can experience heavy losses when the market does make a big move. Okay, so for that reason, we won't use short strangles. What we will incorporate into the golden one day options trade is a long strangle. So long strangles have limited risk. Okay, they're limited to what you invest in the trade and unlimited profit potential, right? So if the market does make a big move, maybe it's not doing a whole lot when you get in the trade and all of a sudden it takes off. It doesn't matter which way it goes, right? We don't need to guess the trend direction. We can benefit from that. We can profit from that scenario. All right, so this is what we're going to use with the golden one day options trade. Now, there's some other really cool stuff we're going to build into this. But before we do that, if you're not familiar with this type of strategy, I'll just give you a high level overview. So a long strangles an option strategy where the trader buys a call at a higher strike price and then a put at a lower strike price. We use the same expiration date on the same underlying asset. Okay, and we use this strategy when we think that the underlying is going to make a large price movement, but we're not sure which direction that might be, right? So the S&Ps might be consolidating kind of like they are right now, and we think they're going to break out, but we don't know necessarily which way, right? They could tear to the upside or crash to the downside. And we want to be prepared to take advantage of either scenario. So as I mentioned, the strategy has limited defined risk. So we always know what our risk is up front, okay? And it has unlimited profit potential to the upside and substantial profit potential to the downside. Not unlimited to the downside, because of course the stock can't go below zero, right? But theoretically it could go up indefinitely. Now there's no need to predict the trend direction. And that's what I think is a real weight off the shoulders here. So we can't be wrong about the trend direction. It could go either way. And we can profit on a significant move up or down in the underlying asset. So as with any strategy, things don't always go as planned. So if we get into one of these trades and a strong directional move does not occur by the expiration of our option contracts, there are ways we can adjust this trade to mitigate risk and even generate a net profitable outcome. And I'm going to show you some of those methods as well. Now we're going to build one more thing into the golden one day options trade, and that is zero DTE, or 0 days to expiration. So this is really exciting. Back when I first started trading options in the late 90s, early 2000s, we didn't even have weekly option expiration cycles, right? We just had monthlies that expired on the third Friday of every month. Okay, then a period of time later, we ended up having weekly. So we had a Friday expiration, right, each week. And now we have zero DTE. And so this is kind of, it's a game changer. It's really changed trading. It's actually impacting markets in ways that we didn't see with weekly and monthly expiration cycles. I won't get into a lot of the details on that because we don't really need to be too concerned with it. But this is a whole new ball game, and basically these are option contracts that exist for a single trading session. So they expire in the same day that they're traded, and this is probably an outdated stat now. But a while back, the NYSE looked at retail data, volume data, and around 56% of the volume, the options volume on the retail side, was in short duration contracts, so 5 or fewer days to expiration. I think that's probably more in like 60 to 70 percentile range right now as of today. So there's a lot of volume centered around these short duration contracts. Now, why are we using 0 DTE for the Golden Monday options trade? Well, 0 DTE options are significantly impacted by short-term moves in the underlying security. So what's really interesting is that you could take the same strategy and give it to 2 different traders. So you could take a long strangle, give it to trader A, who trades it on a 0 DTE contract, and then give that same strategy, so same strike prices, same underlying asset, to trader B, who trades it out, let's say 30 days in expiration. They're both exposed to the same move in the underlying stock, right? Same strike prices, same number of contracts. So everything's the same except the expiration cycle. That trade is going to behave dramatically different. Okay, so the P&L, or profit and loss, is going to be completely different for those 2 traders. Okay, and I'll elaborate more on why, but all you really need to know is that it means significant profit potential for you if you know how to take advantage of it. So this is where gamma comes in. So gamma is, of course, one of the options Greeks, right? You have delta, gamma, theta, vega. Gamma is the rate of change for an options delta based on a single point move in the delta's price. So this is why we're using short duration contracts for the Golden Monday options trade, why we're going to use 0 DTE. Gamma is a risk metric, right? So it measures how quickly an options delta changes in response to a $1 change in the price of an underlying asset. So for 0 DTE at the money options, gamma is at its peak, which means that small changes in the underlying asset's price can lead to large changes in the options delta, which of course then in turn means large changes in the premium of that option. So this is why I was giving that example of trader A and trader B, who trade the same strategy, same strike prices, same number of contracts, but at different expiration cycles. Okay, so this is where it gets really exciting with 0 DTE options. Is it's not uncommon to see these contracts double, triple, quadruple. I've seen some go up 1,000% in a single day, right? So it's really cool. Now, you just have to know how to use this to your benefit, right? How to harness the power of it, and you will know how to do that by the end of our session. All right, so let's get back over to this chain of the SPY that we just looked at. We're going to start to use this information to build the Golden Monday options trade. All right, so this was from back on October 6th of 2024. Again, the time doesn't matter. This is all relevant if we looked at a chain from last week, if we looked at one today. Okay, so I just want you to get the rules down. First thing we want to do is reference the current share price of whatever we're trading this strategy on. So we're going to use the SPY here. At this point in time, it's trading at 572.98. And again, we'll just round. So it's trading right around 573 a share. All right, we're going to go 1 day out in expiration. So you can do the Golden 1 day options trade, 0 DTE on the same day, same expiration cycle, or you can go 1 day out. You don't want to go any further out than that. You start to rapidly lose that gamma benefit, okay, the further you go out in expiration. So we only do these 0 DTE or 1 DTE, days to expiration. All right, so next thing we want to do is reference the expected move. So we've already identified that. It's 3.98. Again, we'll round. So the options market is expecting the SPY to go up or down by roughly 4 points. Now, it could exceed that, and that's perfectly fine. The more, the better for this trade. It's highly unusual that expected move is not reached. Okay, so I would estimate probably about 90% of the time, 90% plus of the time, these expected moves are reached. Okay, we don't necessarily know which direction, and that doesn't matter with the golden one-day options trade, but they're reached and they're sometimes exceeded. Okay, so let's walk through the steps. Step one, okay, is we're going to add and subtract that expected move number from the current underlying share price. And then we're going to use that to select our strike prices for the golden one-day options trade. So we're going to buy a call and a put with strikes near the outer edge of the implied move. And by the way, I'm just using expected move and implied move interchangeably. All right, so if we add that number, it would tell us to buy a 577 strike call. All right, we're just adding 4 to 573. Okay, we subtract it, it would tell us to buy a 569 strike put. So we're just adding or subtracting 4 from 573. Okay, that's how we select our strike prices for the golden one-day options trade. Now, as with any strategy, we have to define our risk, right? Define our risk, and with the golden one-day options trade, that's always limited to the cost of the trade, whatever we invest into that trade. So there's no need to use stop losses, right? We don't have to guess where you should get out of the trade in the event of an adverse move, because there is no adverse move. The market could go in either direction, right? Now, the fun part, defining the reward. So I mentioned that these short duration contracts can experience very high percentage increases in short periods of time. We're going to be actually relatively conservative here and just target a 50 to 100% return on our investment. Okay, so we're simply going to add up the premium paid for the call and put contracts and predefine our exit price. So anytime we get into this trade, right, we know exactly where we're going to get out with profits. There's no need to look at a chart and identify profit target levels. None of that. All right, so that's going to be step two. We're going to add up the put and the call premium to determine our total risk. In this example, right, if we add up the offer on the call side and then on the put side, 27 and 66, we could put this trade on literally for 93 bucks. If you did one contract on this trade, it would cost $93. So you can do these in small accounts as well. You can do these in retirement accounts. And it's, of course, completely scalable based on your risk tolerance and account size. So we'll use 10 contracts. Okay, but the cost of the spread is 93 bucks. So if we did 10 contracts, we'd invest $930. All right, now step three is to set our profit goal and add I'll walk through the formula, but we basically add up the premiums, right, to determine our profit target goal. And there's two approaches you can use here. We're going to target 100% return on our investment, okay? And you can simply place one limit order to get out of the entire strangle if you hit that profit, that limit order, that profit target on either side of the trade. So again, it doesn't matter which way the SPY goes. We could, have a black swan event and crash. We hit it on the put side. And using that one order, that one limit order, it would take us out of the calls. There probably wouldn't be much, if any, premium left in those, but it would take us out of the whole trade. But what I like to do is use two separate limit orders, one on the call options and one on the put options. And the reason for this is occasionally you'll get days where the market goes one direction and then reverses and goes the other direction. So it doesn't happen all the time, but there are occasions where you can hit your profit target goal on both sides of the trade. So then you went from 100% ROI to 200% ROI, right? Without having to really do anything else other than use two separate orders. But basically, we would place our limit order here, in this case, at $1.86. Okay, so once the trade gets filled, we just go route an order for at $1.86 to our broker. Okay, so that's step four. And I just get in the habit of using GTC or good till cancel orders, especially if you want to do that if you're doing these 1 DTE. So, if you put this trade on today for tomorrow's expiration, make sure to use a GTC order so it doesn't get canceled out at the end of the day, right? So we're going to set that limit order at $1.86. Let's see what happens. All right, so we're going to fast forward to October 7th. And what did the SPY do? It went down. Again, we didn't care which direction it went. We want to see it reach or exceed that expected move. In this case, it exceeded it a little bit. Remember, our expected move was 4 points. SPY went down. It was down less than 1%, so nothing crazy, right? There wasn't some major sell-off, but it went down $5.44. Okay, so 0.95% moved to the downside. It exceeded the implied move. Look at what happened to the 569 strike puts. Right, so this was the strike on the put side of our long strangle. Remember, we could get into those the day prior at 66 cents. They traded up to a high on October 7th of 254. Now remember, our limit orders at $1.86. So we easily hit that profit target. But that's a huge percentage increase on a relatively nominal move in the underlying in the SPY. So if you traded 10 contracts, invested $930 in this trade, you would have had a $930 profit potential in one day on this one trade. I'll show you some real world examples that we did with our members at Altos. This is one we did on the Qs back in September. Okay, using all the steps that I just demonstrated. So we referenced the expected move. Okay, we went out one day, so we did this one DTE. So we went out to September 17th, added and subtracted that expected move from the underlying share price of the Qs, structured our long strangle, right? So we bought the 596 strike calls and then bought the 586 strike puts for $1.45 debit. So this trade you could do 145 bucks on a one lot. Okay, we did a 10 lot here, so we invested 1,450 bucks. Vol was not really expanding a whole lot at this point in time, so we were conservative on this one and set a 50% ROI goal. So this one was exited for a $2.15 credit for a $705 profit in one day. Now I want to give you some tips with this. So number one, don't just go out and do this blindly. You'll probably end up losing money over the long run if you don't know what you're doing. So I'm gonna give you some tips, and then I'll show you how you can get some guidance to do this. Number one, you want to avoid vol crush. So remember, I gave you that example of a company's quarterly earnings announcement, right? It implied vol increases leading up to it, and then vol crushes after the information's known. Okay, so that is harmful to a long strangle because implied volatility is a major component of options pricing. It can cause the option premium to decrease rapidly, which then, of course, can negatively impact, excuse me, the value of the calls and puts in the strangle. All right, so long strangles benefit from an increase in volatility. So we want to place these trades when we expect volatility to increase or remain high. Now, I also mentioned we don't even need to reference a stock chart to do this trade. You can literally just do this out of the options chain. But we are going to incorporate a little bit of chart analysis. It can build in a little bit of an additional edge into this. So I'll show you what I look for. So I've mentioned this a number of times, right? Vol always alternates between contraction and expansion. And there's a way to kind of visualize volatility by looking at a candlestick chart, right? So we're going to reference the high-low range of the candle. Okay, so we're simply going to look at the high and the low, and a narrow high-low range is generally going to coincide with vol contraction, and a wide high-low range vol expansion. So if we look at this chart over to the right, we look at the far left candle. The high-low range is relatively narrow, right? So we're probably in vol contraction on that candle. But notice the next candle to the right of that, the high-low range starts to widen. So we're transitioning from vol contraction to vol expansion. And see how that high-low range continues to widen, and then you get a big directional move, right? So we go from vol contraction to vol expansion, and it always alternates. So then notice how the next candle over, the range narrows significantly. So we go into vol contraction, and then expansion, and then contraction, expansion, contraction, expansion, contraction, expansion, so on and so forth. So you want to enter this trade when you're expecting, when vol's low, right? And you're going to also get a better price for that long strangle, and you're expecting it to increase. Now, there will be occasions when the market just doesn't make a significant move, right? And so, like any other trade, things don't always go as planned. So there are some ways to adjust this trade as well. So let's look at those. A couple of things I like to do. Well, number one, one way to address this is to sell premium on both the call and the put side when the market doesn't move as expected. So essentially, a couple of things I like to do is convert this into either an iron butterfly or an iron condor. And that will bring in premium that can help cover the loss on the long call and long put when the market is flat and in vol contraction. All right, and when you execute this correctly, it can mitigate a loss or even transform a losing struggle into a net profitable outcome. And we've had some scenarios where, we got caught in vol contraction when we were in a golden one day options trade. We converted to like an iron fly, brought in premium that exceeded the original cost of the trade. The market stayed in vol contraction. That premium decayed very rapidly, right? Because we're doing these short duration 0DTE or 1DTE. And we actually came out with a net profit in the trade. Okay. Whereas had we done nothing, it would have been a loss. Okay. So those are some ways to adjust this trade. Now, what's really great about the golden one day options trade is it can be traded within a small account, right? Starting with as little as $500. You can do these in small accounts if you're just getting started out, and it's totally scalable. But this is a strategy that one of our core strategies that we use in our live trade room. So I'll give you a little information on that, and I'll let you know how you can check this out and trade these alongside us. So we meet every Tuesday and Thursday. We trade the last 2 hours of the U.S. equity market session from 2 to 4 p.m. Eastern. But we have a whole arsenal of very powerful strategies that we use in our trade room. So we don't just trade the golden one day options trade. We don't just trade options. We do equities, ETFs, a whole lot of other option strategies, futures, Forex, everything, right? We trade essentially every asset class. And again, we have a whole arsenal of really, really powerful strategies. I do a lot of futures trading. So we've had some really incredible futures trades in our live trade room. But this is right out of my personal Thinkorswim account. Using one of the future strategies that we deploy inside of our trade room. This is just on one contract, right, on the E-mini S&Ps. We've done remarkably well in this trade room. So this is just from January through today, through April. We've closed out 65 trades so far this year. We have a 72% win rate, and our closed P&L is just over $21,800, right, on 65 trades. So I want to offer you guys something. Number one, I want to help you achieve a new level of confidence and consistency in your trading. And I'm going to give you access to trade alongside me. All right. So this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I don't hold anything back. So not only do you get to look over my shoulder as I place these trades, I teach you how to do them so you can do them for yourselves. So I reveal every one of my special techniques, any indicators that I'm using, everything, right? I don't hold anything back. So it's a unique opportunity to look over the shoulder of a hedge fund manager and see how I'm using institutional level tactics to trade, with a positive expectancy. I'll give you some more results here in just a second. But you get a membership to our live trade room. You get exact entry and exit signals. You get live interactive sessions. They're all recorded. A lot of our trade room members have day jobs or retired and out doing other things. So you don't have to join the room live if you're not able to. We do record everything. Most of our trades aren't real time critical. So you have, generally that entire day to put them on. But you get full support and coaching from me on the sessions. So again, we meet twice a week. All of our strategies are proven in live markets with real money, right? Going back decades. So this isn't some theory. It's not theoretical. We give you a whole lot of really great tools and education. And again, the opportunity to trade alongside a professional hedge fund manager. This is all designed to help you cut the learning curve, trade with more confidence, more consistency. So I'm going to walk through the package and then let you know how you can get it. So again, it includes exclusive access to our Altos Live trade room. It includes real-time alerts. So you also get alerts outside of the trade room, right? I'm getting a little bit of an echo here. Let's see. All right, there. I think it's fixed. You get weekly coaching sessions. So there's a third meeting each week. We meet with our members every Tuesday at 7 Eastern, and we host a live strategy session. So kind of like we did on today's session, right? We run through a market overview, key levels, and we focus on a new strategy each week. You get access to our private invitation-only Facebook group of around 1,000 members. You're also going to get access to our institutional level on-demand options bootcamp online training, and ultimately learn to trade stocks, futures, Forex, options, whatever market that you're interested in trading with consistency. And then we have two powerful bonuses in this package as well. You're going to get my price action pivot indicator, which normally retails for $9.97. This is a very powerful indicator for your directional trades. It doesn't have any lag, okay? And it tells you purely based on price action which way the market is likely to go. You're going to get my online course detailing one of my most powerful option selling strategies. It's called How to Win 97% of Your Options Trades. This is a strategy we do with our members at Altos. It's a premium selling strategy. We've been doing it for over a decade. It's actually exceeded that win rate. We're over 99%. In fact, we've closed 430 out of 431 positions as net winners. I detail exactly how we do it in that course. So the retail value on this package is over $10,200. You're going to get access to this today at an 88% discount. It's just $297 for the quarter. All right. So this is a webinar only discount. It's 88% off over the course of a year. You're not locked into anything. You're not locked into the year. Okay. You get the entire quarter for just $297, and then you can decide if you want to stay on beyond that first 3 months. Okay. This is limited to 15 seats because we're discounting this so heavily. Once those are scooped up, it goes back up to the retail price. So if you want to claim that 88% discount, the link is Altos Trading. Actually, that's a typo. Don't go to the live. Don't do live. I don't know why that's didn't fix. It's just altostrading.com/LTR. And maybe Anthony can put that in the chat for you. altostrading.com/LTR. All right. And you can lock that in. Again, you get your 2 bonuses. Okay. The price action pivot indicator. Okay. This is going to help you identify key turning points in an asset for your directional trades. Okay. It uses a unique pivot point analysis that helps confirm valid pivots. It forecasts short-term and long-term trends with astounding accuracy. You can use it for any asset class, any time frame. You can define your own parameters. We're giving you the pro version. I use this indicator for my directional option strategy. So if you're like buying calls or puts or doing vertical debit spreads, this is a must-have. It helps you remove the guesswork without any lag, right? And we offer this on Wealth Charts and TradingView. So you'll get that indicator as part of your package as well. You get the on-demand course for our top option selling strategy. And I want you guys to be my next 5-star testimonial, right? I want you to have obviously a great experience. I want you to make a lot of money with us, and that's our goal. We have thousands of members. You can go check out our website and see our Altos All-Stars. These are real members who use our strategies and have had tremendous success with us. We do have a guarantee with this package. So if you don't earn at least the cost of your membership fee back in the first 90 days, we'll give you $2,000 in store credit to spend on any of our other products and services, right? So we're backing up what we preach here, right? So we want you to, again, have a good experience and do very well with us. But even if you don't have, life gets in the way and you don't have time to do this in the first 90 days, just let us know and we'll honor that. All right. So I have just a few minutes for questions. Happy to take any if you want to put those in the questions. Here's our contact information. So you can contact us at support@altostrading.com. And sorry on the error on that link. I thought that was updated, but it is just altostrading.com/LTR. And you can claim that 88% discount. So I want to thank everybody for being here today. It was a real pleasure. Let's see, questions. So again, you can throw those in the Q&A. Let me just make sure I got the right one pulled up here. And yeah, thanks, Anthony, for getting that link in there. Appreciate that. Yeah, so you are grandfathered in to that discount. So this is a quarterly package. The 88% discount is good if you continue past that. Again, we don't lock you into a contract. So you have a full 3 months. Check out the trade room, try it out. And I'll actually give you a little bit of a glimpse into it. This is where we meet. And let me see if that will come up on their screen there. Maybe not. Looks like it's still on my slides. Let me minimize this and see if it'll show here. I'm not sure if you guys can see that. It's not showing up on my end. It may just be that it's sharing a window and not the screen. So I apologize if you can't see that, but you will get login access to the room. And you'll find our trade journal. So we document all of our open and closed trades. You'll also get access to the recordings, all of our alerts, and we do send those out by email and push notification. So you'll get access to all of that inside the room. And again, I'm sorry, it doesn't look like it's actually showing on your end, and that probably is just a function of how the webinar was shared. But apologize for that. So I'll go back over here. Let's see. Well, I don't see any other questions. So I just want to, again, thank everybody for attending today. I hope you find the Golden Monday Options Trade a valuable addition to your trading toolbox. Thanks, Anthony, again for having me. It's always a pleasure, and I'll pass it back to you.
Hey, thank you, Jeff. Thanks for sharing your successful strangle strategies and going over the Greeks, which is always important, and then showing us simply how volatility also is enabled throughout this strategy as well. We really appreciate it, and we wish you much success. That seems like an incredible offer, and I know those types of strategies work. So thank you for sharing that and giving us an overview. So
Absolutely.
be sure to check out the promotional link. Yeah, thank you, Jeff. Be sure to check out the promotional link, and if you can, pick it up for $297. Seems like a great deal. Next up is Silas Peters of T2 Markets. Silas brings deep institutional experience, having worked on global trading desks and across multiple asset classes. His presentation is Discover the SPX Income System, the one skill that generates 3 to 5 times weekly income trades in 10 minutes a day. He'll show how trades can use a structured system to scan once, place trades, and step away from the screen. So everyone, please welcome Silas Peters. Silas is here, everyone. We're just trying to get his screen up, that's all.
All right. Hey, guys, can you hear me okay?
Yeah, we can hear you. Thank you.
What's going on, Anthony? How you doing?
Good. How about you?
Doing good. Let me, sorry about that. Just trying to get my screen here. Let's see. All right. How about now? Does this look okay?
Yeah, that looks good.
Awesome. All right. So we got 45 minutes, right?
Yeah, that's correct.
Okay. All right. So we good to go?
Yeah, it's all yours.
All right. Thanks so much. All right. So thanks, Anthony, and the Traders Corner team for having me on. My name is Silas Peters from T2 Markets. This is the SPX Income Trading Masterclass. I'm going to show you how to build daily income using SPX options without guessing direction, spending hours at the screen without needing any prior trading experience. And by the end of this session, you're going to see how traders just like yourself, beginners, burnt out veterans, even full-time professionals are collecting 3 to 5 income checks a week using what we call a pulse bar strategy. This is a method that only takes 10 to 15 minutes a day, has proven itself across thousands of trades and over a decade of data. Now, I want to set some expectations. This isn't some get-rich-quick nonsense. You're going to discover a real proven strategy to build consistent income using SPX options. This is the same approach that we use every single day in our own accounts. And I'm going to show you and reveal the exact method here for you that you can start using and applying immediately. You're going to see how to generate daily, weekly, and monthly income, not from wild bets, but from a methodical system using repeatable trade setups and a mechanical set of rules. Now, this all works without needing an audience, selling anything, running ads, without staring at charts all day. There's no special skills needed, no selling, no dancing on TikTok, no massive risk, just one repeatable skill that pays. And yes, you can do this. Now, are you in the right place? If you are looking to build an online income and need a process that you can trust, then you are absolutely in the right place today. Now, I'm going to talk about some reasons why I love trading SPX. Trading, as we know, is a solo sport. That means you don't need to answer to a boss, find clients, chase customers. Once you learn how to do this properly, nobody can take your income away from you. Number two is you can make money whether the market goes up, down, or sideways. This isn't about predicting the future. It's about collecting income from it. Number three is we don't need to build websites, no social media dancing. You just need to master one skill, and I'm going to show you how simple that can be. And it is 100% recession proof. It is mobile ready, works in recessions, booming bull markets. It does not matter. And yes, you can do this from your mobile phone. It's also president proof. Left or right, blue, red, green, brown, does not matter. The income system works regardless of who's in office. And then number 4 is it only takes about 10 to 15 minutes a day. It's all it takes to place your trade, move on with your day. No second guessing, no stress, just results. And then finally, number 5 is it's extremely easy to learn. There's no more zombie trading, chart hopping, stacking 27 indicators, just a clean mechanical approach that works. If you simply do what I do, you'll start getting the same results that we get. It's really that simple. Now, what do we trade? I've traded everything from stocks, futures, Forex, and it requires a lot of effort, and the margins can be thin if you're stretched out too thin. But one market gives us the speed, liquidity, and reliability that we want. It doesn't matter if 1,000 of us are doing the same thing, and it's through SPX options. Now, this is one of our personal favorites, the core of the entire income system I'm going to walk you through today. In fact, we like being in good company like that of Uncle Warren, who sold billions of dollars in cash secured puts during the 08 crash. And this isn't a new idea. It's just rarely executed with the kind of precision that I'm about to teach you. And the strategy that you're about to learn, it really didn't exist a few years ago. And that's how powerful and how timely all of this is. Now, quick backstory on me. Who am I? I am the founder of T2 Markets, co-founder, partner, Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader, speaker, author, educator. And this right here is what makes it all worth it. I'm a husband, I'm a father, and I'm a mentor to thousands of students across the globe. And my obsession is helping serious traders get real results. Now, before we dive into the theory, I want to quickly cover some stats on SPX. I want to talk about volume. As the data of this graphic, SPX saw a huge jump in daily trade activity, and that means more opportunities. It means better fills, faster trades, and the volume continues to explode, and that means liquidity or opportunity for you and I. Now, people will ask, why SPX instead of SPY? Well, here's the deal. SPY pays a dividend and settles in shares, and SPX doesn't pay a dividend, settles in cash, and it expires every single trading day. And we like this. We like this because there's no assignment risk. It's called a European style option. It's settled in cash, and we are going to use this edge to exploit. It makes it far safer for income traders like ourselves. Now, if there's a better, faster, or easier way to generate real income online, I haven't found it. I'm sure we've all looked at some point or another. Now, before we dive into the strategy, here's what we should know. You're not going to make $10,000 a second by next week. Yes, there is something for sale in the end, and no, you don't need to buy it to benefit from this trading. We're traders, and what I'm about to show you is one of our favorite ways to make money in the markets right now, and that is not going to be changing anytime soon. Now, there are really 3 secrets that change everything. One is why traditional trading is broken and how we aim to solve it. 2, why most traders struggle and how the market is rigged against them unless they know what I'm about to show you. And then number 3 is how to build an account that grows while staying safe. Really the smartest way to balance risk and reward for maximum growth. So I want to start here. What's the real difference between trading and investing, and then which one actually matches your goals? Well, we know that investing is slow, passive, and often uncertain. You hold and hope. With trading, you take control, but you also take on more risk if you don't have a system. So SPX income trading combines the best of both. The control and speed of trading with the safety and consistency of a well-managed investment process. So rules-based, low screen time, low stress, and perfect for those who want steady wealth without waiting years and years. Now, here's the truth. The market is designed to take your money unless you know how to play the game. And today, I'm going to show you exactly why most people lose, and then how we're going to flip the script and start trading like a professional. Now, stats don't lie. We know that over 80% of retail traders lose money and most blow up their accounts in 3 months or less. Now, it's not just anecdotal, it's documented reality. Most traders don't fail because they're ignorant or stupid. They're just following bad strategies and they don't have a plan. Now, does this sound familiar to anybody? Constantly, adding and removing lines, tools, indicators just to, see if this works. Maybe fumbling entries, exits, targets, taking trades that look good in hindsight, but keep ending in losses. Maybe you bought yet another course that's impossible to replicate, and you're thinking, well, maybe this time I'll get it right, but the system never quite delivers. Maybe you're zombie trading, scrolling through chart after chart, hoping the next one is the one. It's exhausting and it doesn't work. Maybe your results are mediocre. You've wiped out some accounts, YOLO'd a few trades. You're not alone. It doesn't have to stay this way. Maybe you're frustrated because it's not working for you, except for the occasional lucky win. Nothing feels repeatable. There's no consistency. The real reason most people lose money is because they're flat out winging it, making it up as they go along. And that's not a system. It's a gamble, right? And history proves it. Think of the dot-com bubble, the 08 crisis, the 2020 crash. Most traders panicked and lost, but many profited. Why? How? Because they followed the clues and they followed the rules. And so that all stops today. No more guessing, no more hoping, no more hype. Here's what we're going to do instead. We're going to pick one simple strategy and we're going to master it. Trade it the same way every day like clockwork, using a rules-based system that's been proven over time, back-tested, repeatable, objective. That's how we create consistent income without all of the emotional whiplash. Now, SPX income trading is your stress-free path. No more timing the tops and bottoms. You simply collect income while everybody else out there is arguing about direction. And the best part is that this works in bull markets, bear markets, sideways chop, does not matter. This helps you build gains with minimal effort. It's removing your emotional decision making. You're not panic selling or chasing green candles. You're following a plan that's already proven to work. And it compounds over time. Small, consistent wins stack up fast, and that's how you build a real trading account without all of the burnout. Now, I don't want you to just take my word for it. I'm going to show you some data so you can see it with your very own eyes. Now, this system is based on rules, and rules can be back tested. And so what you're looking at here is essentially 10 years of data over 2,000 trades, all from a single setup. This isn't cherry pick. Every single trade occurrence of the pattern over a decade, traded mechanically, no discretion. And that's what we call an SPX income system. So like a factory, same setup, same outcome, same process. It either works or it doesn't. We don't guess. And we trade this on the S&P 500. Ticker symbol is SPX, using 0 DTE options in a $5 wide credit spread. And we call the core setup the tag and turn, a swing trade structure designed to profit when price taps a zone, then reverses. Simple, repeatable, and powerful. And you don't need to be perfect. You just need to follow the rules, and the results speak for themselves. And you're going to see setups every single week, and we take the ones that meet the rules and we leave the rest. This is an example of the type of setup that we're going to be walking through that you're going to have on your charts and be able to execute. Rinse and repeat, mechanical execution. It's the standard. The pattern shows up. You follow the plan. You collect the income. Short, clean, consistent. Same setup, same results. 15 minutes of work. Some of the cleanest executions that you'll see. Okay, profit captured in phases, all by design. And this is what a high probability system looks like when it's doing its job. And our students are not just participating, they're crushing it. We've got we've got hundreds, if not thousands of success stories of students actually executing. These are real traders, real results, following the system, taking the trade and moving on with their lives. executing with clarity and confidence. And what did they say? Happy wife, happy life. Well, this is my wife, funded trader, using this strategy. So yes, it can be done. So part two is where we're going to go a little bit deeper and talk about why traditional trading is flawed and then the fix. So what I want to do is talk about what's broken with traditional trading and then how to fix it the proper way. Most traders are stuck in a flawed model, trying to predict direction, time the perfect entry, and micromanage exits, and it's exhausting. Now, the truth is this: traditional trading is 100% dependent on picking the right direction. You only get paid if you nail the move, which is rare and hard to replicate. Doesn't factor in volatility, market conditions, price behavior. And that's why most traders leave huge gains on the table, because they're flying blind. Now, here's the fix. We trade with the market, not against it, using modern tools, options, expirations, and repeatable setups, and we do it without getting emotions involved. Now, we don't need to be right about direction. We don't need the market to make a huge move, and if it does, we just get paid a little faster. So there's no overcomplicating. SPX income trading lets us get paid without perfect timing, and that's the edge, and it's a game changer once you understand that, okay? Now, I want you to think about this. If you knew the market was going to move and you could profit without guessing direction, wouldn't you take that trade every time? Yeah, it's very obvious, but you'd be surprised how many people don't and then miss this. What if you could profit without timing a move or picking the right direction, but if you did, you just got paid a little quicker? Well, that's exactly what the SPX income system was designed to do. Whether SPX goes up, down, sideways, you get paid, so as long as your setup and risk profile are set up correctly. So what we're going to talk about is this system, a simple, optimized process that works with the market movement instead of trying to fight it. So how do we actually profit? So we're going to walk through the mechanics here, and I'm going to show you why this works time and time again. So if we compare this to how most traders think profit works, well, in traditional trading, you only get paid if you nail the direction and the move is big enough. So if the market makes a huge move, great, you get a big win. But if it barely moves, you get nothing. Or worse, you lose. And here's the problem. That means you have to be right about direction and timing. And the market has to cooperate with a large enough move. And that's a lot of ifs. But with income trading, it's completely different. You get paid even if the market moves slowly or not at all. It's like getting paid to wait. Small moves, we still win. Sideways chop, we still win. Big move in our favor, we just win faster. And the only time we lose is when the market moves against us too far and we're still in the trade at expiration. And that's 100% okay, because we're going to have wins and we're going to have losses. It's all part of trading. But a perfect entry is not needed. Even then, the loss is predefined. So we know exactly what the worst case scenario is before we place the trade. No surprises, no disasters, no margin calls. And so let's walk through how we profit. This is where SPX income trading kind of flips the script on everything you thought you do. A trade doesn't need to go big to be profitable. In fact, it doesn't even need to move much at all. We're not relying on speed or direction, just probability and time decay. We're not using stop losses in the traditional sense. So a trade that goes against us early can turn around and finish in profit by the end of the day. Now, if we get a big move in our favor, beautiful. That trade hits 100% of max profit and we are out. If it's just a small move, no problem, still a 100% win. The market just needs to stay above or below our break-even level. Even a tiny move in our set, just one single red penny in our favor can deliver a full win. That's the edge of being at the money with a spread working for you. And if the trade moves slightly against us, we can still close for a partial win. Anywhere between 0 and 99% of max profit is still on the table. And if the trade doesn't work out, we already know what the loss will be before we place the trade. And so this is a risk-defined strategy, and that means we can't lose more than the cost of the spread. So with a $5 wide spread and a $2.50 credit, the most we can lose is $2.50. The worst case only happens if we're completely wrong and we let the trade go all the way to expiration fully in the money. But most of the time, the market gives us plenty of time to adjust, manage, or simply let the probabilities play out in our favor. Now, very important, we're not trading naked options here. We're not holding for weeks. We're taking quick, controlled, structured trades and stacking small wins. And the real power isn't just the wins, it's the confidence. You'll know exactly what to do, when to enter, when to exit, and most importantly, when to stay the heck out. That's why traders who follow this system, they don't panic. They're not glued to the screen. They place the trade, manage the position, and they move on with their day. You don't need to overthink this, guys. The rules are the rules. And when you follow them, the system delivers. So let's zoom out for a second here. Here's a 30,000-foot view of how the SPX income system works. First, we're going to identify what we call a pulse bar. Next, we're going to wait for a clean break of that bar, and then we're going to set up what we call a profit package. Finally, we manage the trade, or we let it expire for max profit. That's the entire model, and we do it in less than 15 minutes a day. Congratulations, pat yourself on the back. You have a profitable online business. So what do you need to run this strategy? Well, not much. Any charting platform works, but we personally use TradingView, and that's the platform we have pre-built indicators and workspace templates for. But you can technically use it on any brokerage or firm that has charting. For options execution, I prefer Tasty Trade, but interactive brokers, Thinkorswim also get the job done. Now, it's very important that you don't need 14 indicators or a NASA terminal. Step one is we're going to identify what's called a pulse bar the first 2 hours of the day. The strategy is built on clean charts and one visual cue, what we call the pulse bar. So less clutter and more clarity. And you're probably saying, well, what the heck is a pulse bar? So a pulse bar is a 30-minute candle that closes in the top or bottom 5% of its range. And that signals strength, bullish or bearish, in a way that's very easy to spot and act on. Here's what we look for. A bullish pulse bar closes in the top 5% of the range and higher than it opened. A bearish pulse bar closes in the bottom 5% and lower than it opened. So one glance, one condition, and that's your setup trigger. So we know that the high to low range of a candle is 100%. So all we're looking for is a close in the top 5%, which is a bullish pulse bar close, or a close in the bottom 5%, which is a bearish pulse bar close. So that's not very difficult. Now, if you're doing this manually, no worries. You can grab the Fibonacci tool on any platform, set it to show 0, 5, 95, and 100% levels. Then measure the high to low range of the 30-minute bar. If the close lands in the top or bottom 5%, then that's your pulse bar. Can we automate a pulse bar? The answer is yes, we can. Because pulse bars are a mechanical rule, we can have them coded into platforms like TradingView. Now, our team have already coded tools that detect pulse bars on TradingView. And because it's a rules-based system, automation is easy. But we don't just stop at pulse bars. The software also filters trades by average true range, time of day, directional bias, tag and turn swings. So we're only seeing the cleanest, highest probability setups and none of the other noise. Now, again, we built this in TradingView, so it's browser-based simplicity, desktop, laptop. We've got you covered. In fact, this is a sneak peek glance at what it looks like. You can see dots and triangles, labels, break zones, all calculated in real time. So there's no guesswork, just execution, okay? Now, because this is a mechanical-based program, we can run some back testing and get some data. Now, although we have a very smooth upward sloping equity curve, you still see that we have some bumps and lumps along the way. Now, when we've added some simple automation to that software, and I'll show you how to get access to this tool later, but just know that it's not required. It just makes everything 10 times easier, faster, and more consistent. But when we added some of those automation filters, we have a much smoother equity curve, right? And I want you to look at this, guys. This is only one of 7+ income strategies we have in our back pocket. And you're probably saying, well, if it's so damn good, then why don't you just trade it yourself? Well, the answer is very simple. I do trade it almost every single day when I'm at my desk, which is most days. We trade the system live with our own money, with prop capital in real time. And what you're learning isn't theory. It's not recycled fluff. These are the exact strategies we use in our own accounts. This is Tasty Trade, live real money account, not a demo. Tasty Trade doesn't offer fake data or paper trading. So what you see are real fills. Several open positions here, all placed using the same pulse bar strategy that I've been walking you through. And the edge applies across SPX, futures, even stocks, if you wish to adapt it to those types of markets. Now, originally, this was developed for a similar strategy for futures and stocks, but when 0DTE SPX options came along, it changed everything. Same rules, bigger edge, more frequent payouts. Now, look, I love trading. I eat, sleep, and breathe it, but I also love teaching, and helping others master this system is what drives me. I know what it's like to struggle with bad information and useless strategies. So now we help others avoid that pain and speed up their results. But the system works, and not just for me. Literally working for hundreds of traders across the globe. You see Chuck here starting with $800 in his account and turning that into $2,700. And it's not luck. It's the system executed consistently. Here we have Brian, 100%, Kevin, 80% ROC, Duncan, 80% as well. And this is all possible when you remove the guesswork and follow the setup, okay? Your trading becomes more structured, and sticking to the plan is more profitable than trading your opinion. And that's really the shift that changes everything. So let's get back on track for a moment. By now, you've seen the edge, you've seen the proof, and the pulse bar setup in action. Now, step one is simple. We wait for a pulse bar in the first 2 hours of the trading day. Now, you already know what that is. A 30-minute candle that closes in the top or bottom 5% of the range. Now, step two is where the money is made. We place what's called a profit package, and that's our at-the-money credit spread. And now that you know the setup, let me show you exactly what a profit package is and how to place one. All right, so profit package is this. It's a trade with two parts, like a game. Player one sells an in-the-money option. Player two buys an out-of-the-money option, same time, same direction. And specifically, we're selling one in the money, buying one out of the money, a simple credit spread structure. And here's an option chain. We're selecting two strikes, one slightly in the money, one slightly out of the money, and that's where we get our credit from. You'll notice that the strikes are $5 apart. That's our defined risk. And so ITM, it means the option is already profitable. It's in the money. OTM means it's not yet profitable. It's out of the money. And by combining both, we're able to build a position that gives us a net credit in cap risk. Now, there's no need to overthink this. Just use the strategy selector, choose vertical spread, and then we pick our strikes. It's done in seconds. So a bullish profit package, we sell the higher strike put by the lower strike put. You collect a premium for placing that spread. A bearish version is selling the lower strike, buying the higher strike. It's the same idea, just flip for a downside setup, but the logic is the same. So which way do we trade? Again, it's simple. If you see a green pulse bar, we're bullish. So we place a bull put credit spread, usually found on the right side of your chain. If we see a red pulse bar, we're bearish, meaning we place a bear call credit spread on the left side of your chain. And that's step 2 of the SPX income system. Place the profit package. And now that you've seen how simple this is, whether you do it manually or you automate it with a platform builder, okay? And then step 3 is the best part. Once you place the profit package, you walk away. We don't stare at charts. We don't micromanage. You let the trade do what it was designed to do. The edge is already baked in. The time decay is working in your favor, and you define your risk up front. You set the trade, walk away, no babysitting, no micromanaging. Now, you only lose if the trade finishes in the money at expiration. That means you've got the whole day for the market to turn around, pull back, or just go flat and still come out with a profit. And that's how trading should feel, guys. Stress-free, mechanical, confidence, follow the steps, manage the trade if needed, and let the system do its thing. No panic, no overthinking, just results. So to recap, step 3, we walk away and let the trade do its thing. We're not watching charts. You're not second guessing. The system is doing all of the heavy lifting. And then step 4 is rinse and repeat, because this is not about chasing perfection. It's about taking these same high quality trade setups day after day like a production line. So part 3 is this: how to build an account that grows while staying safe. Really the smartest way I know to balance risk and reward for maximum growth without taking unnecessary risk, without needing a huge account, and without guessing your way through trades. And as I keep saying, SPX income trading is one of the most powerful short-term investment strategies out there. Fast, flexible, semi-automated, and lets you build wealth without years of waiting or watching charts all day. And again, it's not just working for me, guys. Our students are crushing it, using the same strategy, the same tools, the same rules. The only difference is how consistently they show up and how quickly they take action. So I'm going to show you how this works with numbers, because again, this isn't just about theory. It's about repeatable outcomes. And this is where it gets fun. What I'm about to show you is not a promise. This is a math lesson. I want you to think about what is possible when you follow the rules consistently and trade just 10 to 15 minutes a day. So let's say that you started with $5,000 and you risk $5,000 per trade. Because we're trading with SPX using defined risk strategies, for every 3 winners, we assume 1 losing trade and 1 no trade day. That's a realistic rhythm, even if you're only trading the morning time frame. So week 1, you have a win, win, loss, win, no trade, 3 winners, 1 loser. Not bad. $500 and a 10% ROI. Week 2, similar setup. This time we gained $550. Week 3, another profitable result. And then week 4, you're still consistent. Over the full month, you're up about $2,300 or 46% on the account. So if we break it down, we started with $5 grand, risking 5%, and you made $2,300. But it doesn't end there, because once you have consistent profits, we start to compound. We all know the famous quote by Einstein here: compound interest. And this is where trading can get really fun. So instead of starting month 2 with $5 grand, now you're starting with $7,300, raising position size 5% of your balance. Your risk per trade now increases, but so does your profit potential. I'm not going to bore you walking you through every trade setup, but without doing anything different, our gains start to accelerate. Month 2, up 3,400. By month 6, you're up near 50,000. By month 12, over $480,000 and more than $150,000 in monthly income if you're compounding aggressively. So if you started with $5 grand, 75% win rate, you build $150,000 a month income in 12 months. But let's hold our horses. Let's be clear. This is a math lesson. Yes, you can do this. It can be possible, but is it likely? Not without consistency, patience, and time. But what matters is this: even a fraction of that would likely change your lifestyle. You say the math works, but does it actually work? Well, you've seen screenshots from our live accounts. No demo mode, no faking fills, real trades, placed in real time. Guys, this isn't winging it. Rules-based, back-tested, forward-tested, sideways tested, and live tested across thousands of trades over years of market cycles. And this is extremely flexible. You can adapt this to any market that you wish, but SPX is still the most elegant version of the system. And remember, this is one of 7 strategies we have in our back pockets. And I've shown you some examples here. These are live trades placed in real time. And now you have the ability to replicate these types of results if you show up and you follow the mechanical rules. No letting emotions get involved. More wins, more success stories using the same process that you've seen today. This is not cherry picked. These are everyday traders following a mechanical system, stacking results week by week, trade by trade. And now I want to help you get your own success. So here, I want to recap. You've learned how to spot pulse bars, how to place profit packages, how to manage trades and stack wins, and how to grow your account safely with just 15 minutes a day. But the question is, what are you going to do about it? It's decision time. You've got the strategy, you've got the rules, you've seen how to make it work, but what do you do next? Well, this isn't a watch and wait situation. It's about execution. If you keep watching webinars, YouTube videos, TikTok, nothing changes. But if you take action, you've got a real shot at building something powerful. Think about this. Where will you be in 12 months if you keep doing what you've been doing? Will you have the results you want? Will you have that consistent income machine working for you? Or are you going to be stuck guessing, over trading, and hoping? The way I look at it, you've got 3 choices. 1, do nothing, close this down, walk away, stay where you are. 2, try to piece it together yourself, rewatch, maybe you get it going. Or 3, let me help you. Get it working in days, start trading with clarity and confidence. Let me help you so you don't have to figure all this out on your own. I've shown you one piece of the puzzle. We've got multiple income strategies as part of this program. A complete rules-based trading system that can allow you to potentially generate daily and weekly income using these pulse bars and profit packages with mechanical entry and exit rules. It works, but it works even better with guidance and feedback. We pride ourselves on our student success rates, and if you're the right fit, we'd love to help you get there. Now, this program is not for everyone. You know, if it's not the right fit for you, then you don't need to join. Now, this is for you if you want structure, rules-based strategies. You don't want to watch charts all day. You'd like to trade part-time without being glued to the screen, and you're ready to follow a process and stop guessing. This is not for you if you are expecting overnight millions, you're addicted to meme stocks and moonshots, and you don't follow rules and prefer trading based on feelings and emotions. If you cannot commit to a simple process, then this isn't for you. So who is still with me? Who's with me? Because if you're still here, this is probably what you've been looking for. So let's talk about how you can get started today. It's all done through what we call the SPX income system, a self-paced course that walks you through everything designed to take you from zero to confident execution. Now, you're going to get access to a full 5-day SPX income bootcamp on demand, no fluff, actionable education. Those that want to dig deeper, we've got a complete strategy, archive, and training suite. We've also built 3 pre-built indicator and workspace templates for TradingView. No fumbling around, no complicated installs. It's literally copy and paste, and under 5 seconds, you'll now be able to spot and trade our 3 core setups with ease. Everything you need to execute. So there's no second guessing. And again, this is only 3 of 7+ income strategies inside of the program. Now, our motto is leave no trader behind. This is why we have a live Telegram room, runs 24 hours, 7 days a week, where our students ask questions, they get answered. We discuss setups, entries, wins, losses, share charts and trades. We help each other. And as already mentioned, you're getting access to multiple income strategies, all of our quick start guides, case studies, and more. But you're also going to get an all access pass to all of our future live boot camps that we hold live. But we're not done yet. For everyone who joins today, we are now including bonus tag in turn alerts, or TNT alerts, where you're going to get the chart and the setup, the exact strike and execution. In fact, you are grandfathered in for 1 year if you join today. Now, here's your offer and how you get started with us today. Our 5-day boot camp, all of our training, archive, and strategy guides, pre-built indicated workspace templates for trading view, Telegram room, multiple income strategies, all of our quick start guides, case studies, and more, plus now the alerts. Total value here over $6,000. We're not going to charge anything close to that today. We are on a mission to create as many successful SPX option traders as possible because we believe in our program. We believe in helping our students, and we want you to start trading with confidence and start getting real results. It's not going to cost you $6,000 to join us. Not even cost you $4,000 or even $2,000 to join us. If you're ready to get started, those that are serious, you can get started today or a one-time payment of $14.97. You go to spx.t2markets.com. This is a one-time payment, no renewals, no subscriptions, no additional fees. It's a lifetime access. And there's no reason that you cannot become one of these student success stories. The only wrong choice is doing nothing. And if this resonated with you today, then trust that. Get started by going to spx.t2markets.com. I don't think it's a coincidence that you're here today. You've made it this far because this has spoken to you, and now it's your move, and let's get started. You go to spx.t2markets.com, start implementing this immediately, and we can build this together, guys. The tools are here. The support is here. The results speak for themselves. You just need to take the next step. So let's start stacking wins together. You go to spx.t2markets.com. Get started immediately. You'll get access to the member portal and hub, and also access to all of the other bonuses, the indicator, the Telegram room, and everything else. Now, I think I've got a few minutes here. So what I want to do is cover some FAQs. We get asked what amount of capital is needed. Now, you saw one of the students start with like $700 or $800. So yes, you can start with $500, $1,000. We generally recommend $3,000 to $5,000. What about pattern day trade rules? Well, several things here. One, I think PDT is going away next month or sometime in June. You can open up a cash account. You can limit yourself to 3 trades in a 5-day rolling period, or you can access capital through one of our prop partners. Is this day or swing trading? Both. So what I've taught you today uses 0 DTEs, but we have multiple strategies for day and swing. Can this be applied to other markets? Yes. We love trading this on S&P futures options, ES and MES. We trade this on the RUT cash index. We have people trading it on the Mag 7 stocks, even oil and gold. Do I offer a guarantee? Well, do I offer a guarantee on your success and that you're going to make hundreds of thousands of dollars next month? No. But what we do guarantee is that we're not going to leave you behind. Okay, we take great pride in helping and supporting our students. We want to see you succeed. Our students are succeeding using this program. And if you have questions or you run into a roadblock, you have full access to us, guys. We want you to succeed, and that is what we stand by. All right. So here's your offer. spx.t2markets.com. I went very fast because I'm trying to be respectful of the time, get you guys back on track here and on schedule. I want to say thanks to Anthony and the Traders Quarter team for having me on. These are always great events. I know you guys are learning a lot this week, and I appreciate your time and your attention, and I look forward to seeing you guys inside of the program. So take care, everybody. Have a great week. Enjoy your weekend, and look forward to trading SPX options with you. Thanks, and take care.
Thank you, Silas. There was one question. I don't know if you answered it. It said, do I need a TradingView subscription?
Yeah, sorry, I can't see the questions for some reason, but
that's okay.
So the answer is yes and no. If you want to use our indicator template, then you would need a TradingView account. I believe that you can use the free plan. I think the free plan allows maybe up to 3 or 5 indicators. So we've got students that use the free plan. The basic plan is like $12 a month, so it's very reasonable, and they always doing specials and deals. But you will learn the exact strategy. You learn the rules. They're black and white, 100% mechanical. So you do not need TradeView. Since you're going to have the rules, you can go plot or draw or execute on any platform. We just have the indicators built for TradeView that makes it very visual and kind of shows you the the entries and the trades developing. So if you have any questions, reach out to me at support@t2markets.com and I can help you.
Thank you. Thanks again, Silas, for that very efficient and structured approach and for reminding us about the importance of having a rules-based system and showing us the importance of pivoting from bear to bull spreads or bull to bear. That is a game changer of knowing when and how to pivot and adapting quickly without bias. So thanks again. We appreciate having you here.
Thanks so much. Have a good day.
You're welcome. You too. Next up is Larry McMillan of McMillan Analysis Corp. Larry is one of the most respected names in options trading, known for his work with market indicators and volatility analysis. His presentation is McMillan's Market Outlook and what option indicators are saying now. He'll break down what his indicators are signaling right now and how traders can interpret those signals in today's market. So everyone, please welcome one of the best experts in volatility, if not the best, Lawrence McMillan. Larry, I have to unmute you. I apologize. And we are using a new system too, so might be a slight learning curve. Larry, I'm not sure, but you should be able to unmute yourself.
Okay, I see the unmute. I don't. Oh, I see. It's a share thing.
Yeah, I apologize. For some reason, they brought you on unmuted or something.
That's not it. What am I sharing? That's definitely not it. I saw a thing that came. Oh, here's share. That doesn't look like it either. That's the raw PowerPoint. Where is it? Well, I don't know. I guess I'll just start it over.
Oh, there you go.
Yeah, I mean, I had it set up and was running, but I have to flip this around. Hold on. Okay, I guess you see that okay? Just one.
Yeah,
screen?
everything looks good. Thank you.
Okay, so we're going to spend a little time here talking about the current state of the option indicators. They're pretty interesting right now. We're obviously we've had a lot of bullish indicators. We may be transitioning to some sell signals, but we'll see. We'll go over them all here. Just a little background. I started this company as a derivatives research firm quite some time ago, actually. And then we moved into money management in 2008 after we had some pretty good success with the recommendations around the financial crisis. And then we also have a branch that's into option education, such as webinars like this or mentoring as well. We will send you the PDFs of the presentation. PDFs, I mean, there's one is in color and one's in black and white in case you want to print it out. So let's get started. We look mostly at the chart of the S&P 500. That's the main indicator in determining where the market's going. We have a lot of subsidiary indicators, other things that we look at. But basically, if they're not in agreement with the chart of the S&P, then the S&P is dominant. So right now, the chart of the S&P is pretty positive. We'll also look at put call ratios both on the broad market and some individual equities and futures. Take a look at market breadth, where it might be developing a bit of a divergence there right now. And then we'll take a look at VIX and the surrounding futures and options on VIX and other VIX products. Always important in determining what the market is doing as far as respecting maybe having some fear, not having some fear, what have you. So I have just a couple of simple rules. One is oversold does not mean buy. So I don't think we have anything that's oversold right now. But the companion is overbought does not mean sell. We definitely have some overbought conditions. But until they actually roll over and become sell signals, we don't act on them, because the market can, in a bull market, can remain overbought for quite some time. And in a bear market, can remain oversold for a long time. So you don't want to just jump in at the first sign of overbought or oversold. You could get run over that way. So here's a 2-year chart of the S&P. And this little correction that we just had, which seemed pretty mild. I mean, there was a lot of noise, I guess, in terms of news about Iran and other things like that. But it was only a 10% correction. And when we rallied out of that, so we lost about 700 points. We went from roughly on the S&P 7,000 to 6,300. Then we regained that plus another 100 points. So we regained 800 points in like 3 weeks, and counting the weekends. It was just an unbelievable rally. We're digesting that rally now. We're obviously at new all-time highs. Anything above this blue line, that was the old all-time highs. And this is generally a pretty strong way to break out to new highs. We've seen confirmation from the index itself. If we go back a year ago, we also had a similar but more severe pattern. We had this sideways resistance, we couldn't really break through to new highs. Then we had the monster correction, very sharp 21% correction in just a few weeks. But then when we finally did break back out and get back to new highs right in here, it was very strong, and you can see it continued on for a while. And I can guarantee you the market was showing overbought conditions already there in June and July of last year, but the rally continued on for quite a ways. Prior to that, there's a 9% correction back in 2024. So this is the correction last year, the 21% was a little bit carried away. Probably just people panicked a little bit. This time they seem to have a more rational approach to things, and now they're being accused of being irrational because we're at new all-time highs and we still have problems with Iran and oil. But the market doesn't seem to really care that much about those things. So the S&P chart is bullish. It's breaking out to new all-time highs. If we take a little closer look, those circles there are gaps. There were 3 gaps on the way up here. We filled one of them last week, or actually week before last. But we have tentative support at a couple little areas in there, 71.25 and 70.50. But the big support is on that solid blue line there at 7,000. That was the old highs. If we fell back below there, it would be disappointing. It wouldn't necessarily generate a bear market or anything, but it would be disappointing after have done all this work to get up here. If you look back a year ago, you can see there's some pink circles on this back there too, and those were all gaps, and they've never been filled. Perhaps never will be. I'm not sure. But so just because there's a gap on the chart doesn't mean that it gets filled. Typically, the people that pay attention to the gap will buy when the market hits the bottom of the gap. So last week when we traded to the bottom of the gap, the highest gap on the chart there, that found some support. anyways, we're just to summarize, we're at a new high. That's positive. There's some support at 70.50, and then the major support at 7,000. And the bottom line, the most important thing here is the S&P chart is bullish. So you should be holding long positions here, maybe trading some short things around them. We'll see as we go through these, but the main position still at this point is a bullish stance. So we also another thing we do with the S&P chart is we draw Bollinger Bands around it, and we use what I call modified Bollinger Bands because we use as a definition of realized volatility. That's the standard deviation of daily percentage price changes, a little bit different than what John Bollinger used for the actual Bollinger Band calculation itself. So we watch for the market to move outside of the plus or minus 4 standard deviation band and then back inside, and that's a signal, but we need some further confirmation. So I'll show you some examples. This is the current chart right now. The red letters are closed out successful signals. The blue letters are stopped out unsuccessful signals. We had a series of sell signals that weren't paying off there, but eventually we did have a sell signal that did. And then, most recently we had an excellent buy signal right down here at the bottom. And now we're back above the 4 standard deviation band and the 3 standard deviation band. That's those 2 bands right there. If we close below the 3 standard deviation band, which today would take place on, I believe it's 71.27, a close below that would be a close below the 3 standard deviation band. That would give us what we call a classic sell signal. We don't trade those because they've had a lot of whipsaws. Instead, we wait for further downside price action, and that would give us a full-blown McMillan volatility band or MVB sell signal. We don't have that, and we frankly may not get one. You never know until it actually takes place. But right now, we're still waiting to see if it can even generate or when it will generate that classic sell signal. It eventually has to close below the 3 standard deviation band. If the market doesn't back off, the bands will rise to the point where it still will close up below it. So, but this is just a setup for a potential sell signal. It's an overbought condition, is not a confirmed sell signal. We have a subscription service that we offer where we can run the same analysis on any chart, any futures, stock, ETF, index, what have you. And it runs off of TradingView. I know we were just talking about TradingView a minute ago. And it puts these little arrows there. I circled the last 2. That it doesn't circle them like that, but it gives you the green arrow. That was that latest buy signal that we had in right there at the beginning of April. And then you can see we're running above this 3 standard deviation band. If we fall below the 3 standard deviation band, then it will make another mark on the chart. We can do this with others. This is Microsoft, which just today, this is a current chart I pulled it this morning, just gave a sell signal. So you can see that Microsoft had, it's had a decent series of signals. If we come down to the bottom here, you can see there was a buy signal right there. And then it went above the 4 standard deviation band and fell back through it. And so it's that generated the sell signal right there. So that is now given a new sell signal. Also, I was looking at NVIDIA. Now, NVIDIA hasn't given a sell signal yet, but it has given the classic signal. And if you look closely, you can see that line, that bar on the chart is in light blue. That indicates that the classic sell signal has been given, but it would take a further downside action to generate the full sell signal. And NVIDIA is not having a particularly good day today. As I think it was down 8 the last time I looked. So it's almost down 9 now. So there's a couple of current charts. You can see these. I circled them in pink there. There's been some decent signals both buy and sell in NVIDIA. So this might be worth one worth taking. So let's move on to put call ratios. We use the equity only put call ratio to predict the broad market, but we can also look at that's the put call ratio using all stock options that trade, millions of them these days. But we can also look at individual stock put call ratio, individual stocks and futures. So it was using put call ratios as an indicator was designed by Marty Zweig back in the 1950s. And in those days, he would get the data from the ads that ran in Barron's on Sunday from the put and call dealers. They would list how many puts and calls they traded during the week. When he first started out, he thought it would be a direct indicator. If he saw a lot of calls trading, that meant the market was ready to go up. But it turned out it was a contrary indicator. If there were a lot of calls trading, pretty soon the market went down, and vice versa. If there were a lot of puts trading, pretty soon the market went up. So he this is his theory. Too much put buying is bullish for the market. Too much call buying is bearish for the market. But of course, it's up to us to determine what too much is, and we have a pretty good way of doing that, I think. So if we look at an individual put call ratio stock chart, we publish about 16 or 1700 of these every day on an area of our website called the strategy zone. And there's some summaries on that too. It tells you where new buy signals have occurred, where new sell signals have occurred. But basically, we always show the stock chart and the put call ratio chart because you want to see this inverse symmetry. So this is theoretical, of course, but let's say we start out here and we've got the stock is dropping in price. It's dropping in price. The put call ratio is going higher because people are buying puts, and so that forces the put call ratio higher. Eventually, you get to a local maximum in the put call ratio, and that is a buy signal for the stock. So now the stock starts to go higher. Move over to the left side of the chart. Stock's still going higher. As that's happening, people are buying calls. That forces the put call ratio lower. Eventually, you get to a local minimum on the put call ratio, and that is a sell signal for the stock. So that's the theory. When you look at these charts, especially for individual stocks, we look for extremes. For the broad market, we just look for the local maxima and local minima. But the idea is that if you don't see this individual inverse symmetry, then something else is happening, perhaps a takeover or some sort of dividend arbitrage or something like that. So you should not only notice the symmetry, but be able to see that past signals have been fairly successful. So here's this is not a current chart, but on top is the S&P 500. And on the bottom is the equity only put call ratio. That's all stock options that trade. You can see the inverse symmetry there. That's what we're looking for. So that's why we use the equity only put call ratio to predict the broad market. So here's the current ratio right now. The most recent signal we had was a local maximum here, which came around the beginning of April. And find my pointer. There it is. Sorry. So that was right here. That was a buy signal. That buy signal is still in effect. As long as this ratio is dropping, that buy signal will still be in effect. At some point down here, it'll come around and make a local minimum. Then we'll have a sell signal, for example, like we had back in February. That sell signal was actually pretty good. The market didn't drop right away, kind of went sideways a little bit, and then when the war started with Iran, the market dropped, and that sell signal really paid off. So these have been pretty successful. Again, red letters mean successful signals. The blue ones, not so much. And the green one is open right now. So this uses individual volume of puts and calls. We can also calculate what's called a weighted ratio. Where we look at the dollars being spent on puts versus the dollars being spent on calls. It gives us a similar thing, local maximum, local minima. So here's a local maximum buy signal, pretty much at the same point, late March, early April. You can see how now this one has really dropped a lot. In fact, it's lower than it's been all this year. It's lower than all the way back to last November. The absolute actual height, or the bottom, where it bottoms out or where it tops out, is not all that important. But still, this is an overbought condition now. We've come so far that this is overbought, and we're still not on a sell signal. Again, this will eventually make a local minimum somewhere here and give a sell signal. So this is still bullish, perhaps getting late in the day because it's so overbought, but the overall picture there is still bullish. So that just pretty much summarize what we're just saying. We can look at an individual. I guess before I do that, just quick summary of what we trade. When we're trading either the Bollinger Band signals or these put call equity only put call ratio signals, those are on the broad market. So we trade SPY puts or calls, usually 1 or 2 strikes in the money, and I typically go in the money because I want the delta of my call or put that I'm owning to be be something above 50, so that if I'm right about the movement in the underlying, the S&P itself, then I will make money. I don't want to buy something that's too far out of the money. Now, sometimes the options are so expensive, though, that you need to spread them, and that has been the case in the S&P for some time now, that with the VIX being up in the 20s, now it's beginning to fall from there. But on TV, they spread everything. By spread, I mean if you're bullish, you don't just buy a call. You buy a call at this strike, and then they sell a call at this strike. You really shouldn't do that every time. You do that when options are expensive, but when you do that, you cut off your profit potential. Above there, right here, we can't make any more money. Well, that's really hurts your position, especially if you catch a big winner. In some of these, you don't know how fast they can move up or what have you. So, it makes sense, as I said, when options are expensive, but when they're not, you're instead of being on the red line, which you would be if you're just owning a call, you're on the black line, which cuts off your profit potential. Now, proponents of the spread say, well, you're risking less. That's not true. You're risking 100% of what your broker asks you to put up in both cases. Both of these, you have to put up your risk amount in full, and so you're risking 100%. Dollars, yes, can be slightly different dollars, but that's easily adjusted with your quantity. So instead of buying, 5 bull spreads, buy 4 calls or something, they have the same dollar risk. So as I said, VIX has been high, and we've been spreading SPY. So how are we spreading SPY? Well, right now, even a fairly short-term option like a May 8th contract is still pretty wide, high volatility, and we need to spread it. So we spread there. The 2 things you can do to mitigate the negative effects of the spread, one is to widen the distance between the 2 strikes, and the other is to roll if the short strike is hit. I'll talk about that in a minute. But widening the difference. So if I'm buying calls right now, I'll buy an at the money call, and then I'll sell a call 20 or 25 points striking price higher. Similarly, if I'm bearish and I'm buying a put right now, I'll buy an at the money put, and I'll sell a put that's 40 or 50 points striking price lower. So that's what I mean by widening the difference in the strikes. Now, what do I mean by rolling if the short strike is hit? Well, so this morning S&P was around 710. So let's say we're going to do the regular May 3rd week expiration, May 15th. You're going to do a spread there. You'll buy the 710 call and sell the 730 call. So 20 points wide. That's what I just said is a pretty decent width. It will mitigate some of the negative aspects of the spread if the stock or SPY really gets going to the upside. But if it does get to 730, when it gets up to 730, you pretty much used up your profit potential. This was the graph, and by the time you get to 730, the higher strike, your profit potential is about right there. Yes, there's a little bit left, but not much. And if SPY keeps going higher, you're not really going to make much more. So you sell that spread and buy a new one. So you sell that one you owned, the 710, 730. We're going to sell that, and we're going to buy this new one down here, 730, 750. So we take a profit on the first one, and now we're along the next one, and we can keep doing this along the way. It's not as efficient as, let's say, having just owned the long call all along. But the reason we spread in the first place was the options were expensive. So rolling up basically does this. The original spread is on that black line, and then at 730 you would roll up and you're on the red line. So you can see your profit potential was cut off down here, right in here. Now you've raised it, so the next time it gets cut off, it'd be up here, and you keep rolling. If it hits 750, you do it again. So you keep your profit potential going to the upside. Meanwhile, you're putting money in your pocket because you're selling the spread that you owned before and taking a profit out of that. Anyway, one thing about the way calls are priced right now, with interest rates being where they are and VIX being where it is, this May 710, 730 spread right now in real life is going to cost you about $9.50. And the max here, it could widen to 20. Well, I mean, that's okay, 2 to 1, roughly a little more than 2 to 1. But for option trading, that's not that great. So if it really takes off the upside, that's why you have to be able to roll. Puts, on the other hand, give you actually a little better shot right now, but maybe that's kind of a false, false statistic because maybe you shouldn't be owning put spreads, what have you. Anyway, for a put spread, we would buy the May 710 at the money put, and let's say we're selling in the 670 put, 40 points out of the money. That spread only costs $6, and I could max out at 40. So that's a real leverage there, but of course the market would have to go down for you to realize that leverage. And same with rolling. If it trades down to 670, then you would take your profit on that spread and roll the whole thing down to a new spread with lower strikes. Anyway, we can look at some individual put call ratio charts. When I look at these, I'm only interested in the real extremes. So you can see there's some cases here where we have local maximum, local minimum. We're kind of in the middle of the chart. We're not trading those. We're looking for the extremes. This is the gold ETF GLD. You can see we had a local maximum buy signal there, followed shortly by another local maximum buy signal there, and now another one we've just gotten last week. So we have acted on that. There's been one real extreme sell signal down here, right down in here. That was a very brief sell-off in there. I don't think you probably could have made much money on that. This one over here isn't really at the low extreme on the chart, but if you had taken it, you probably could have made a little money on that. But in any case, this has given a buy signal, and we're long the GLD right now. I think I actually bought a spread. Now this is a conditional one. This is Allegiant, and you can see from the red buys and sells that it's had some good signals from the extremes. Now we just got another buy signal from the extreme. However, it's been having trouble getting through this area right here. And so what I'm doing is saying, okay, we have a buy signal, but I'm not going to really take it unless I can break through that area, which happens to be 150. So if I can break through 150, then I'm going to buy the calls. Otherwise, forget it. I'm not. So we're trying to combine a little bit of simple technical analysis using resistance with the buy signal from the put call ratio. You're really not giving up anything, very little anyways, by waiting for that breakout. And sometimes it doesn't happen. Now, we can trade with futures also. So on top, there's a continuous chart of, it says copper, should say wheat, sorry. Those are wheat futures. And in the chart itself, the W here indicates wheat. So that up there, that should be wheat. In any case, the blue put call ratio is drawn using the wheat options that trade on the Chicago Board of Trade. However, you don't have to trade wheat futures or those wheat options because there is an ETF, WEAT, that also has listed options, and you can just trade that instead. So you can use the futures options to generate a signal, and when you get the signal, you would trade the wheat options. So they gave a great buy signal last December, really hasn't given a new buy signal, new sell signal since then. However, here's one, Cocoa. Now, this one gave a buy signal. We used that same logic that we're going to wait for a breakout. That breakout has not come. It's been like 2 months, and in the 2 months, the put-call ratio has fallen quite a bit. So probably I wouldn't even act on this anymore. But the point here is that there is no corresponding ETF on the stock side of the ledger that you could trade Cocoa. If you wanted to trade that signal, if you'd gotten the breakout and you wanted to trade Cocoa options, you would have had to trade them on the ICE exchange as a futures option. All right, the next category is market breadth. And two things we can do with breadth. Breadth is just advances minus declines every day. Two things we can do. One, we keep a running total. And number two, we can keep an oscillator. So our oscillator, we do both. And our oscillator is determined, today's value is 90% of yesterday's oscillator value plus 10% of the difference between today's advances and declines. And we can do this with varying data sets. The obvious one is the New York Stock Exchange data, and that's you know, a good data set. Obviously, everybody has that. Very easy to obtain that information. However, the New York Stock Exchange has some things that are not stocks, and it can occasionally give you some distortion. So we would like to also see a stocks only data set. And for us, it turned out to be very simple, all optionable stocks. There's over 6,000 of them now. And there's, large caps, small caps, New York, NASDAQ. It's all mixed together, and it gives us a pretty robust data set. So we keep an oscillator and a running breadth total with both of those categories of data. Here's the oscillator using the stocks only data. So this goes back about 8 years, I guess, 2018. The green below the green line there, that's when the market is oversold. So we got oversold on that sell-off, that 10% correction, eventually bounced back. And remember, oversold doesn't mean buy. But when we stopped being oversold right there, that was the buy signal. It was on March 31st. So it did pretty well. In fact, we generated a pretty massive overbought condition coming out of that. So we're oversold. Now breadth expanded. We went overbought. That's a good thing. Market went higher. But now, the last few days, breadth has been weakening. And so we're right on the brink of a sell signal as we speak. Today, breadth is positive. The market's up. And so breadth is positive. And I can't really do the stocks only calculation on the fly. We have to really see it at the end of the day. So I don't really have a calc, or I don't have a handle on it right now. But New York Stock Exchange breadth is pretty positive today. Not crazy positive, but pretty positive. So this may or may not happen. We'll just have to see at the end of the day. And if it does generate a sell signal, then that would be a rare confirmed sell signal in this market, which have been so strong recently. Basically, just says the same thing. We were looking at this last time when it rose way up and was backing up, that red spike on the right hand side of the chart right here. You can see that's in the realm of the all-time high spikes, at least for the last 8 years. So that was a very overbought condition. And at the time, at the height of that, there was still, the market was going higher. So again, overbought does not mean sell. Now, there's another thing we can do with breadth, and that's keep these running totals. So that was the oscillator. The other thing is cumulative breadth. So you can either keep cumulative on the number of issues, just advance minus declines every day, and keep that running total, or you can take the volume on advancing issues minus the volume on declining issues and keep that running total as well. So we call that cumulative volume breadth. And it turns out that up through April 20th, these things, all four of them, were making on both by four. I mean, those two indicators on two data sets, New York Stock Exchange data and stocks only data, they were making new all-time highs, just like S&P was. But since April 20th, these have not made a new high, and the S&P, of course, has a very close to one today. So we're beginning to build a little bit of a negative divergence, and it's too early to say that it's meaningful yet. Just 1 week, 10 days, whatever. So, but if it persists, then that could be a pretty negative thing. At the beginning of the 2022 bear market, we had a very strong negative divergence that lasted really for a couple of months before the market really broke down. So this is the thing we're definitely keeping an eye on. It's not a sell signal yet. Right now, it's just sort of a minor annoyance that we're watching. We also track new highs and new lows. We use the New York Stock Exchange data for this, for our actual signals. That's over here in the left three columns. We got a buy signal. On the very right-hand side, you can see the buy and sell signals we've had over the last year, maybe 15 months. They're not that many. So it's sort of an intermediate term indicator. We most recently got a buy signal on April 9th. That's marked over there with the green boxes on the left side of this chart. And that's still in effect. So if new lows start to exceed new highs for 2 days in a row, then that would stop out this signal. But right now, that's a buy signal that's still in place. So let's talk about VIX for the rest of the time. Here we have a few minutes. VIX is really, very important to the market, and I think most sophisticated traders watch VIX and pay attention to the VIX in the various products. It's not well understood by non-option people, though. I don't know why. It's been around for a long time. But in any case, the trend of VIX is important. VIX should be trending opposite to the market. So if you can determine a trend in VIX, then the stock market should be trending the other way. So it can act as a signal that way. Also, if VIX spikes up and then right back down again, that's typically like people got real scared for a minute and then say, oh, wait a minute, not so scary. That's a buy signal for the stock market as well. So here's the current chart of VIX with those spike peaks marked on there. Now that those are we have a system that we actually built for trading those, and so the red letters are successful, the blue letters are not, and the kind of orange ones over there to the right, those are subsidiary. The first signal lasts for 30 days. If there are other signals that occur within that 30 days, we don't really trade those. We just use the first one. Anyways, the pink letter there is a sell signal, which means that at that point in time, it looks, this is about a week ago, it looked like VIX was beginning to trend higher. That hasn't really panned out, and now VIX is just kind of meandering down around the 17, 18 area, and it's sort of hanging out right here by its 200-day moving average. That's what I just marked there with those arrows. So we need VIX to move away from its 200-day moving average in order to determine something of a trend. So the last signal technically was this sell. There was a much better one back here in February, but that sell is somewhat in doubt right now. So I wouldn't jump in and say that's a new sell signal you want to act on. Which to see if VIX gets above 20, then yeah, I'd say VIX would be trending higher. Then it'd be a sell signal for stocks. If VIX clearly falls below 17, that would be a buy signal for stocks. But right now, it's just kind of hanging around there in no man's land. So that summarizes that sort of thing. We don't have a spike peak buy signal in effect right now. VIX has not spiked up and back down recently. It did about a month ago. Anyway, let's talk. You can't trade VIX, but you can trade VIX futures and VIX options, and the VIX options are actually options on the futures. So a very important thing to look at when we're looking at VIX futures is what does the term structure look like? In other words, if the near-term futures are the cheapest, and then the slope upwards as we go out in time, that's an upward sloping term structure. That's bullish for stocks. That's what happens most of the time. But occasionally this happens, and this happened about a month ago. It happened back in April 2025 very badly. Happened in the financial crisis. It happened in the pandemic in 2020. When that happens, there's strategies you can make a lot of money on, but it's very bearish for the market. So here we are. This is where we were last night, and VIX closed last night at 1881, and the front month May futures closed at 2025. So if we subtract off 1881, we get $1.44. So the futures are trading at $1.44 premium to VIX, and you can see here that the futures prices as we go out in time, each one is slightly higher than its predecessor. So the term structure is sloping upwards, and they're all trading at a nice fat premium to VIX. That's bullish. Upward sloping term structure and futures trading at a premium, that's bullish. Now, things could change, but right now, that's a bullish picture for stocks. And you can get the futures prices on the CBOE futures website, like a delayed 20-minute delay, I think. Or you can also look at the CBOE's volatility indices that they publish continuously every day. There's a one-day VIX, which is mostly useful for someone's got their mic open. There's a one-day VIX that is mostly useful for zero-day expiration option trading. But for the rest of the time, you might want to look at the 9-day, the 30-day, which is what VIX is, 3 months, 6 months, and 1 year. And you can see that these are all sloping upwards as well. The reason this was so inflated was because this is last night's close. Today, we had a lot of economic indicators on the open, including GDP. And so those one-day options were a little bit inflated because of that. But the rest of it is sloping upwards. Again, upward sloping term structure is bullish for stocks. So these are all bullish things. The thing you want to watch right now is the relationship between the May and June futures, the VIX futures. As long as May is below June, that's no problem, which it is right now. The market can go higher. It's not a warning sign. However, if they invert, if May starts to trade higher than June, then you could have a problem. The last time we had that inversion was in early March, and that's when that 10% correction took place. So it's definitely worth watching for. So how's this all add up? Well, we don't really have too much in the way of bearish indicators. We have the breadth oscillators. The one is on a sell signal, and the other one is moving towards there. I didn't put it all the way over to the right because we don't have that second sell signal yet. There's that sort of old sell signal in the trend of VIX. So that's really kind of just a partial slant to the right. On the other hand, we have the chart of SPX is bullish, new highs versus new lows is bullish, the equity only put call ratios are bullish, and what we just looked at there, the construct of volatility derivatives, that's all bullish as well. So we have really 4 solid bullish things led primarily by the chart of S&P. These things in the middle are not giving us a signal right now, as we saw they might, but not yet. So we don't have a VIX spike peak buy signal. We don't have a realized volatility signal. I didn't really talk about that, but we don't have a signal there. And then back in the beginning, when we talked about the Bollinger Bands, we don't have a modified Bollinger Band signal either. So this is generally bullish right now because the presence of the 4 strong bullish indicators and basically no sell signals. But if we do get sell signals and we get confirmed sell signals, we will certainly act on those. One thing that we do in all of our recommendations is we will roll deeply in the money options up to, like if calls will roll them up to a higher strike or puts down to a lower strike. So for S&P, that's usually 8 to 10 points in the money. These days, more like 10 points because volatility is high. And this just keeps you, it's a good psychological thing. You're putting money in your pocket all the time. You don't really have to worry about, following things instantaneous basis, because every time you roll up 10 points, you take some money out of that position and adjust your strike higher. The offer that we're making to anyone that's listening here is that we'll offer 1 month of our 3 top newsletters for a total price of $99. Typically, that would be $600 some dollars. You can get that offer by going to optionstrategist.com/traders corner. The 3 newsletters are the daily volume alerts, which comes out every morning and encompasses all these indicators we're talking about, with usually a pretty sizable market comment. Then the daily strategist comes out twice a day and covers really a wide array of option strategies. And then the option strategist comes out once a week. That's our oldest publication. There are sometimes educational articles in there, plus a more in-depth approach to certain specific option strategies, such as those based around earnings and things like that. You don't have to take them all at once. You can take them back to back to back, consecutively. So because there's a lot of information there, you really don't want to get overwhelmed. As I said, the option strategist, we have had a lot of success with earning straddles, regular straddles as well, based on statistics, and a strategy we call hard to borrow. The daily strategy, the daily volume alerts, and these all follow these indicators I've talked about here, but some follow other things as well. And there are track records on our website. So that's just what our homepage of our website looks like. I invite you to come there and wander around. You might also subscribe to our YouTube channel. We have a couple of other newsletters. One's very popular, the Daily Put Writers, a very conservative approach to writing out of the money puts on individual stocks. So one last thing I want to throw in here, because the market's so high and VIX is now starting to come down to a cheaper price, you might think about buying some VIX calls just to tuck them away in case something bad happens in Iran or whatever, and the market falls and a VIX explodes. Typically, you would buy UVIX calls, and UVIX loses money almost every day because of the futures premium that we talked about. They're losing that premium. However, when things really get crazy, VIX takes off. So it had a 200% spike back in August of 24, 180% spike last year in April, and now this last time, this 10% correction was so uniform. It didn't have a crash associated with it. We had a very limited reaction from UVIX. But right now, currently in the blue area here, these are current prices. UVIX is about $5.40. You can buy a May 10th or a June 5th call with a striking price of 10 for a pretty small amount. Don't buy some long-term thing, because these guys own the futures, and the long-term futures will not respond if VIX explodes. So you want to stay fairly short-term, and it could be just cheap insurance, which might pay off if you need it. Meanwhile, that's how you can contact me if you're interested in our money management. That's the website here at the bottom. I will say that our managed account is a $100,000 minimum account size. So, Anthony, I'm going to flip it back to you.
Hey, thank you, Larry. Really enjoyed your presentation as always. On point and yeah, just the right time.
All right, great. Hope to see you soon.
Yes, thank you. Incredible insight as always. We've put the promotional links in the chat, so make sure you check those out. How to contact McMillan is also there, and check out his YouTube as well. So thanks again, Larry, for being here.
Okay, glad to.
Next up is Dan Gibby of Master Trader. Dan brings over 30 years of trading experience and specializes in helping traders develop a structured professional approach. His presentation is Learn to Trade the Open Like a Pro. He'll show how traders can take advantage of the first hour of the trading day, where some of the best opportunities occur. So everyone, please welcome Dan Gibby. Dan, I apologize. Let me make you presenter. We still have Larry's presenter here. Dan was having some audio issues earlier, so hopefully that's figured out. If not, Dan, you're not the only person. We've had a lot of people who've had issues, so. So we're just waiting on Dan. He was having some technical issues earlier, so he might still be having technical issues. So thanks for your patience.
Anthony.
Hey.
Yeah, hey. Yeah, okay, sound check here. I'm trying to share the screen and I'm clicking the window tab and it's not showing my PowerPoint that is open. That's never happened before.
Is it showing anything?
Yes, it's showing my trading screens.
Yeah, maybe. Do you have more than one screen open?
Well, I have a 6-monitor layout.
Yeah.
Go.
So where you have your trading, maybe maybe minimize that, and then if you could drag over your presentation to that screen. Yeah, this looks familiar. This is an endless loop. I've seen this before. Yeah.
I don't. This is. I don't know why it's not recognizing my PowerPoint. All right, let me stop sharing. Try it again. When I hit share screen, 3 choices are coming up: Chrome tab, window, entire screen. And I hit window because that's what I'm trying to show, a particular file.
Yeah, choose one of the other ones and see what happens. But put whatever that's showing, whatever screen that is showing, make sure that's, I guess, your main screen that you'll be sharing. If that makes any sense.
All right, well, that's showing our
There you go. You got a spreadsheet here.
Right, but can you now see my PowerPoint that I just put on top of it?
Yeah, that's what I was hoping you could do. Just kind of move your PowerPoint over top of that.
Well, that's what I did. Is it working or not?
No.
All right, well then I'm going to have to hit the third choice, which is window. Share screen. I'm going to hit entire screen. Okay.
Okay. We got your trading, it looks like, up. There you go.
But I picked just one screen and it's showing all 6.
Can you, okay, so I see your PowerPoint up. Can you maximize your PowerPoint?
Yes.
Yeah,
Yes.
and then, yeah, that should.
We're good now?
Yeah, if you're able to switch through your PowerPoint that way, you're good. And you should be able to do that, yeah.
All right, awesome. All right, let's continue. Yeah, sorry about the delay. This is a new application. But we have a fantastic presentation here today. Now, anything you do, playing basketball, be a surgeon, trading, you have to have a systematic objective approach. This is our one-page summary of our approach. It applies to anything that moves on any time frame. And then you need the seasoning and the experience to have a trading plan to follow your methodology. So today I'm going to be focused on the methodology that we use every single day. When we turn on the computer, we do a little pre-market prep. And what do I do every single day to trade the first hour? But this is our approach. It's not using subjective tools, Fibonacci. It's not using Gann square. It's not using anything except this. Objective price action. Price is king. We need, and the reason for that is because candlesticks reflect the sum total of all market participants on that time frame that you're trading. So that gives us the advantage to determine who is in control, and we trade patterns that have a repetition of success. Bar by bar, it's going to assist us not only in the proper setup, but in trade management. So we have a picture. That's the absolute starting point. That's a buy setup. That's a bullish 1, 2, 3. That's a 180. Then the other concepts make up our total approach. One concept is not a trading strategy. It's all of them together. So where is that picture in the overall trend? Support and resistance. Is it showing relative strength or weakness? Volume and moving average. We have them on the chart. You'll see how simple our charts are. Just color-coded candlesticks, couple moving averages, and volume. No, not a single subjective oscillator on there. And we say secondary because we don't need them, but they just speed up the process. What are the broader markets doing? And market internals. Market internals from a swing perspective, if you're swing trading, and market internals, whether you're just day trading. So I'm going to cover both scenarios today, meaning the scenario if you're just a day trader and you're like, hey, I want to be a gap trader, I want to be a 1 hour trader, and then I want to head off to the golf course. Totally fine. Also, I'm going to cover, I'm a swing trader, but I'm going to use the morning session to assess things and perfect the entry with relative strength, multiple time frames, etc. And then you can, I mean, this really should be on top. Position and money management and trader psychology. If you don't have these two, psychology is having the patience and discipline to follow your trading plan. That's what that is. And all of this, you know, we have different advisory letters, which we tell people what to do with education, of course. We show you the chart, we explain why we're doing it, we show the trade management from opening to closing. But if you wanted to learn yourself, then you absolutely need our seminars. So that's the starting objective information. These are 9 pictures of bullish setups on any time frame. So this is what I started with on the prior slide. No setup, no action. We have more bullish setups than this, but this is just a beautiful slide showing 9 of them. Once we have a bullish setup, then we overlay those other concepts on that prior slide. And, you know, some of you might be thinking, wow, those were a lot of concepts, Dan, on that other slide. And I'd rather have a red light, green light system than some oscillator salesman selling me a $5,000 red light, green light. Well, good luck with that. we get a lot of yeah, we've been at this over 30 years. My partner Greg Capper and I, he's one of the pioneers in technical analysis. I've been working with him 25 years, and good luck with that. There's a 90% chance when you find us to read objective price action without the incorrect, misleading noise. That's when you learn a successful system. All of our charts, you'll see that I will be starting with one of those. Opening session, and you'll see in the heading there, I call it factory work. And that's Greg's term. And what do we mean when we say that? Well, I'll give you an analogy of a professional poker player. I say professional because there are a lot of similarities in terms of objective interpretation of the hand dealt to you, of proper risk management, of folding, of not getting emotional. So the factory work that I'm referring to in the stock market is I wake up every day, I turn on the computer, I turn on the TV, I look at futures. And this is what we're going to be focused on today in the next remaining 30 minutes. If you don't know what to do, so let's say you just take a seminar of ours and you're all excited, you learn, you're like, oh man, I feel so empowered. And now Monday morning is here and you turn on your computer and you freeze. And you're like, I don't know what to do. I have the objective information, but I don't have the factory work to walk through the process. When we had brick and mortar offices around the country, Greg and me, we had 1 and 2 week boot camps, which is it's like bridge the gap. So you go to medical school, and are you ready to be a surgeon or doctor, or whatever you specialize in? Absolutely not. You go to the internship and the practice, and that's where you learn to apply what you learned in the course. That's what we did on that. That's what I'm going to be showing you now in the remaining time. And that's what our green live trading room does every single day. We go through what I'm sharing with you right now. How to interpret, how do I develop a bias? How do I develop a focus list? How do I understand to trade gaps? What patterns am I trading at the open? How do I manage them? What time frames do I use? It's a lot. I get it. But we teach it in the courses, and then this is a nonstop, ongoing vehicle for you to walk the talk in real time. Let's go. Preparation, I say it begins the day prior. You don't have to. You can show up at 9 a.m. and start your pre-market prep. Nothing wrong with that at all. But since we're in the green trading room, around 3 o'clock, I'm already developing or 3:30, I'm developing a bias for the next day. I'm looking at earnings trades. I'm seeing if there's any earnings options trades I want to do. I'm managing open positions. I'm developing a watch list that if they follow through the next day, I'm ready to pull the trigger and enter them, either as a day or swing trade. I'm monitoring the news and earnings after the market. And this is not part of trading the open, but part of your seasoning is reviewing your trades for the day. Completing a trading diary. What did you do right? What did you do wrong? What routine are you going to do? So how do you answer that question? You first start with your trading plan. What type of trader do you want to be? And I already discussed it earlier. Dan, I want to, my work starts at 10:30 where I live, and I just want to enter swing trades only in the morning, shut the computer down, put my stops in, and then I'll look at them when I get home. Fine. Another trader could say, I want to trade gaps. I want to specialize in gap trading. Fine. Another trader, I don't need to be narrowed only to gaps, but I want to trade high probability setups in the first hour, and then I like to play golf with my buddies. Fine. That's the routine that we will teach you what to do. and I'm going to do as much as I can in the allotted time here. So first hour here, I call it, power hour. Really the first and last hours of the day can be considered power hour. So there's a lot of action there. And there are different setups, there's different market structure. But some people may say, Dan, I want to be an afternoon power hour trader from 3 to 4 p.m. Eastern time. And I'll say, totally fine. And come to our green room and I'll whet your appetite of how to do that. But we're going to focus on the first hour today. What am I going to do when I turn the computer on? So here's a step-by-step process. I want to see where the futures are opening relative to where they closed on multiple time frames. Remember, I had a bias the night before. So I'm really just updating my market bias. I'm reviewing the index ETFs. As you may have seen when I was struggling to log on, I have 6 monitors here, 24 inches each, or 28 rather. And one of them, in the bottom right, I have all my index ETFs on a 5-minute, 15, 65-minute chart. I call them the 4 horsemen. I have the Qs, spiders, diamonds, IWM. I have the dollar. I have some market internals in here, bonds, and I just glance at this and I immediately can tell you by looking at these 3 time frames what my bias is, both for day and swing trading. So I'm updating it. I'm reviewing and managing open positions. If you're only trading the first hour and you're flat every night, this obviously doesn't matter to you, but it does if you're just updating your swing positions. Consider, and then so our goal in the first hour is to cherry pick the best setups to trade. Whether it's, and you've got to figure out what time frame you want the patterns to originate on. The 5-minute, the 15-minute, and then we teach you that the pattern comes on the time frame that your trading plan is focused on, which is consistent with your personality. Then we teach you how you go up 1 time frame to make sure you're not fighting the bias of that. And you can go down 1 time frame to perfect the entry. That's my partner Greg posting trades to our subscribers in Telegram in real time. Those are, sorry about that. Let me close that quick Telegram. So we're looking for tier 1 trades to trade in the first hour, to manage, to exit if you're the 1-hour trader headed off to the golf course. Now remember, I already have a list of interested setups from the day before or the morning session based on gaps, news, scanning, and then the opening session. I'm monitoring them with alarms, and I'm putting them in a 5-minute chart. We just call them thumbnails. And so with my 6 screens, I have a lot of real estate. So I have a lot of room to put my tier 1 trades in. And as long as they are behaving as my bias suggested, then I'm ready to hit the buy or short button, calculate position size, manage in between per your trading plan on how you decide to manage. We use Telechart 2000 for scanning, and if this is, we don't own the company, but we've been using it 25 years. It's the most amazing scanning, and we give Greg scans to all of our subscribers for free. So if you're a customer of ours, free. If Greg charged $5,000 for his scans like some other people do, and no, we don't. You'll never hear us use the word proprietary. Oh, I'm not telling you what we're doing. Wrong. We teach you everything. There's no secrets. It's just following what we teach and then getting the seasoning. So these are all great scans, wide range bars, 180 reversals, bottoming tails, gap up on volume, gap up over a red bar. These are all great scans to be focused on in the morning if you're looking for more trading ideas. I usually have plenty that I personally am not looking for new trades until at least like 10 a.m. It's like I am very busy at the market open. I'm managing opens. I'm setting alerts. I am giving the actual Telegram alerts on things that are triggering. And this is another one of my screens. Actually, I have two screens that shows I have 28 sectors that I monitor. And then you could flick the time frame just by hitting a button. Hey, these are daily, and I just look at these and I can, I call them my playground. Where do I want to look for opportunity in all of these subsectors of the broader market? And then, you could have the top-down analysis, which is you can either scan on TC2000, or you could say, hey, I like the broker-dealer index today. It's breaking out. And then you can do a top-down analysis where in TC2000, at a click of a button, it'll spit out all the components of that, and then you just manually scan through them and pick up the best setup on the time frame that you're trading. This is just a concept here of relative strength. These are some old charts, as you can see by the price. But this is pre-market. Look, 6/6 to 9/30. Pre-market, both AMD, a semiconductor, and the Qs at a bullish gap up. And as we're approaching the 9/30 New York Open, this is a bullish consolidation in the upper 1/3 of this morning move. And this takes off into the open, whereas the Qs are breaking down. So that's showing relative strength. So this could be a day trade, and or I can't tell what the daily looks like, but it could be an entry for a swing trade. But this is showing relative strength, and I would want to see other semiconductors also, because I'm assuming the whole sector was in a good mood that day, which probably helped gap up the Qs. Like today, the semiconductors are at all-time highs, and actually so are the Qs right now. And spiders, as we sit here talking. I'm looking at my bottom right screen. So Greg, my partner, has AGS, stands for Advanced Gap Strategies course. So this, whether you are a 1-hour day trader or a swing trader, we love trading gaps because every single day we find amazing candidates for day and swing trading. Now, in his course, in our teaching is we start slow. We call them thought building lessons. And then even though like on the first slide and then even this showing seven characteristics to analyze a gap, once you get the seasoning, it is instantaneous, the decision making that you make. So of course, when you're coming out of the course, you're going to act slow. Like I'm a private pilot, and I only have a couple hundred hours. Many of my buddies, professionals, have 40,000 hours. Who has more experience? So when I pull, even on my little laptop, that's why I love trading. I take my little laptop anywhere in the world, and I can fire it up, give me the internet connection, and I can find opportunity in any liquid open market at any time of the day. That's an amazing skill and confidence that I have. So even though there's 7 steps here, as soon as I populate the charts on multiple time frames on my laptop or big computer, I can tell you in 1/8 of a second if that's a good setup, whether it's a simple swing, if it's a gap trade. But here's what Greg will teach you if you want to specialize in gap trading. Is it gapping up, let's just focus on the longs, above recent resistance? Well, here's the daily. The answer to that is absolutely. Is it gapping above some type of shock pattern, a wide range bar, topping tail? Yeah, gapping over topping tail. Is it gapping above a base or continuation? Yep, that's a big bull rectangle. Does it have a void? Void is our definition of look to the left and there's insignificant resistance to prevent a fluid move higher to your target area, which is going to be a higher level of resistance on multiple time frames. Is it showing relative strength? Yes. Is the gap size ideal, okay, or too much? Like and you can watch our pre-market prep on YouTube. We start broadcasting live in our green trading room at 9 a.m. every day, but we broadcast it on YouTube for free from 9 to about 9:40-ish. So come in there, watch our pre-market bias. I go through many gap trades. I discuss which ones I like, which ones I'm going to put in a tier 1 5-minute pattern. And then once the market opens, that's my job, is to watch them to see if they set up. So there were many bullish and bearish gaps just today, but many of them were excessive. So that's what this one's referring to. So is this an ideal gap? First, I like them when they get right over resistance. So this was a little bit higher, but we're entering on an intraday time frame. Greg loves 2 minutes. I kind of prefer 5 just because it's a little bit slower moving. But here's the gap up, which is right here, the bottom of this green real body. Pulled in, gave us a buy setup. This green line was minor support, which is this red line. You buy over the buy setup. Initial stop under this end of day base for day trading. If the swing trading, your stop would be under the prior day's low, manage in between. Okay? I could go over 100 examples of gap tradings. But just because we're limited time here, I do want to focus on another one here in a moment. Here's Greg's course, mastertrader.com/AGS. Check it out. You email Greg or me with any questions. Sloppy, but it gapped up. Here's another picture of my buy setup in reversal on a 15-minute chart on minor support. And that's your entry, day trade, stop under the reversal bar. If you're swinging it, then I would give it a bigger stop under that end of day base. All right, so this one I want to show you, and I have 2 slides here. So this is a fantastic example. And you can see my daily chart. I told you how simple it is. Color-coded candlesticks, color-coded volume, and we use 3 moving averages on the daily chart. Blue is 20, green 50, red 200. So I could actually take the candlesticks off. I'm not saying I would because we trade price action, but I can tell just by the slow, medium, and long-term moving averages I have a general idea of what this particular issue is doing. Now let's look at candlesticks. Explosive move off this bottoming action. Deep retracement. This was an ugly red bar. Found some buyers at this congestion area, and what's it doing? It's going sideways for 3 weeks. This, and we use the word tells, kind of like that poker analogy also. So this was a tell. This gapped up and should have gone further, and it didn't. It got smacked back down with a big range expansion bar. Still can't bounce. It's a bearish consolidation. Now, here's my action day, both for a day trade and swing trade. I have a bearish gap to the low part of this 3-week consolidation. I have a price void because of this momentum move up. My target is this prior low because of this price void. So right here, I'm going to show you on the next page now, 15-minute chart, okay? This is what we call an end of day base. These vertical lines are the market open and close. So on a 15-minute chart, there's 6.5 hours in the market day. So there's 26 of these 15-minute candles. When it falls in the morning and then just bases for hours into the close, we call that an end of day base instead of an end of day decline where it's just vertical into the close. These are significantly better for gap trading. Gap down. Why do I have this wounded wolf here? I'll tell you why. Because that's the concept of relative strength and weakness. So it gapped under this end of day base. The daily is bearish, gap from a consolidation. Notice it could not rally much. That's the concept of relative weakness. He's wounded. He's a wounded animal. That's what I want to see. So both were day trading using this 15-minute chart. I'm shorting this 15-minute low, initial stop over this end of day base. Once it gets altitude, meaning moving in the intended direction, down for a short, once I have the confidence that it's moving as intended, I'm going to move the stop to the day's high. Then I'm going to move it to break even. Then I'm thinking of taking partial profits, which is a function of your own trading plan of how you want to manage. But look, this thing's down a lot. Closed at, let's call it 50.80. It's down 1, 2, 3, 4, 5, 6, 7 bars, which is an hour and 45 minutes. It's down here. I'm taking half of my profits over a prior bar's high. Now again, you'll have different management techniques. If you're off to the golf course at 11 a.m., then I'm out of the full position, right? I'm going golfing. I did my job. I traded in the first hour. I'm done. Home run trade. If I'm swing trading this, which the daily chart also supported, there's nothing wrong with booking a beautiful gain, moving stop days high, and then go back to the daily chart to manage, which in this case, it would be pretty obvious. You just trail over prior bars high. I know I'm throwing a lot at you because we have limited time, but our approach and what you get in our courses is a logical method that you have confidence in that you can follow every day. And I keep using that word seasoning. So another example here. Look at all three of these moving averages are pointed down. This is another bearish consolidation. Look at this gap right to the bottom. And notice there's no tail. What does that mean, no tail? It means it can't bounce. Here's my 15-minute chart, gapping under an end of day base. This thing was just a gift. Day trading, I'd be out of the whole friggin' trade. Swing trade, it would depend on, am I near my target? And is there any reason to get out of half or all? 7-point gap trade there. This list is if you're trading the entire day. We call these reversal periods for day traders. And it's because of the market psychology and money flow that there are different turning points that we have developed and witnessed over decades of trading. So the market opens at 9:30 Eastern. Between 9:50 and 10, we call that a reversal period, which just means be alert to a counter trend move or stall in the opposite direction of what the morning session did. But remember, we're always trading patterns. So this is important also to the 1-hour trader because your entry might be at a reversal period, a sell setup at resistance with a tick alert using a tick extreme using the market internals. 1025, 1035. So that's why that's a good It's another reversal period, and many times a great place to take your profits as a morning 1 hour trader. And the afternoon ones, we have the doldrums in here, but that's not our focus right now. Just pay attention. So on this slide, you can see very definitive turns at reversal times. So this was a nice turn there. I'm going to show you some option trading here in a moment before we end, because that's another one of my beautiful day or swing trades. So just look at the reversal times is all. So here it gapped up, came in at the reversal, gave you a buy setup. The green room I've been talking about a lot. We have a no-brainer $7 trial to spend a week with us, 5 trading days a week, $7. Watch us walk the talk. Everything we're talking about now, we do every single day in real time. Greg and I moderate. We have the microphone. We're talking, we're showing, we're scanning, we're answering questions. Daily charts now. So in the opening session, remember I told you that we're also going to cover, if you're a swing trader, then put on your trade and go to the golf course. So this was a gap up. This is a buy setup. Remember our slide of 9 compelling patterns. In the morning, you're entering over this bar, stopping at a low, shut down your computer. All of our trades we track in Telegram when we give them during the day. And then they're in the members area. We track all open and closed positions from open to close with the education of why we're doing this. Buy setup on support in the 20 MA after a gap breakout. Sold half pre-market for a huge gain here. There you have it. Here's a sell setup, just the opposite. Put on your trade. This one we bought puts. We love trading options as directional trades and income trades, which is selling options around turning points. When we buy options like we did here, we get the benefit of leverage and limited risk. So we're profiting from this swing trade directional bias, only paying $1.75 a share instead of shorting this at, $61 a share. And then made 71% in 3 days on one contract. You can see just different breakouts here, nice swing pattern, consolidation. This one, we bought that breakout, 10 points in a simple swing trade. Again, on that slide above with 9 charts, these are 2 beautiful 1, 2, 3 continuations. Wide range bar breakout from consolidation, an inside bar that stays in the upper third. There's 2 of them right here. Here's my void, momentum move down, room to go up. All right, we just have a minute or 2 here left. I want to show you how we love selling options for income. And it could be on 0 DTE where they expire that day. We love selling them 10 days or less. So you've seen these patterns. They're all bullish. We want to sell a put under support, and that would be selling a naked put. If you want to buy a further out of the money put, which lowers your buying power requirement and lowers your maximum loss risk in the event it goes violently against you. That's why we prefer credit spreads. The net between those 2 numbers is the credit that goes into your brokerage account, and it's yours to keep as long as it expires worthless. So we use our technical approach, and we say, like this little kid, you better stay away from my short strike so I can keep the money. Here's a bullish pattern, gap reversal. I'm going to look to sell, something under 228, buy further out of the money one. Here's a breakout failure, M top. I'm going to sell an out of the money call spread, manage in between. Breakdown here, bearish engulfing bar. I'm selling this call. I'm buying that call. That is in this case, a $5 wide bear call credit spread for a couple days. keep the money as long as it closes at expiration under that short strike. Zero DTEs, this was one we did in the green room the other day. The markets, this is last week, so it's fairly new chart. We had a CLIMO on the daily, took out a prior bar's low. So this is a perfect example of trading the open in the first hour. Look, I got an M top here on the 15-minute chart. This was the day before. Bearish consolidation, it broke down. That's my breakdown here on the daily. So we go to the option table. You only want to trade liquid options. 650 is this high. We went $1 above that. Did a $9 credit spread. Took in 53 cents a share. If you sell a 10 lot, $530 is yours. And you only have a few hours of risk. That's why we love zero DTEs. We're getting paid just to call a short-term high or low for the day. Here's another one on the spiders. This was pre-market and we did it right here. We do these all the time. Bearish gap on earnings, Meta, and that's it. This is our special for you today. We have a 2-for-1 on 3 different products. Our green trading room, which I've talked about a number of times. Our weekly options trader, which only sells options that expire 10 days or less. And our swinging options trader, where we buy and sell options. Very detailed intermarket analysis by Greg on the weekends. Go to mastertrader.com/2F1. Email me, dan@mastertrader.com, with any questions. Appreciate your time today. Hope you enjoyed that. And come check us out in the green room for a no-brainer opportunity to spend a week with us to watch us in real time. Have a great afternoon, all.
Thank you, Dan. I just put the offer in there, the chat for everyone to see. So sorry for that delay there. All right. Thank you, Dan. Great insights on trading the open, and thank you for bringing us back to the basics as well. It's always helpful. I placed the promotional link in the chat box, so be sure to check him out. He knows what he's doing. And be sure to email him if you have any questions as well at dan@mastertrader.com. Thanks, Dan. We appreciate you. And so next up, we have Ala of Fibonacci Trading Institute. Ala is known globally for her proprietary Fibonacci trading method, precision and simplicity. Her presentation is how Alpha Fibonacci predictive precision will improve your trading. She'll show how traders can eliminate guesswork and trade with clearly defined entries, stops, and targets. So please welcome Ala Plocker. Oh, Ala, I think you're on mute.
Here we go. I'm unmuted now,
Yeah, we
yes?
can hear you. Yeah.
Okay, I think I'm sharing a room. One moment, please. I have to share a different monitor. One moment. Here we go.
Okay.
Yes?
Yeah, we just lost it.
Okay, what is happening? Share the screen. Share. Yes?
Yes.
If there is anything else I need to click on? Yeah, no, if it shares, it stays there. Yes?
Yeah.
Okay. Fantastic. Thank you. Thank you so much. Can we start?
Oh, yeah, it's all yours.
Oh, okay. Fantastic. Hello, everyone. Amazing to be with you. Let's start the webinar. Hello, traders. This is Ala Peters-Fletcher, founder of Fibonacci Trading Institute and developer of proprietary Alpha Fibonacci trading system. In this webinar, I will be diving deep into Alpha Fibonacci's predictive strategies and how this can improve your trading. But first, please remember extremely important disclaimer. Please trade with risk you can personally afford to trade. Remember, there is no guarantees in trading. Please understand that every single thing we will discuss in this webinar is to improve your trading and nothing constitutes a financial advice. That no student had ever been paid for their testimonials, and that trading futures, risk, forex, crypto options, every single instrument always involves risk. Only you know your personal risk, so please trade accordingly. In this webinar, we will dive deep into how Alpha Fibonacci predictive proprietary system has been traded by traders of all levels, from beginners to hedge fund managers. And most importantly, how you can trade with confidence. You will witness how system identified today's institutional reversals. You will witness Alpha Fibonacci system across futures, stocks, forex, crypto. You will witness how you can trade with a very special savings up to $8,000 with a lifetime system for all platforms, private mentoring, or group course. Briefly about myself, I came to US a very long time ago. I hold multiple degrees, one of them classical piano education. I worked in psychiatry and behavior in Johns Hopkins Institution for many, many years, which I bring to my students on regular basis for the last 15 years, teaching proprietary system in live online classes at Fibonacci Trading Institute, which I've done this morning and which I've done for the last 15 years. So let's go straight into it, shall we? 2004 was the very first time something phenomenal has happened. What has happened that I came across completely by surprise? This is what happened. I was working on developing my own trading system I thought was on S&P, but in fact that was happening on Russell. And I was shocked. It suddenly hit me. My goodness, is it possible that identical price action can be exactly the same on every instrument? I looked on Apple, I looked on Amazon, I looked on Forex, I looked on multiple other instruments, and I recognized every single strategy I've been developing applies to every instrument, every time frame, every platform. As a core of all of my strategies, pure price. So here's a very important test. Please ignore the label at the bottom, as this is simply a test. Take a look and let's go straight into it. I will give you 4 questions. What instrument is this? No one would ever know if I expand across the entire chart. What is it? One thing every single person knows, it's pure price, correct? And when I click on the next instrument, you see pure price again, but in fact, it's completely different instruments. It's completely different time frames. And when I click on the following and the next and the next, absolutely nothing in common between these instruments except all of them at the core have pure price. So no one can guess what this is. And every single time I do this test, it's a complete blind side because this is what traders all over the world trade as Alpha Fibonacci system. This is Amazon weekly. This is Apple weekly. This is NASDAQ 5-minute. This is S&P 15-minute. Pure price is identical on every single instrument. So when you trade pure Alpha Fibonacci system, you can trade anything you choose. And that was absolutely huge discovery in what every single strategy I have ever developed based on. Pure price is what forms all markets into precise puzzle with alpha Fibonacci. So top financial institutions have been interested in my work, and as everyone knows Goldman extremely well. But I choose to teach every single day, and I choose to develop my systems on my own, not to work for financial companies. As I've said no since 2011, and I choose to teach this as I've done this morning. So here's a NASDAQ in front of you. Let's go right into it. These are proprietary levels. As alpha Fibonacci system spelled out where the bottom will be, well before FOMC. So if you understand the power of this and you insert Fibonacci retracements on any platform you choose, you knew well before FOMC and you knew well before any major event. No matter what chart you trade, no matter what time frame. This is the ultimate place to buy from. Flawless. This morning market was entirely different on Nasdaq, on any chart. This morning market sold off in European session and pre-market. It playing out in front of you right now. What does the intelligent trader understands and sees? This is flawless and stunning bullish rally. Bearish pullback was weak. Institutions defended this market with vengeance. So if you understand how powerful all of these strategic, intelligent trading strategies are, you remember forever where markets skyrocketed from first week in April this year. Correct? But let me take you back by 2 years ago on Nasdaq. This was Nasdaq at 17,000 level. All identified many months in advance. From 17,000 level, you as a day trader who trades predictive proprietary strategies, you knew. This is where institutional traders placing their orders. So when bullish rally skyrocketed, as you will see across multiple instruments in this webinar, bullish rally reached critical key targets 6 months later. In the month of October, we witnessed bearish correction, correct? And as ironic as it is, I left town, I was in Japan for a month, meeting with traders. Market viciously rallied again. Reflect on this. Identical level again. April 26 as April 25. You make a personal decision if you want to day trade or if you want to position trade, if you want to use options, if you want to use QQQ, index funds, whatever derivatives you want to trade, or if you want to trade range, tick, minute chart. Because if I take you back to a year ago and remind you, this is what system looked like exactly a year ago. So in April 2025, you knew this was phenomenal rally that will skyrocket and reach core targets as it's done 6 to 8 months later across massive numbers of stocks, S&P futures, gold, oil, multiple derivatives we will review next. This was April 7th, 2025, correct? This is what this chart looked like. This was core level. 17,000 until 27,000 level, correct? So if you worked 5 minutes in 2025, as a long-term investor, you are my dearest friend for life. If you worked as a position trader, you knew to expect selling pressure in the month of October when core targets were reached. That's it. And what played out First week in April is a stunning reminder. Hand holding in trading does not work. Do not ever underestimate simplicity of financial markets when you trade with Alpha Fibonacci system. This was first week in April, a year later. Identical level. So vicious rally on Nasdaq continues. No matter what chart you trade, you picked up this theme today, correct? So if you understand the power of this, you can trade any chart you choose. And when Nasdaq sold off as it's done on core institutional chart traded by JP Morgan traders and financial advisors and financial investors all over the world with the Alpha Fibonacci system, this was identical event, except on micro charts from the core reversal zone. And again, let me take you back to 2 days before, as all identified far in advance. Here is Tuesday before FOMC. That's it. Market heading higher and higher and higher. So if you trade 5-minute chart, you need to short from reversal zone in overnight session. You knew bullish rally overextended. You knew not to buy at this level. If you are trading small account without any delays, rules are met, take a trade. And that's strategic intelligence chess, traded globally since 2011. All you need, Fibonacci retracement tool and your intelligent effort. System traded by children of my students, as young as 11 and 12-year-olds, by fathers of my traders, by accountants of my students who buying packages for their brothers and their accountants who see their performance, which I will walk you through on my website. So if identical event played out on NASDAQ, an identical event played out on S&P. Are there S&P traders here this morning? Please let me know. This was S&P in the month of April 2025. S&P at 5,000 level. You traded 5 minutes. As a day trader, you are buying S&P at the bottom in April 2025. S&P skyrocketed and reached 7,000 level and skyrocketed from identical level again, April 2026. All identified in advance, never after the fact. So when you ride institutional power with your intelligent effort, you knew extremely well how to trade this after FOMC yesterday morning. And you knew extremely well where buyers would step in from at this level. This was the market this morning, from reversal zone until critical key buy point. But if I take you back to a day before, this is what the chart looked like, spelling out where reversal zone is. That's it. This is the reason I named this level reversal zone. I do not use standard Fibonacci numbers. I developed my own. My favorite Fibonacci number is 0. My second favorite Fibonacci number is 21. I do not use 1618. I do not use 50, 61.8, all the other standard number. It is none of that. It's part of my systems and trading strategies. So this is strategic intelligence chess on S&P and NASDAQ for the last year and including this morning. But if you decided to trade software for futures to day trade with Ninja Trader 8, this was software this morning. I will choose to project on 1-minute chart. It's a phenomenal tool and it's very simple. Bold red zone, alpha Fibonacci reversal zone, rules are met, take a trade. Sell-off had started 1 hour before market open, correct? And I can convert this chart to any chart I choose. Multiple trade signals played out. Pre-market from reversal zone. Flawless and simple. So you make a personal decision if you want to utilize software or don't. Software comes with multi-market scanner and trade recognition software that show up with alerts displayed and sounds. Multiple alerts constitutes serious institutional volume. That's it. And that simplicity of the Alpha Fibonacci system and software for S&P and NASDAQ for the last year and this morning and now and pre-FOMC. So as thrilled as I am by attention from top financial institutions, the reason I live and breathe what I do is because I have complete freedom and I travel the world meeting students and teaching students for the last 15 years. Husbands bringing their wives to the course. Sam put his daughters through Harvard. In London, we met with Greg and Ken. Every single one of these traders trades different instruments. Ken is a crypto trader. William is an options trader. Victor is a forex trader. Michael is an options trader. So every single one of these traders trades different instruments. After the webinar, I'm speaking with Michael, prop firm trader, who brought his daughter to the course, who is trading NASDAQ and multiple other instruments. As we always joke, we need an updated photo. So since 2011, in US and globally, in live online classes, fathers bringing their children, husbands bringing their wives, friends bringing their friends to the course to trade proprietary system. So when you come to the website and you listen to traders all over the world, you see and witness why CEO comes to classes in the middle of the night to share his story and journey. On the website, you see Traders Podcast, you view students' performance. The previous 6 months, I took time off as I've been building brand new systems and I've been meeting with traders all over the world. So when you listen to students and you see how traders trade, you see clearly you can trade like them. Any instrument, any time frame, on any platform, from beginner to hedge fund manager. So here is multiple other instruments. Let's go straight into it. And what played out yesterday on oil. This was stunning, flawless bullish point of entry on oil. As again, you witnessed identical structure on S&P, correct? So if I bring to your attention the retail chart on oil before oil news, pay attention, please. This is what oil looked like day before the news. Intelligent trader incredibly excited to buy oil from this level. So if I convert this chart to 5, to 10, to 15, to 3, to any chart, this is what oil have done. Pay attention. This is 12 hours before oil news. Intelligent alpha Fibonacci trader knows oil extremely bullish. Bullish news comes out, but trader very well prepared well before the news. All independent, knew to buy the market. So whatever instrument you trade, it's 100,000% you choose. Any chart, any time frame, any platform. Pure price for entry and alpha Fibonacci for exits. That's it. Oil skyrocketed from 98 until 109 with predictive precision. As alpha Fibonacci trader, you are very well prepared far in advance, before the news, before global events. This was institutional chart on oil. Before I left last week in March. So let me take you back on oil. As everybody was shocked by a crash, it reached institutional reversal zone. So if I bring you back to oil before the crash, because everybody thought oil will go up forever, as long as the war with Iran will continue, not so fast. This is oil April 1st, a month ago, at reversal zone. Rules are met, take a short. Do not speculate. Do not gamble with your money. Use your limitless brain and trade financial markets as strategic alpha Fibonacci chess. Oil collapsed significantly and skyrocketed from key level, identical level as S&P and Nasdaq. Every single instrument respects identical level as key institutional buy and sell zones. And that's oil, Nasdaq, and S&P for the last year and during oil news, from micro to macro charts. If you have any questions for me, please do post. I will answer as I go along. Alpha Fibonacci trading system removes all speculation from trading, removes all the complexity, removes all the noise, and allows traders to focus on predictive institutional reversals with precise simplicity. So any instrument you choose to trade on any platform, there is only one key requirement for the platform is Fibonacci retracement tool. So when you make an effort, you can trade any instrument you choose with institutional entries and exits. So let's go straight to multiple other instruments, shall we? Here is one of my favorite examples in the last year. As everybody knows what played out on Tesla, correct? This was Tesla. Let's go back almost 2 years, shall we, before the election. Let's go back to October 2024. Here we go. Elon Musk rallying for Trump, correct? Bullish rally on Tesla is on until the wealthiest man on the planet and the most powerful man on the planet no longer friends, correct? When tariff war starts. Here's Tesla reaches proprietary reversal zone. January 2025, Tesla in free fall. So if you were holding long position on Tesla, you know where to exit your long. And when Tesla collapsing completely and crashes and reaches the bottom in April 2025, as Tesla comes out with catastrophic earnings and Tesla being burned on streets of US and globally, what does the intelligent trader understands? Rules are met, take a trade. Bye 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 Tesla. Tesla doubled in value despite catastrophic earnings. Did you know that? Absolutely horrific. Collapse 46%, but as intelligent alpha Fibonacci trader, you take long when rules are met. Despite catastrophic triple earnings, Tesla doubles in value and reaches reversal zone. January 26th, first time in 8 months, Tesla comes out with great earnings. But what happens? Tesla collapses because Tesla at reversal zone. Tesla collapsed since first time great earnings on January 6th or 7th, I believe, from 450 until 350 level. So here we are on Tesla in the month of April. I believe Tesla has earnings. What is it showing you clearly? This is key level on Tesla. Again, this chart tells you everything you need to know. When you start using your limitless brain, you understand if trading on the news worked, every single person on the planet would be Bill Gates. Every single person on the planet would be billionaire. It does not work, but what works is your limitless brain power. If you can play chess, if you can drive a car, if you can catch a fish, you have a strategic, intelligent brain. All you need, apply alpha Fibonacci rules and trade any instrument you choose. That's it. This is key level on Tesla. Identical level where S&P and Nasdaq skyrocketed from, correct? Identical. Flawless. So when you understand the power of this and flexibility you have to trade on any platform you choose, on any instrument, whatever you walk through in life, so many of my students adjust and change and evolve. This was 2025 rally, correct? Flawless. S&P, stunning. Again, identical level as just played out on Tesla, correct? As just played out on Nasdaq. It is all the same. Every single strategy I ever developed can be traded across all instruments. As strategic intelligence chess with no more pain, no more stress, no more confusion, no more chasing the markets and losing money. So, this is the email I just received. I'm working with Marsha tomorrow. Marsha is such a blessing and reminds me constantly why I live and breathe what I do. This is what she said. Beautiful Marsha who struggled forever in trading. She wrote this day before I left town. I was gone for a month. What is very clear in her email? What is black and white? She's done her job. She researched after 16 years of losing money. Now, she's not even nervous when taking a live trade. She knows where stop loss is and where different profit levels are. It is truly amazing. If you are reading this review, please believe me when I say there is no other program out there that will make your dreams come true as a trader. I thank Allah and her Alpha Fibonacci Institute. I will be forever grateful to you. Marsha evolves to the next level. She wants to learn more. She's moving up. After 16 years of losing money with absolutely no profit. Black and white. These are the stories all over the world, from US to 60 plus countries, changing one life at a time. So when you trade in strategic, precise trading chess, can you trade NVIDIA? Of course you can. You can trade any instrument you choose. Let's go to NVIDIA. Absolutely. Here's NVIDIA selling off. Bullish rally skyrocketed April 2025 and picked up this steam April 2026. So nobody should be surprised, but NVIDIA right now is selling off. It reached proprietary reversal zone. And again, let's go back by a year before the rally on NVIDIA, shall we? Take a look. Here's NVIDIA a year ago. Tariff war is on. Everyone is terrified. Crash was quite spectacular, correct? Tariff war, not a joke. But intelligent alpha Fibonacci trader very well prepared to buy NVIDIA at the bottom. NVIDIA more than doubled in value since a year ago. From 90 until 216. 15. That's it. Any instrument, any time frame, trade it globally, not just on stocks, but on metals, on crypto, on futures. Absolutely 100,000% your decision. If the instrument has a price, alpha Fibonacci system applies. You have opportunity to buy the bottom and sell the top, as playing on NVIDIA right now. How to trade this, you learn in the course. That's it. So rules are crucial. Can you drive the car with the rules? Then it means you can trade alpha Fibonacci system with the rules on any time frame, on hourly, on daily, on weekly, on monthly, on 1 minute, 3 minute, 5 minute. 100,000% your choice. With precise entry, with precise stop, with precise target. So what would your trading be like if you trade it with rules? Let's review Amazon. This was phenomenal opportunity to buy Amazon. The power of the ball pink line never to be underestimated. This is the end of the minor trend. This identifies the end of sell-off. Rules are met, take a trade. Flawless. That's it. Bullish rally since April 25, reached reversal zone where Amazon sold off from. Strategic intelligence chess for the last year on Amazon, independent of earnings and well before the earnings. So when you trade with institutions, as strategic intelligence chess, can you trade Apple? Of course you can. This is Apple for the last year. Starting in flawless, bullish point of entry, picking up this theme, showing you Apple overextended. This is your channel on Apple. That's it. And that's multiple instruments with the alpha Fibonacci system for the last 2 years to now. And if you choose to trade Forex, you're seeing very clearly, despite catastrophic events in Europe, you need to buy euro at the bottom. This is where your mega power lies. Wars raging in Europe. This is 6 months after the start of Russian invasion. You're at the bottom. Flawless point of entry, enjoy the ride. Here we are. Despite Middle East war, euro skyrocketed from 98 until 118. Correct? While US dollar in free fall. Never been more expensive for us Americans to travel the world. As I witnessed in Japan, Japan always been extremely affordable. Not anymore. Bold pink line is a critical key brick wall for US dollar. But you are not restricted to trade US dollar or euro or Apple or Amazon. You can trade platinum, you can trade silver, you can trade gold, you can trade Bitcoin. Has anyone expected collapse and crash in Bitcoin? Can you trade Bitcoin long term? Can you trade monthly? Can you trade weekly? Can you trade daily? Can you trade hourly? Absolutely. The crash on Bitcoin was spectacular and flawless. Bullish rally right now in a progress. Bold pink line, the end of the minor trend, is the only level that's been causing major problem on Bitcoin. But Bitcoin collapsing almost 50% is a stunning reminder. As I warned everyone 10 years ago, crypto will keep swinging between 26 to 86% forever. You need to know where to enter. You need to know where to exit. You cannot speculate. If you speculate, it's a very stressful instrument to trade. But with the Alpha Fibonacci system, you traded a strategic intelligence chess. On Bitcoin, you had phenomenal opportunity to buy in months of April 2025. This critical key support right now causing problem on Bitcoin. The end of the minor trend in a play a year later. So whatever your personal decision on the time frame and instrument you choose to trade is absolutely your choice. Pure prompt for entry and Fibonacci for exit. And that's a proven system traded globally since 2011 by traders from 11 to 86 plus year old, as you see on the website. So 99% of thousands of traders I worked with since 2011 who come to me with speculative delayed indicators are stunned how simple it is to trade financial markets with Alpha Fibonacci system. All the pain is gone. It's rule-based, it's predictive, and it's completely proprietary. So if you can trade pure price for entry with proprietary Alpha Fibonacci retracement for exits, the sky's the limit. As proven by Michael, with whom I speak next. He's been with me for 15 years. He brought his daughter to me when she was 12 years old. She's 17 right now. Michael is a prop firm trader. His daughter trading crypto. Michael loves trading NASDAQ. As we always say, we need a new photo. But that's an ultimate honor. When Terry called me, he was in panic. He struggled so much in trading. Not anymore. Terry actually enjoys trading now. That's it. And when father, hedge fund manager, bringing his son to the course, and father and son trading completely different instruments on completely different platforms, it shows you what's possible when even 11-year-old makes an effort. Serious, my dearest friend for life, says Pablo, complete beginner trader, hated being an attorney. Now trades, not just futures, stocks, forex, crypto, options, multiple accounts for prop firms. And that's the reason I live and breathe what I do, because of stories of traders all over the world. If these traders have done it, so can you. And when Theo comes to classes 2 o'clock in the morning because of time difference with Australia, it's a reason I'm very proud of our global community. And if you're serious about trading, I look forward working with you. Simply come to the website and review all the information, but please, any questions, do not ever hesitate to contact me. Simply pick up the phone and call. You do not have to come to live classes. You can simply view video library 24/7 of prior live recorded classes. Most of our students own full-time businesses or on different time zones. And if you would like to receive invitation to the trading room, please come to the website and register, and you will be invited. Currently offering 4 various packages with substantial savings up to $8,000. Private mentoring is the most desirable package. Includes video library modules, group course, lifetime system for all platforms, and lifetime software to day trade futures for Ninja Trader 8. Package 2 savings $5,000. Almost identical as private mentoring, except it's a group course, which I was teaching this morning. If you are not on Ninja Trader 8, option 1 and 3 appropriate for you. Pat, who works with me, who developed software for Ninja Trader 8, will hold your hand in the process, will help install the software for you. I answer all the questions in private classes when I work with you one-on-one via screen sharing or in group classes. Or you view videos 24/7. So please review all the information on the website. And if you're serious about trading, I look forward working with you. As we already passed celebrating 15-year anniversary, a student-made movie about Fibonacci Trading Institute. And of course, you can always read my incredible students' reviews. So thank you, traders, so much. It's been my joy and honor being here with you. I'm back after taking time off. Any questions, please do ask. And if you're signing up for the course right now, you will be in class as of next day. Any questions, please do ask. I don't see any questions. There are no questions, correct? Correct?
I think, do you have any opinion on oil? One person's asking, do you know what
Yeah,
oil will do next week?
I've shown multiple charts on oil. We reviewed oil. We already gone over the oil prior. We discussed oil news this week. And we discussed what we expected and all that played out. This is oil in front of you right now, and this is discussion. We've taken oil a year ago to the current news, to this week, to today. This webinar had been recorded. If you missed something, you can review, as I went deeply into oil. Any other questions, please do ask.
I don't see any other questions over here.
Okay. So thank you so much for having me. Thank you. Always amazing to be back. Thank you for inviting me. It's been my joy and honor. Thank you, traders. Any questions for me, simply pick up the phone and call or send me an email. Or again, register on the website for the trading room invitation. Thank you, traders. Have an incredible evening. Take care.
Yeah, thank you, Alla, for that powerful and precise methodology. And thanks for putting all your contact information in the chat there. So feel free to reach out to Alla. And thanks again for being here.
Thank you so much. Thank you. Amazing to be with you always. Thank you.
We appreciate
Take
it.
care. Bye-bye.
Now for our final presenter. Our next presenter is David Wise of Right Line Trading. David specializes in high probability option strategies designed to capture fast moving opportunities. His presentation is how to turn small options into 30% to 500% gains in minutes. He'll show how traders are using high volume signals and momentum to identify explosive setups, especially in today's volatile environment. Everyone, please welcome David Wise. David, are you there? We started a little early. David may not be.
Nope, I just unmuted.
Oh, oh okay.
I'm just trying to share my screen and it's not showing it for some reason. Hold on just a second. Let me see if I can go back and share here. I don't know why. Bear with me just a second. If I can
Yeah, take your time. We actually started a little bit early, and I know that you usually.
Oh, that's okay. That's not a problem. No, that's not a problem. I'm just trying to see if I get the right screen here. I'm not sure. Is that it?
Yeah,
okay.
That's it.
All right, that's the SPY Super System. Okay, very good. Thank you very much. Just had for some reason it was the wrong screen up there. Appreciate that. Thank you very much, and you can hear me okay. I'm here. Appreciate it. Thank you, and we will get started. Thank you very much, everybody, for being here today for this webinar. Again, my name is Dave Wise, and I'm a professional options trader. Been doing this for over 17 years full time now. And today we're going to talk about the SPY Super System software package that I use. I trade on Thinkorswim. I do not have to trade on Thinkorswim. I trade on Tradier actually. But we're going to go over that. We're going to talk about the options live trading room and text alert service I have. And I'm going to take a little bit of time today to talk about Fibonacci candles to help you basically improve your trading, get better entries, and not get shaken out of trade so soon. So we'll get started, and we'll get started right here and move ahead. Okay, first thing you have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, going to talk about quite a few things here today. Going to take a little bit of time. If you have any questions along the way, just put them in the question box. I'll try to answer them as they pop up there. If not, if you have questions on subscriptions, etc., you can just put your name and phone number in there, or your team's username, and Rory will give you a call back. Or you can also call Rory. He'll be at 786-732-4656 at Right Line Trading. Okay, so let's get started here. I want to talk just quickly about in the trading room, where I'm in the trading room every day from market open to market close. Had to leave a little early today, so market closes in about 11 minutes. But these are the particular strategies we use in the room, option strategies, and on the alert service to do swing trades. And then we also do intraday trading. So I'm just going to kind of run through those quickly. These are the basic strategies that we use. Straight calls and puts, obviously, a fairly common one. We just had straight calls on core weave today that we just had a position that we just made $200 a contract on that we closed out today. So do calls and puts. I also do straddles and strangles. Straddles and strangles are a non-directional trade. You can take advantage of big moves one way or the other. You don't really care which way the stock moves. And we do this on very specific criteria. All of the strategies we have are all defined in my training videos that I've got. I've got one on every single one. And they go over the specific criteria to when to take them, when not to take them. We also do debit spreads using weekly options expiration. Matter of fact, we just had a debit spread on UNH, United Healthcare, today that we bought 2 days ago for $1 a contract, $100 a contract, and we just sold it this afternoon for $130 a contract. So nice little 30% gain. I also do time spreads over earnings. This is a non-directional trade where we don't care about direction. We just are looking to capture the volatility crush that comes off when earnings are announced. Market makers jack up the premiums on puts and calls before the options are going to go to earnings, or before the stock is going to have earnings. They jack up the premium and then they take them out after the earnings come out, once they know which way it's going to go and how big the move's going to be. And I also have a strategy called the weekly ATM strategies. This is where we sell puts on a neutral to bullish stock to bring in money every single week while maintaining a longer dated put out in time to protect ourselves. This is a very, very forgiving strategy. And then we also do credit spreads to capture premium. These are all that would be typically considered swing type trades. Most of these are going to be at least overnight, if not further out in time. All right. Now, for intraday trades, and we've been doing a lot of intraday trades the last 4 or 5 months because the market's been very, very choppy. If you notice today, this market is breaking out big time to the upside. The Qs and the SPY, NASDAQ and the S&P 500 all made brand new highs today, and it's been very, very strong. So trying to take care of intraday trading, just in and out the same day, sometimes just 2 or 3 or 4 candles. We have 2 different systems that we use. We use the SPY Super System intraday strategies. That uses a software, the SPY Super System strategy. And this typically trades SPY, Q, IWM, futures, and we even use it on stocks. All right. And these are always taking in the money puts and in the money calls. Another strategy that we just created in November, I just created this called the UMCAT. This is for high momentum, high volume trades. UMCAT stands for out of the money catalyst. So we take out of the money puts and calls in this. Now, it's very important. This strategy is followed precisely. You should not be taking out of the money puts and calls ever, unless you've got a very specific setup. And I'll tell you what that is, but it has extremely good win rate, but it's one you want to stick to the criteria on, because otherwise you'll be in really big danger if you're not just using in the money puts and calls as you should most of the time. So this is the UMCAT strategy. Now, the reason that I added this UMCAT strategy is when I put this out before, the anticipated date for the change in the PDT rule was April 14th. The PDT rule has just been changed. It used to be that you had to have $25,000 minimum in your trading account to trade what's called a PDT, a pattern day trader. If you didn't have at least 25,000, you were limited to the number of day trades you could take. You could take 3 intraday trades in a 5-day period. That's it. So in a 5-day period, you could never do more than 3 intraday trades. that you can in the same day, in and out the same day. This is 25,000 that was being dropped down to between 2,000 and 2,500, depending on what the brokerage house wants to do. Two platforms have already announced this. Tasty Trade is announced they're going to be available June 4th, and Thinkorswim, which I'm kind of surprised they came out so early. Thinkorswim on Schwab is going to be this is going to be available on June 9th to go as a you're going to drop the PDT or the pattern day trader rule. This is going to open up intraday trading to millions of retail traders who had small accounts who wouldn't before being able to trade intraday. They could trade futures, but they couldn't trade any stocks and options on those stocks. And so I wanted to have something available when this happened to give other traders in my room, especially, an opportunity to take advantage of this. Because when new traders come into a pattern like trading intraday, when they haven't been doing that before, you're going to have a big advantage over them, and you're going to take money from them. There's no way to sugarcoat this. When you're trading as a retail trader, such as I am, you take money from other retail traders. You don't take them from institutions. You're not going to beat institutions. So these strategies we produce, the UMCAT strategy, it's a momentum-based strategy, and it's going to prepare us and allow us to take advantage of all these new retail traders that are going to be coming into the market. And I'm going to cover this strategy in a little bit here. All right. And we also have an alert service I call Compass. This is what the software used to be called. It's now called Spy Super System. But it's an alert service where we take the highest probability trades, mostly swing trades, and send them out to your telephone, to your smartphone. And it takes about 10 seconds, maybe a little less, to get to your phone. All right. So that obviously you can take the trade so you don't have to be in the room. You don't even have to be on the computer. All right, so first thing I want to talk about, and I do this, if you've seen me before, you're going to hear this each time I do this. I talk about what moves the market, what actually drives the market. It's important to know what drives the market. Richard, you say you're muted? I don't think so. I don't know why you would be. You should be able to hear me. Yeah, you should be able to hear me. I think if everybody can hear me, just let me know, because I'm sure they can. Yeah, audio is good. Thanks, Rory. Yeah, you may have muted yourself. I don't know. You just may want to restart it and try it again. All right. Okay. So what drives the market? Well, there's two categories of traders. There's retail traders such as myself and likely everybody else here. We're these little marbles down here. And one important thing to know about retail traders: if retail traders of the majority of the market trading at any point in time, then what you're getting is a lot of chaos and a lot of chop. We cannot drive the market. Okay, retail traders can't drive the market. Institutions is what moves the market, and this is the big ball up here. And institutions, when I say they're moving the market, what we look for is not institutions are in the market all the time. They're buying, they're selling. Morgan Stanley's buying, JP Morgan selling. The key thing we're looking for, and this is what our software shows us, is when the institutions are buying or selling a stock or an index in force. A lot of indexes, a lot of the institutional banks, hedge funds, etc., they're all buying or selling a stock at the same time. So they're pushing it one way or the other. This is where the trends come from. And this is where our job as a retail trader is to identify those trends and take advantage of it. All right. Now, the institutions do consist of investment banks, JP Morgan, Morgan Stanley, Bank of America. These are all institutions, but they're also made up of pension funds, city workers, state workers, firemen, police. They have big, huge billions of dollars in pension funds. And then there's hedge funds. Hedge funds are also very, very large. They have lots and lots of money, billions of dollars. And lastly, there would be mutual funds, such as T. Rowe Price and Vanguard. They have billions of dollars. This is what makes up the category of institutions. Now, the investment banks, Goldman Sachs, JP Morgan Chase, all the big investment banks, almost all of their trading, about 85 or more % of their trading is done through algos, computer systems, computerized programs that look for specific situations. They look for setups on the market. They'll look for MACD crossovers, or they'll look for anything. They'll look for the break above the 100-day moving average, etc. But they have algos, and there's hundreds and hundreds of algos. that are looking to trade. So this is where most of the trades come from. They're not coming from somebody sitting on a desk pushing a button, pushing a mouse. And so that's important to understand. And if you look at the market, we had the FOMC meeting yesterday at 2 o'clock. The FOMC, the Fed, came out and made their announcement on interest rate change, which of course was unchanged. But the institutions have algos that actually read this news. They electronically read the news. They see what the report says. And if you look at your SPY, this S&P 500, on a 5-minute chart or a 1-minute chart, you'll see this big, huge spike in volume right at 2 o'clock yesterday. And I mean right at 2 o'clock. 2 o'clock's in a microsecond. That's the algos trading off of the news, right? So this is where most of the trades come from the institutions. And remember, one of the things is they can tell if retail traders have a stop on, for example. They can see the stops levels, and they can also see what retail traders are doing if they're trading off of specific levels, and they can actually program to get around that and bust it. They'll take like a MACD crossover, and they'll go ahead and push it above the MACD and then bring it right back down again, so that you get trapped in that. So that's what the institutions do, right? And our job as retail traders is obviously to beat other retail traders, and the best way to do that is to ride the institutions' coattails, be in the trade when the institutions are in, and be out when they're out. All right, so that's what we're going to talk about. That's what the software finds, and what the strategies take advantage of that. Okay, this is just kind of a little bit of a side here. This is a blackjack table. This is ace and jack of spades with a couple $100 chips. What's this got to do with trading? Well, the reason I put this up there is when I first started trading, and I suspect when you first started trading, a lot of people would tell you that it was fixed. It was just like gambling. You can't beat it. And so a lot of people will think that when they lose, it's not anything that's their fault. They're losing because it's gambling. You can't beat them anyway. But the reason I point this out is when I was much younger, much younger, I made my living playing blackjack as what's called a card counter in the casinos in Las Vegas. I lived in Las Vegas, and I played blackjack. That's all I did. And by being a card counter, you're not actually counting cards. What you're doing is you're determining what the composition of the remaining cards in the deck is, and you can tell if the remaining cards are in the player's favor or in the house's favor just by tracking the cards that come out of the deck. So as the little cards, the deuce, 3, 4, 5, 6, and 7 are removed from the deck, that gives the mathematical edge to the player. As the big cards come out of the deck, 10, Jack, Queen, King, Ace, then the house has a bigger advantage. So when we have a deck that has a lot more big cards than it normally would, we have an advantage. We raise our bets and we take more hands. When the casinos have the advantage, in other words, there's a lot more little cards in the remaining deck than there should be, they have an advantage. We bet the minimum and just trade one hand. That's how you card count, and that's how you make money trading, playing blackjack. Right? It's changed a lot since then because they have automatic shufflers, etc. now. But the whole point of this is trading stocks and options is very similar to playing blackjack. And without knowing what the institutions are doing, the trader doesn't have an edge. Right? You're in essence are gambling. So in essence, trading options and stocks, it can be gambling or it can not be gambling. Just depends on if you have an edge and something that you can identify. And so we have an edge, and our software gives us the edge as well as our strategies. But very important, and I try to emphasize this every time I do a webinar because this is really important. Whether you are playing blackjack or whether you're trading, which I'm trading now, right? This is what I do. Both of these require discipline and emotional control. It's very important to understand that without maintaining discipline and maintaining emotional control, no matter how good your methodology is, you're not going to be able to have consistent profits because you're trading emotionally. And discipline means having strategies and methodologies that we know work. We have about an 85 to 90% win rate in our trades in the room over the last 4.5 years or so. And you've got to stick to those. A lot of people will jump from, they'll take a trade and then they'll get bored and they'll look for a trade and they'll be online and they'll look at it. They'll be looking at X or they'll be listening to Bloomberg or CNBC, and they start taking all kinds of trades. Got nothing to do with the strategies that we teach. It has to do with what they see or hear. right? They think they know that this is going to go good because their brother-in-law's cousin told them how good it is. So you want to have discipline to stick to the strategies, which I'm going to cover pretty well. And also emotional control. Now, emotional control is really probably the hardest thing for most traders to control, really is. Because, obviously we know about fear and greed. There's fear, there's greed. Fear, if you're in a trading, you're losing money, if you panic out of it. Greed is if a stock's taking off and it's running away and you think you should be chasing it. So you have FOMO, fear of missing out. But there's also a couple of other things that you may not think about. And one is anger. If you lose a couple of trades and you think you should have made money on, you get angry. So what do? You stop taking trades that you shouldn't take. You start basically staying in a trade longer than you should, and perhaps taking too big a size to try to get even. That's anger. That's another emotion. And another one would be if you've had 3 or 4 wins in a row, now you don't think you can lose. So you stop taking trades that are borderline trades that you probably shouldn't take, and you get like a dopamine hit. It's just like it's an elation feeling that you get because I can't lose now. I'm going to start jumping in. Those are emotions as well. And one of the things that creates the most emotion in trade is watching the P&L, trading off of what the P&L is showing. When they're green, they feel one way. When they're red, they feel another. And you should not be trading off your P&L. You should be trading off of the technical setups that got you into the trade. That's what you use to get into the trade. It's what you use to get out. If you're watching your P&L, you're trading emotionally, and that's going to mess up your trading. All right, so both of these require discipline and emotional control. So the SPY Super System, I consider my card counting system. This gives us an edge over other traders, allowing us the ability to become consistently profitable. And I think that's what most traders are striving for. And again, the SPY Super System, in conjunction with identifying the best high probability trades, can lead to consistent profits, right? And when we're trading, we may find 3 or 4 trades that look good. What we have to do is we've got to try to find the one that's the best, the very best trade out of the group that's there, based on the criteria that we've got, all our support resistance levels, etc. Okay. All right. So this is what the SPY Super System looks like. I want to introduce this to you early. We're going to go into it in more detail, but I just want you to see what it looks like. Now, this is the SPY Super System running on Thinkorswim. It also runs on Ninja, but this is the one I use on Thinkorswim. This is the Thinkorswim platform. I don't trade on the Thinkorswim platform. I trade on Tradia, but you can trade on any platform. You can trade on Tastyworks. You can trade on Robinhood. You can trade on Webull. You can trade on Scott. You can trade on Fidelity, anything. But this is where the indicators are going to be shown up. You load this indicators on here. Right, Ryan will get right on. I'll set you up with it, and it's going to look exactly the same as mine. And this is what it looks like on my screen on Thinkorswim. This is a 5-minute chart of the SPY. Okay, so you're looking at the indicators here. We've got current time frame momentum, multi-time frame momentum, and long-term trend. This is the critical one for intraday trades. This is what you want to trade off of, the current time frame momentum, because that's what this is telling us what the institutions are doing. You've got 4 colors. You've got green and blue, which is bullish, and you've got red and yellow, which is bearish. Right? That's telling us what the institutions are doing. It's basically indicative of what this modified oscillator down here is showing us. Right? This multi-time frame is showing us, in the 5-minute, is showing us the 5, the 15, and the 45. On a daily chart, which is where it's much more important, is showing a 1-day, a 3-day, and a 9-day. Right? So this is telling us what's going on across all of those time frames to tell us if the institutions are in or not. Right here, you can see all the institutions are in strong on the SPY at this particular point in time. So this is the indicators that tell us if the institutions are in there, and this is important because we're not going to take any trades if the institutions are not in there. So if this isn't green or blue, we're not taking a long. If it's not red or yellow, we're not taking a short. Now up here, this is on a 5-minute chart. So these are the key things for the intraday trading that we do. All right, this is the VWAP right here is a volume weighted average price. This is a very key support resistance level that all the institutions use. Very important. The next line up here is this green line. This is the 15 EMA, 15 exponential moving average. It's another support resistance level. And the white line right here is the 8 exponential moving average. These are our 3 support resistance levels. If we're entering a trade for an intraday trade, We're going to try to go long if we get a break above one of these lines, or short if we go below one of these lines. And when the VWAP, when the 15 EMA is below the 8 exponential moving average, or the 8's above the 15, that's a bullish trend, right? When the 8 exponential moving average is trading below the 15 EMA, that's a bearish trend. So that's how you can tell what the trend is. And one thing to understand on these two indicators is that the 8 and 15 work in conjunction. Typically, when a stock comes down and it's bullish and it comes through the 8, it's likely going to support on the 15 and bounce back up again, just like this did right here. Right? So that's how I use those in conjunction. Now, one of the most important things on this chart that we're looking at right here are these colored candles. Red and green candles, obviously, bullish, bearish. But the key thing here is white. The white candle right here, this is a bullish candle with high volume. This tells me that the institutions are coming into this, and they're coming into it with some force here, right? And that tells me that perhaps this momentum is going to continue. I want to know when the institutions are pushing volume into it, right? So, and yellow is high volume because of the downside, right? And we use these in conjunction with the UMCAT trades, the out of the money trades, which have a momentum, because this is a momentum that's created right here, right? And if you're in long this trade right here, you obviously would take it off right up here, and it comes back down, but you wouldn't be going short, obviously, as it's hitting the VWAP and bouncing back up again. But those are the indicators that we use. All right. Now, this one thing here, this is called market internals. This is something that tells us what the market's doing. And when I say the market, all the U.S. stock exchange stocks, right? All 6,000 stocks. What's going on? This is going to be the same colors. It's going to be green and blue, red and yellow. Is telling us if the trend is up or the trend is down by looking at all the total volume across all of the stocks, total volume going up and total volume going down to determine what the market internals are. And it kind of gives you an idea of what the overall market conditions are at that time. And it's available only on the 5-minute. I don't use it anywhere else. And it doesn't have anything to do with the stock you're looking at. It's the overall market. Okay? All right, let's move along here. This is I just want to show you an example of the UMCAT trades that we use. This is out of the money catalyst. This is for people who want to trade intraday. And a lot of people want to trade intraday, and a lot more people are going to be trading intraday. This was a trade we did on Oracle back in, I think it was February, March. Yeah, late February. But this was an UMCAT trade, out of the money catalyst, right? And we did it on Oracle. We get in for $72 a contract. In option terms, that's 72 cents. Because an option is for 100 shares, so that's $72, and we get out for 125. That's 74% profit, and this was the trade right here, right? So I want you to see, there's your current time frame momentum right there. Institutions are selling. We don't really follow, I don't really use this so much on a 5-minute, but they were obviously selling there too, and the trend was down. So this stock was being sold. Oracle was being sold here pretty hard. And where do I get into this? Well, I get into it right here. As the stock compresses and it breaks below the 8 right here, see the white line? The 8 exponential moving average? That's where I entered the trade. Look at the candle here. Big volume. Institutions are short, and now they're pushing it with some big volume. This is where the trade began, and I wrote it down for 1, 2, 3, 4, 5, 6 candles. This is where I get out. That's 30 minutes. 30 minutes of trading. We were at a 74% profit on that trade right there. And you notice it's flattening out. You're getting compression. That's where you want to get out of the trade right there. But that's an UMCAT trade. There's your indicator that you use. There's the high volume candlesticks. That's all you need. When you find those, that's how you trade them. And I'm going to show you some live charts today of some for today, so you can see this like in real time. This was an UMCAT trade in Frog. This was like one of the best UMCAT trades I've had recently. But this is not a common move. This was a very big trade, but I want you to see the setup. Is it the same? Yes. All right. See selling. Institutions go to buying. See it goes to blue. And it goes to yellow. They're selling. Look where the selling came in. See the volume? Stock's compressing, and see how it broke below the 8 exponential moving average right there on volume. That's where I took the trade right there. Went to yellow, took the trade. I followed it down. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. 45 minutes. On this trade. We get in for 30 cents. Now, I was taking out of the money puts, which you would never do unless you had an UMCAT trade and out of the money with catalyst and high volume. but I took the puts on this, and I took 39 puts when the stock was trading at $43, $44, way out of the money. But look at the move that it had from here to here. This is where I get out. I get in for $30 a contract. I get out for $200 a contract in 45 minutes, 566% profit. And that's not a common occurrence. Let's be honest. This doesn't happen. Typically, you're going to get way less than that. But this was an outstanding move, and there was no reason for me to get out of that trade until there. In fact, I left some money on the table. It came down. It actually went from 200. It actually went over 350. But that was a pretty nice trade right there. Again, 10 contracts would have been $300. You would have had $1,700 profit. So that was a beautiful frog trade on UMCAT trade right there. Right? So you can just see the indicators here, how they work together. Okay. So in the room, we have a couple of rules we trade by. First one is we trade the best and skip the rest. And I've talked about this in the room today quite a bit, because trading the best means just finding the very best trade there is and taking those. And a lot of times people will post trades for me to look at in the room, because I'm in there all day long, and people are posting trades they want me to look at that they think would be a good trade. And what a lot of times what I'll say is that if it's a long, for example, is that the best long you can find right now? That means I don't really like the chart that much. We trade the best and skip the rest. And this is kind of underrated. Skipping the best means skipping a trade that you don't have the best probability of making money on. And if you skip a loser, that's just as good as a winner. That's money in your pocket, right? So that's an important distinction. So we only look for the best trades. Obviously, the best trades have institutional involvement in them. And the last one is our objective is not to make trades. Our objective is to make money. Seems obvious, of course, but this is meant to keep retail traders from overtrading, because overtrading is one of the biggest problems that most retail traders face. They get bored, and you feel like they need to have a trade all the time, and it's not right, because it's going to end up losing money. I mean, what difference does it make if you take 3 trades a day and make $1,000, or you take 15 trades a day to make $800 or $1,000? It doesn't matter. The whole point is your objective is not to make trades. Your objective is to make money. So just trade the best. All right. And maintain discipline, which means learn and follow the process. This is what I'm talking about, is the process that we have. I'm going to show you exactly what we find for setups, right? So you want to learn that and internalize that and then trade that. And that's the discipline you need to have. Once you've found some strategies that work 85% of the time, there isn't any reason to start looking around for other things, because you're just going to basically find a bunch of trades that don't work as well. All right, and remain patient. This is very, very hard for most retail traders to be patient. Sometimes I'll sit and be talking during the day and no trades. Have you made a trade yet? No. An hour later, have you made a trade yet? No, no trades yet. I'll tell you when I make a trade. Just look for charts, look for what's going. You can use it to do some studying of charts, etc. But you have to remain patient. Wait for the setup to come to you. And as a profitable trader, we need an edge over the other retail traders, because remember, other retail traders who we're going to take our money from. Our edges are the SPY Super System software. The software is what makes the difference. It tells us whether the institutions are in there or not. That's the key thing. I can't take any trades if the institutions are not in there. So on a 5-minute chart, that means that current time frame momentum is going to be bullish for a long, bearish for a short. For a swing trade, the current time frame and multi-time frame both have to be bullish for a long or bearish for a short. Right? We trade relative strength and relative weakness. Now this is not RSI. This is how is the SPY moving in relationship to your stock. If the SPY is moving sideways and down, and you have a stock that's stacking green candles, you've got relative strength. If it's the other way around, the SPY is moving up or sideways, and your stock's moving down, stacking red candles, that's relative weakness. Those are the stocks that are going to give you the bigger edge, because if the market reverses on you, you're not going to take as big a hit as you would if you were in a stock that didn't have relative strength and relative weakness, right? So that's another important element. And this is something that a lot of retail traders overlook, trading relative strength and relative weakness. It's really important. Trading with the market trend, buy near support and sell near resistance. mute this. I got a news feed on here that I have on during the day. Okay, trading with the market trend and then buying near support, selling near resistance. This is another critical one. If you can get into a stock trade near support or a short near resistance and it turns against you, your loss is going to be minimal. You don't have a long way to go until you hit the next resistance level or support level. All right, and this is we used to be called the compass system. It's called the SPY super system now. I've already shown it to you. It identifies when institutions are in the trade. It looks at a lot of complex data like momentum, trend, money flow, etc., to come up with the colors. And it analyzes this complex data, but it actually presents it in a really easily identifiable format. And this one thing, the fact that you get colors on here, makes it much, much easier for a trader who's relatively new to identify whether a stock is a potential a good stock to trade or not. Right? It really helps a lot, so you don't have to get so deep into price action, etc. When you're learning, you want to learn how to do price action, but you don't have to do it to get started. Okay, so how do we get an edge? Okay, we're only taking trades that are being driven by institutions. We trade stocks that have relative strength or relative weakness versus a SPY or the Qs. We trade in the direction of the overall market trend. How does it give us an edge? Well, our trades are going to be supported by institutional buying and selling. This is the biggest thing right here. We're trading with the institution. We're just riding the coattails. The stock's going to be outperforming the index, the SPY, and then moving in the direction of the overall market, if there is a direction. Right? That's what gives us an edge over other retail traders. Again, that's who we're taking our money from. Okay, I'm going to talk about a couple of methodologies that we use here. The SPY super system is kind of a catch-all. SPY super system is the name for the software, but it's also for the name of the strategy that we use to trade intraday trades on the SPY, the Qs, the IWM, or even stocks. It's called the SPY super system. This is the logo for it. Now, when you're trading on SPYs, Qs, IWM, futures, you don't have an ability to do relative strength kind of comparisons. There is no relative strength when you're looking at indexes unless you're just comparing which is the strongest index, but you can't compare it to the SPY, right? So the SPY super system, we typically are not using relative strength and relative weakness. When we trade stocks on an intraday trade, and we're looking for relative strength and relative weakness, I call that institutional momentum stock system. It's the same exact thing, except we take relative strength into consideration, right? All right, so again, the SPY super system is used to trade SPYs, Qs, IWM, as well as futures, and you can use it actually on stocks. But the institutional momentum stock system is what's used to trade individual stocks. We're just using the SPY super system and trading it on Tesla, Microsoft, Apple. We do this. I do this every day, right? So this is you can use this for stocks, and you can use this for the indexes. Okay, the color codes, we've covered this. Green, bullish strong. Blue, bullish trend. Red, bearish strong. And yellow, bearish trend. Those are the colors that indicate the strength of the particular strategy that we're trying to use. What are the institutions doing? Right, so we've seen this already. We'll move ahead here. Now, before I go on with any more of this, I'm going to talk about Heikin-Ashi. I just want to spend a little time on Heikin-Ashi candles because they're very, very helpful, especially for swing type trades. And I don't think maybe a lot of people understand exactly how to use them. So I'm going to just run through this fairly quickly. I'll show you a few trades that on daily charts that have Heikin-Ashi setups for tomorrow and how you find them. Okay, so these are Heikin-Ashi candles here. Let me just get a sip of water here. These are Heikin-Ashi candles. Something you notice on Heikin-Ashi candles. Bearish Heikin-Ashi candles have flat tops. Bullish Heikin-Ashi candles have flat bottoms. Those are a big distinction here. Flat tops is bearish, flat bottoms is bullish. So these are Heikin-Ashi candles. This is British pound, Japanese yen, doesn't matter. It could be Microsoft, could be gold, could be oil. Doesn't make any difference. They all get structured the same way. Now notice, as you go from candle to candle, the next candle always starts halfway up or halfway down the previous candle. Just like that. See that? Halfway up, halfway up, halfway up. Bullish ones start halfway up the last candle. Bearish ones start halfway down the last candle. Right? Because Heikin-Ashi candles are made up of two different candles. They're made up of two candles. 5 minutes, there would be two 5-minute candles. Daily, there would be two daily candles. And one thing to notice here, and this is kind of important for folks who know about wicks and tails on candlesticks. Typically, when you have a bearish candle like that and you have a big tail on the bottom, that means it's not so bearish as it would be, because what you see is, oh, the sellers came in and then the buyers came back in again. No, that's not the case on Heikin Achi. Tails on Heikin Achi and wicks on Heikin Achi on the bullish side, I'm making the wicks are more bullish and the tails are more bearish. Right? So that's if you have that concept in your mind, you need to flip it for Heikin Achi candles. So what are we looking for in Heikin Achi candles? And this shows you a Heikin Achi bearish trend right here. Right? Again, no upper shadows, no what I call wicks on these things. And it keeps coming down. What I typically use Heikin Achi is to look for what's called a Heikin Achi reversal. I'm going to assume that I wanted to go long this particular instrument. It's long, but I'm waiting for a pullback and a bounce. Right? So I'm looking for it to bounce. And I'm looking for what's called a Heikin Achi reversal candle. Well, a reversal candle is going to be after you go from flat tops, you go to a flat bottom like that. Right? That is technically a Heikin Achi reversal candle to the bullish side right there. Right? Here's another Heikin Achi candle here. So this would be a Heikin Achi reversal candle that you'd be joining to get into the trade long under certain circumstances. But I want you to understand something. When your trend to the downside is this strong, you see the size of these candles, and you get a Heikin Achi candle like that, with a flat bottom but a small candle, that's not what I would take. I would not call that a Heikin Achi reversal that I would want to enter. Now you would have made money on it if you went in here. You had 3 or 4 candles to the upside. But what I'm looking for is a Heikin Achi candle, Heikin Achi reversal bullish candle like that. See the flat bottom? Look at the size of the candle. That's what I want. That's my Heikin Achi reversal. This tells me the trend is switching. Switching to bullish. So this is where I would get in, somewhere in this candle. And something that is interesting to understand, when a Heikin Achi candle is being created, if you're on a 5-minute chart, after about 2 minutes on that candle, you can get into it. On a daily chart, by about 1 o'clock in the afternoon, you can get into it. Because after about half of that candle has been created, the likelihood of that not having a flat bottom at the end of that period, that 5-minute period on the daily, is very, very unlikely. So you can actually enter these trades as the candlestick is created, which you really shouldn't be doing on a regular candle. You should be waiting for confirmation. All right, so here's a Heikin Achi reversal right here. So you just ride this thing up, Heikin Achi reversal, boom, 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 right up. Still green, and then you get this candle, a red candle with a big wick and a tail. You're out of the trade. That is the end of the trend right there. And this is where you want to get out, right? So this is your bearish Heikin Achi. This is your bullish Heikin Achi, and that's a Heikin Achi reversal. This is the one that would have given you a beautiful trade. Okay. All right. Now, again, we're just looking at the same exact thing here. Here's your flat top candles right here, bearish. Here's where you're turning to the upside. Now, let's phrase, for example, one of these lines is your height. Is going to be your support and resistance level. You want to break through. Say you wanted to break through this blue line right here. Where would you take the trade? Right here, either on this candle or on this candle. The Heikin Achi reversal candle is breaking through resistance. And then you just ride it right up to here. Again, as long as it stays above the blue line, you stay in. And once it gets extended like this, where it's so far away from your support levels, you're going to be obviously watching that and probably setting some sort of a trailing stop or a profit target. But this is what this is. And here, of course, is where you get out. I might have likely got out right here when I get this red candle, but this is where you would get out. Right. So that's what the Heikin Achi reversal candle does. That's the way I use it most commonly. If I'm looking for a swing trade, I'm going to be looking for a stock that's got a Heikin Achi reversal candle, either bullish or bearish today, so I can get into the trade early on. All right, so here's the distinctions on Heikin Achi candles. The bullish candles have flat bottoms. The bearish candles have flat tops. That's very important to understand. Bullish Heikin Achi reversals are identified by flat tops. Heikin Achi candles followed by flat bottoms, and bearish flat bottomed Heikin Achi followed by flat topped. All right, those are your reversals, and that's what Heikin Achi candles look like. That's really all you need to know about these. All right, again, for recaps of the advantages of Heikin Achi, smooths out the price action, reducing noise. easy to see. You're not getting as much herky jerky action as you do with watching 5-minute or 1-minute candles. It makes identifying trends much easier, improves identifying confirmation of trends or trend reversals, which is where I most commonly use it, and it helps identify potential exits when candle bodies shrink or reversal occurs. Now, I will add something to this. When I'm trading, and I use Heikin-Achi to get into a trade, and the trade's working in my favor, and I'm thinking I want to take profits pretty soon, I don't use Heikin-Achi candles at that point. I switch to regular candles. And the reason I do that is because I want to get out. If I'm in profits and I'm thinking of getting out, I want to get out as quick as I can if this thing starts to reverse. So I don't want to wait for 2 candles or a Heikin-Achi reversal candle to the downside to get me out. So I'll just take the trade off right then because I was going to exit anyway. Right. So as far as I'm concerned, I've been in the trend long enough. I want to take profits. All right, now I'm going to show a couple of charts here. This is TC2000. This is a trading platform, not a trading, a charting platform I use where I do some scanning, and I also have used charts. But it's easier to see the Heikin-Achis on here than it is some of the other charts. So this was traded in Uber. This is back in 8/1 of 2023. It doesn't matter when it was. This was Uber, and I want you to look at May 1st. This is the May 1st date right here. See this gap up, right? And then another gap. Right, these are standard candles right here in Uber. This is Uber on Heikin-Achi candles. Here's May 1st, right here. See the Heikin-Achi bearish trend right here, flat tops, flat top, flat top, flat top, flat bottom, Heikin-Achi reversal candle. So this is where you would get into the trade. Anytime during that candle, you get in. And then you just ride it up the next day, the next day, the next day. So this is where you would have been getting in right here. This is where you'd be getting out right there. As things flatten out. That's a pretty nice gain in Uber because you would have caught this gap. Now, notice there's no gaps on Heikin-Achi candlestick charts. See here, no gap? Here's the gap because it takes 2 candles to do it. So when you get this is where you want to get in. You catch the gap the next day. A lot of times you wouldn't, but this is a regular candles, Heikin-Achi candles. All right. Any questions on any of that? Just fire them in there and I'll answer them. All right, so I'm going to look at some live charts, and I'm going to bring up the trading platform, the SPY super system right here. This is the SPY super system right here. This is the SPY. This is today. This is live right now. I don't have after hours on here, but this is the SPY right here, and you can see the white candles and the yellow candles. You can see the indicators down here. If you go back and look, you notice that the market we had a nice gap up this morning and a very weak move after that, pulled down. You notice how it went from buying to selling to buying to selling. So you're not touching any of this stuff, right? And then we got no high volume candles here, but this was a decent long as it broke above the VWAP in the 8 and the 15. The only time I traded this today was I traded this one time over in here as a high volume candle as it broke above right here about 3 o'clock. And I just took it up here and I get out right there. Anyway, so I want to look at some Heikin-Achi candles. So I'm going to switch to a daily chart. And I'm going to switch my style on the candlesticks to Heikin-Achi. This is how you just change the regular candlesticks to Heikin-Achi. Every platform allows you to do that. Okay? So there's Heikin-Achi on the SPY. Now, on the daily. And by the way, the Qs, I want to show the Qs. Qs right here. This is the Qs today. Big move in the Qs. This is a pretty nice move in the Qs. You can see how bullish we've been. I actually took the Qs overnight from here because I had this bouncing off the 8. You see how it was on the 8 exponential, and I took it overnight. And it doesn't look like much, but it was a huge trade. It went from 662 to 668. That's a big move in the Qs. Okay, so let me see what I can find here for some Heikin-Achi reversals for day trades. For intraday trades, sorry, for intraday trades. Okay. We just got to randomly look at some here. All right, so let me just take CLS. So CLS is a Heikin-Achi reversal. You see this flat bottom, flat top right here, and high volume coming down, high volume going up. Get another high volume candle. Now the stock's been very bullish to CLS, right? And you get a pull down and then you get a move up. This is where your entry is. Now you check here and you see on both the multi-time frame and current time frame momentum, are they both bullish? They are, blue and green. So CLS is one you could write down on your cheat sheet for tomorrow, and I'm going to do it right now. This is a good potential long on CLS. It's a Heikenatsu reversal to get you basically back into the trend. It's a reversal kind of, but it's kind of a continuation for the trend that you're in. Right? So CLS looks nice. Google's going to look huge because Google had earnings, and I'm not going to chase it, but there's a Heikenatsu reversal in Google right there. Very nice one. Let's see something that didn't have earnings. Okay, Mara. This is one I actually traded today, intraday. Mara right here, right? See, bullish blue, bullish green. Here's your Heikenatsu reversal candle on Mara. That's a nice entry for Mara after a pull down here with a bearish Heikenatsu candles. That's a bullish trade right there. So Mara becomes a potential long for tomorrow. And again, you can have the Heikenatsu, but you've got to have these indicators lining up. Right? There's see MTUM. That's an ETF. I'm not going to use that, but looks pretty good. And if anybody wants me to look at any stocks individually on these Heikenatsu, I'd be happy to. If you put in the symbol, I'll be happy to look at them. QCOM right here, nice Heikenatsu reversal. This is a continuation of the Heikenatsu reversal that started right there. And QCOM, green, very bullish. Again, I traded this intraday today with an UMCAT trade. Hey Rob, RCAT, want to look at RCAT? Okay, on a daily. Okay, is RCAT in a daily chart? Doesn't look like much. You're in a downtrend here in RCAT. And has earnings next week, by the way. Has earnings on the 7th of May. But today moved up. He had this candle here, so this would be in no man's land for me right now. This is showing me short, but it's not a continuation. I would have to see another red candle with a flat top to tell me I had a bearish continuation. But it's certainly not a bullish reversal here at all on RCAT. Apple has earnings tonight. It's already probably reported. It's nice and strong. You can see that the move up here is strong. They had a white candle today, but not a Heikenatsu candle. But it's been in a trend already. But it reported after the earnings after hours today, which is probably already reported, which it has, and it's been pretty wild. The move on it. Apple went all the way up to 276. Let me look at the earnings post market. Yeah, the high in Apple was 276, and that right now is trading at 271. Right? But there's nothing here that you can't trade. I never trade anything over earnings, and you don't really have anything. But tomorrow you'll get a much better indication of what it's going to look like, right, on Apple. All right, let's see if I get some other ones here. Look at one more long one, and then we'll take a look at some shorts. I just want you to see what they look like and see if they align on the SPY super system to be a potential trade. Take light, LITE. And I can actually reversal candle here. Kind of a continuation, but I can actually reversal candle. Everything's green. It looks pretty good. Not white. It has regular volume, so it's not extremely strong, but not bad. Hey, Al. Can I please show on the daily cues where exactly it would have been your latest entry? Well, my latest entry is the way I traded the cues here. I traded them last night at the close. And the reason I traded them at the close was I was watching the earnings, and Google had some good earnings. Amazon had good earnings. Microsoft had some good earnings and pulled back hard. But I like the cues long. I like the setup on the cues here. Let me blow this up a little bit. All right. So you see how the Qs came off of the 8 exponential moving average here, and then here. And I wanted to take it long because I love the setup on this thing for long. I thought it was probably going to make a new all-time high, which it did today. So that's where I took it. I took it last night, and I took some calls that were slightly in the money on these things. I think I took the 662s or something and made many. But that's where I get in on that candle, and I get out right on the open this morning. The stock gapped up. You can see where it gapped up to on the Qs today. And I should actually be looking at regular candles to show that more clearly. This is where it gapped up to today. Opened right here. That's where I took it. And I took it, I put it on right there. Okay, and I think somebody wants to look at one other thing here for can I please look at Intuit? Sure. Intuit. Let's blow this up a bit. Right, there's Intuit with a bearish reversal, Heikin-Ashi reversal candle right here. Now, no volume. Notice this doesn't have any big volume. It's come down over here before, with some big volume. But it's kind of it's not something I would take right here, because you're going to have, you see, you've got some of these support levels down here, which is quite a ways down, and you got support levels right here. So you're going to have to look at that. I look at to get into more detail on the technicals on this. I would be looking at, like, I look at TC2000 for my technical setups. This is Intuit on a daily chart in TC2000. See where it is? See the 8 and the 15 right there? The white is the 8, the orange is the 15. Notice how it's right against resistance. So it's definitely bearish. It bounced up, but I'd be waiting for it to pull down and get below some of these levels here. But it's definitely, you definitely don't want to go long unless it breaks out. Burl, penny stocks too. Well, you can use them. I don't trade them too often. But there's COSM. I mean, it's going to give you all the information on them. Yeah. Again, you can see here now. The problem you've got with COSM is, see how this keeps changing color. There's really no I wouldn't say there's any confluence between institutions buying. There's a lot of buying and selling, and they're just switching over to buying here. But it's going to be difficult. And these things, institutions don't trade these stocks under $5 very much. You can use the indicators, okay, but I mean, trading penny stocks is much more problematic. And KTUS, okay, I'll look at one more, then I'm going to switch over to some bearish ones, and I want to move ahead because I got a bunch of other stuff I want to cover. This KTOS, pretty bearish for sure. This was your entry for a swing short right here on KTOS. That's a Heikin-Ashi reversal candle right there, and then you see the trend you get in. You see how it, on the 8 on the daily chart, you see how it just stayed below the 8. This was a perfect entry. Now there's no big volume here, so you would be trading in the money puts on this. If you were trading puts, you'd be trading in the money puts on KTOS. And is it too late to join it? It might be a little extended at this point. Notice what it did today. It actually put in a little doji. So you'd be waiting for another breakdown to take it. Hey, Al, you're very interested. Going to speak to you as someone else a little more one-on-one before moving forward. Yeah, I mean, if you're interested in swing trading, I'd be happy to. I mean, if you talk to Rory, if you call Rory and just give him your name and number and tell him you want to talk to me about it, I'd be happy to chat with you about it. Okay. Okay. So let me move ahead with some bearish ones, just so you can see how they work on bearish as well. I like to go with live charts because everybody can copy and cherry pick all kinds of stuff. But let's face it, we're trading live. We're trading real stuff, and that's what really matters. All right, so checkpoint is a bet, pretty big one today. DHKP. This was off earnings. See that what earnings candle does? Big, huge Heikin-Ashi reversal with big volume. But a lot of times it's not a good idea to chase those. Let's see what else we can find here. Meta today. Now Meta came off of earnings last night, and what you're going to see on Meta is a fairly significant downturn, pretty big downturn here. Again, but you got to wait to see what it does tomorrow after earnings before you jump into anything like that. Let me see if I can find something that's not earnings related. Yeah, Ryan Holdings here. Let's see, that's actually got earnings today. A lot of earnings going on right now. So AMR with a continuation. That's I can actually a continuation bearish right there, and you've got red and yellow. You can take AMR short if you like the setup. I'm looking at it on my TC2000, and it's got the 200-day moving average down around 176, so it's got about $10. Okay, so that's what we look for. That's how I find Heikin-Achi candles. That's how we use them. I mean, we can put them on any stock we want to, and see what they look like. There's Tesla. What's Tesla look like? It looks like it's non-tradable to me. It's kind of a mess. Just chopping back and forth on the daily chart. Looks good to the upside, good to the downside. It's been all over the place. All right, so, okay, so let me go back to the presentation again. Those are some Heikin-Achi candles. All right, and again, here's the codes for color codes for the SPY Super System right here. And I did update the SPY Super System chart layout. You've seen it now already, but I'll take this out of here. I added the 8 and I added the high volume candlesticks. High volume candlesticks makes a big difference. Knowing if institutions are coming in is important. Knowing if they're coming in with some push, that's really what you want to know. All right, so again, high volume candles are white for bullish and yellow for bearish. You can see them right here. We've looked at this 2 or 3 times. Now, the trades we take that I take, this is the high probability trade setup funnel. These are the criteria that we talk about the process. This is the process. First thing I look at, if I'm going to take a swing trade, I look at the daily chart. Daily chart has got to be bullish for me to go long and bearish for me to go short. Must be bullish but for a long and bearish for a short. Then I look at the 5-minute to try to get an entry. Now, if I'm just trading intraday, quick trades, UMCAT trades like out of the money catalyst or SPY Super System trades that I'm only going to be in for 3 or 4 candles, I don't need to look at the daily chart because I'm not going to carry it overnight. But if I'm going to carry it for any length of time or overnight, like all day, I've got to have a bullish chart for longs and a bearish chart for shorts. Then I trade with the trend, if stock and market, if there is one. If you're going to, for example, today, the market was grinding all day long, grinding up, putting new all-time highs. What do you want to take? You want to find the best long stocks you can. You don't really want to trade shorts against the market today, unless you were trading an inverse ETF or something. But generally speaking, you want to trade with the market trend. So if you've got a stock that's bullish, outperforming the market's green, that's the context. You've got a bullish stock on a bullish day. That's where you want to be. It gives you the highest probability of success. Then the SPY Super System must align. This is the make or break. You've got to have institutional identified as being in that trade, bullish for longs, bearish for shorts, on your 5-minute chart for intraday, and for swing trades on your 5-minute and on your multi-time frame, your current time frame and multi-time frame. Right? And then you look for relative strength and relative weakness, and then you try to enter near support or sell near resistance. That's the whole process right there. And this is what you want to internalize and learn to do, because this is what's going to give you 85-90% win rate on your trades. This is our UMCAT symbol right here, out of the money catalyst. Stocking cat here, stocking for good candidates. This again, I'm doing this November 17th. If you trade this correctly, this is a tremendous strategy. But I can't post the trades in the room. I can tell people about them, but I can't post them in the room. And I can't alert on them, obviously. They're much too quick. But I'll show you the results I've had with this. And I know a lot of people in the room have done as well or better. This was when I first did the November 17th to February 11th. 170 wins, 27 losses, 86.2% win rate. Profit factor 5.21. If you don't know what a profit factor is, please look it up. Put it into one of your AIs, Copilot, Gemini, anything like that, ChatGPT. See what it looks like. Tell me trading options, and you have a profit factor of 5.21. This is an astronomically high profit factor. Profit factor of 1 means you're breaking even. 2 is excellent. 3 is really good. Anything above that is really extraordinary. And this has been holding in pretty steady. Now I was just using the test of using $500 per trade on each one of these trades, and it produced 17.9 in the first from November 17th, February 11th. This was it through April 3rd, 333 trades, 286 wins, 47 losses. Again, stick right at 86%, and the profit factor went up to 611. I really don't think that it's possible to maintain a profit factor this high over a long period of time. And you can see what the profits went to, from $500 up to 30,200. This was the last one I did. I did a little AI graph on this thing, and this was $500 per trade. Profit factor was 5.9, 85% win rate, 500 per trade. This is what it produced, right? That was up through April 15th, right? Tax day. This is if you put 2,000 into a trade. When in the room and on the alert service, when I'm taking trades in the room and I'm putting together the criteria or the graph and the win-loss events, event log to see what it's going to do. I use 2,000 per trade as my baseline, so I've got something to go by. So this is what it would have produced at 2,000. But that's a pretty risky trade because these things are really, really volatile, right? And I would not recommend people take big risk in these because until you get used to doing it, because they can reverse on you quickly and you got to get out quickly, right? But again, this is the UMCATs. And here's some of them. This was a Netflix trade in UMCAT right here. This was not long ago, back in early April. This was where I get in. Notice how we went from selling to buying right here, right? And took it right here as this pink arrow is a pop out of the box. This is a SPY super system, puts this in to identify a compression break. Took it right there as it broke above the 8 and the 15. High volume candle. See the white candle? Rode this thing up 1, 2, 3, 4, 5, 6 or 7 candles. Get out right here. In for 35 cents, out for 70 cents. It's $100 profit, 100% profit. I mean, these are high percentages. Even if you're getting 35, 40% on a trade in a half an hour, that really stacks up pretty nicely, right? But that was Netflix. This was AAOI. This was a nice trade here. Again, right here, selling, yellow, blue, buying, right here. Take it on this big high volume candle as it breaks above the 8 and the 15. And you can see this pattern over and over again. High volume moves up, get out right here. Could have got out right here, actually, but I did stay until right here. In at 208, out at 400. $208 in, $400 out, 93% profit, right? These are in any UMCAT trade you see is going to have high volume candles. If there's no high volume candles, you've got to go in the money. You cannot take UMCAT trades, out of the money trades. This was Oracle. We looked at this one already. Beautiful trade right down there. In at 72, out at $1.25. Is the frog trade. I showed you that before. Again, there it is. Selling goes to buying to selling right there. High volume candle breaking down below the 8 exponential moving average. But move back up above it, I would have get out, taken a small loss. All right, this was one on Meta. I didn't show where I get in and get out. I kind of wanted to just put this up there so you can see it on the screen. But look at the selling across the board. So where would I take it? Usually I don't take a trade till at least after 9:45. But this is where I would have taken it right here. As it breaks down below the 8 and the 15 when high volume candles, and it had high volume candles leading up to there. So that shows the institutions are selling this hard. And I just ride this thing down. And this is where I would have got out right here on this. As soon as I get a high volume upside candle, this turns blue, I'm out of the trade right there. That's a pretty big drop though. You notice that's from 570 to about 557. All right, so I'm going to look at some live charts. I want to go into the platform again, just so I can show you these live trades on UMCATs and SPY Super System trades. Again, I want to show the exact setups we use for the SPY Super System, which is what we SPY, the Qs, the IWN, and for UMCAT, right? And again, these high probability trade setups using the SPY Super System indicators telling me the institutions are in it, and then you add in the fact that there's high volume coming from these institutions. That gives you a really, really powerful momentum to get into a trade. And again, both of these intraday strategies produce over 85% win rate and profit factors of over 4. All right, just pop over here for a minute. I'll do this pretty quickly. I looked at these. Let me go ahead and switch this over to 5 minute. I don't want to be on Fibonacci. I want to be on regular candlesticks. Okay, so here we are today. Let's just take a look. All right, so what did I trade today? I think, let me see. I traded here. NVO. Traded NVO today. I traded it long. Right in here. Early this morning, I traded NVO. It was a decent setup on the daily chart. And I was looking for it to go long. You see how it came right there? I just took it right here on this candle. Right, as it broke above the 8 right there, I took it right here, and I get out right there. That little trade right there on NVO produced. I'm trying to remember what it produced today. Let me check something. I can tell you exactly what it produced today. NVO. I get in at $54 a contract, and I get out at $74 a contract. That's a $20 on 54 entry. It's about almost 50%, about 40% profit in that little trade right there. I didn't have to stay around in it very long. I traded Mara today. Traded Mara. Also traded Mara long. We go back and look at Mara. We had several different places we get it, but I took it this morning, right here on this move up here, and I actually stayed with it as it followed the 8 up here, and I get out right up in here. And that was a decent trade as well on Mara. Forget what I get out in and out at. I get in at 22 cents and I get out at 42 cents. 22 to 42, above 90% profit on that. I mean, that's what these UMCAT trades can do. And let's see what else. And that wasn't true. I didn't trade very many today. So now if I look at the SPY and Qs to see if there was any opportunities on the SPY or the Qs today to trade this, I'll go back to this morning. Market opens here, looking for an opportunity. You could trade the SPY super system here. Now this would be within the money because there's no high volume candles, but right here, you went from selling to buying and you broke above the VWAP. This would be a nice SPY super system trade right here, right? Get in here, get out right there. This is on a 5-minute chart. Then you had a kind of a grind up here all day long. You could have taken it here, and you could have taken it here. See this high volume candle right off the 8? You could take it right there and ride it right up, as long as it stayed above the 8, which it just did right there, and that rode it right up to the end of the day. That was SPY. So that's the SPY super system, and some of the other ones would be UMCAT would be on stocks. I mean, I typically don't do UMCATs on SPYs and Qs. I usually use in the money puts and calls on those. Right, so I think that kind of shows you what what the format is. All right, so let me go back to the room here again. Okay, and right back to the webinar. Okay, so I'm just going to show you some of the other ones, but I don't really want to beat a dead horse here. Where you can see what the setups are like. This was before I had the colored candles on here. This was SPY super system. Red selling, blue buying. It's breaking above the 8 and the VWAP right there with a break out of the box or a compression break. There you go. That's it. That was NVIDIA. This was a SPY trade right here. See, it was yellow. Went from green to yellow. Take it right here. Write it down. Setups not that hard to see, but you got to find them. You know, this is the tricky part. Is the SPY for long right here, breaking above the VWAP. Institutions just came in, selling, coming right in. You get it. Catch it early. All right, this is kind of just a funny. This is a trader trading with emotion, right? This is what happens when you don't have a methodology to follow. When you get FOMO, or when you're watching your P&L and it starts to go against you. This is how you start to trade. You cannot trade effectively when you're trading emotionally. You just can't. You're watching your P&L. You're trading emotionally. You're chasing stocks when they've broken way above support. You're trading emotionally, and you're going to end up getting stressed out. This is what we look like when we actually have some methodology we can follow, like the SPY super system, UMCAT trades, SPY super system on swing trades. This is what we feel calm. We know we're going to have some losers from time to time, but we have mostly winners. Okay. And again, I'll just learn the process. All right. Don't be depending on your P&L, having a winning P&L to tell you that you're actually doing well. You've got to learn the process, because many traders will take a bad trade and make money on it, and now they're reinforcing some bad habits. They're taking trades that they should not be taking. Okay, so don't be focused on your P&Ls without having a solid process to follow. Learn the process and learn that. That was the criteria that we talked about, right? Are the institutions in the trade or not? The alert service, again, this is for day trades and short-term swing trades. Designed for traders who can't watch the market all day. These will just be mostly swing trades. You're never going to see an UMCAT or a SPY super system trade in there because they're too quick. I mean, sometimes they only last 1 or 2 candles. I'll talk about them in the room and I'll announce them in the room if I can. But I have videos on these, training videos on how to learn how to trade this UMCAT, the SPY super system strategies, all of those, so that you can actually learn it, internalize it, and trade it yourself. And I get a lot of people that's all they do now is trade UMCAT trades and SPY super system trades because they want, they're intraday traders. I have a lot of people who just follow swing trades, which we do a lot of. Right, so this was the performance. This is in the room for 2025 at 2,000 per trade. If you took every trade that we mentioned, that we posted in the room, this is what you would have made on 2,000 per trade. And it runs about 60,000 every year. It stays very, very close to that. Again, 2,000 per trade. Okay, so these are results. I just kind of want to go over the results we've had from 2023. We made a little over 60,000, putting 2,000 into each trade. In 2024, 45.81, and 2025, 44.26. And again, the total profits you make are going to be very. I'm sorry, that was 55.113 for the year. The total profits is going to be very dependent on what the market's doing. Trending markets produce a lot better results than choppy markets. We had a lot of choppy markets in the last 4 or 5 months. We're getting some trending now. Market is very, very bullish at the moment. All right, so this was January through March of 2026. I'm not going to go through everything, but I want you to see these are regular. These are not UMCAT trades. These are just regular room trades and alerts. These are the kind of percentages gains you can expect. You're not going to see 200, 300, 400% on these trades. You're going to see 30, 35, 40, 25, 11, 15. These are the kind of results you'll see. All right, so this was January of this year, 13 and 2. January through March, 35 and 8, produced 5,800. Very choppy time. This is just April. This is this month that we're in right now, just finishing up. You can see the trades we took. We did have a nice trade in Oxy. This was a strangle. It really, really worked well. It had a big move. We did it over the weekend when the thinking there was probably going to be some sort of announcement on the war in Iran, which was either going to spike the oil prices way up or drop them way down. We took a strangle and we got 103% on that. That was pretty nice. But it's typically what you see, these kind of percentages. And this is the trades so far this month, 13 and 1 and 6,500 we made so far in the trading room, 3 and 1 in the alert service. We've only alerted on 4 trades, 25.50 on the alerts this month. All right, we just closed CoreWeave today for 15%. We just closed UNH. That's the one I told you about, the credits, the debit spread that we had on. We did have this OGN this month, by the way. This was a speculative, unusual option activity trade. Don't take many of those, but we did take it, and that was a 105% winner. All right, so I'm going to just run through these quickly. I don't want to go through every. I've got an awful lot of information on the trades we've taken because I've been doing this for 5 years, so I've built a lot of information on it. But again, you can see the win rate here stays about the same. The profits vary around between 2,500 to 7,000 or 8,000 per month. Just depends on the trades we take and how long we can stay in them. This was May of 2025. These are some time spreads that we did back then that worked out pretty well. But notice the percentages staying about the same. Right? There's 15 and 2, 29 and 7 in the room, 15 and 2 in the alerts. Good month. June last year, it was a slow month. I was on vacation. 10 and 1. And then July, lots and lots of trades. You can see the percentages. However, notice how they stay around the same. All right? Very, very similar to get those are results you're going to see most of the time. July, we had a huge month though. 30 wins, 3 losses, 91% win rate, and 16,829. Market was trending. We had a really good month to trade. That was our best month last year. August 20 and 4, 84% win rate. And this September again, 21 and 4, 84% win rate. So this just kind of goes through last year, the amount of money. I don't need to spend a lot of time on this. This was the September 2024. I just wanted to point this out because we do have losing trades. We actually had a losing month, which is pretty rare. I think we've only had 2 losing months in 4.5 years. But this was one last September. And I just like to show this for transparency to know that you can have losses. But please be aware of that. I try to be transparent. I know you go to a lot of rooms. They don't ever tell you about any losses. They cherry pick some of the trades they take. Everything's got to be a winner. It's not, right? Trading is not easy. All right, so here's the, we had that 1786 loss. We followed that up in October with a $7,700 win. All right, this is what the alert service looks like. When you get an alert, it's going to give you a date. It's going to say the symbol. It's going to say, for example, buy April 11th, 67 puts. That means with Nike, we're going to be short because we're buying the April 11th. That's the expiration date. 67 puts. That's the strike price for 285. And we sold these for $9. This was back during the when the tariffs went on. Sold it for $9. So you get a second alert that would say sell order for $9. This wouldn't be on the first alert. We'd come up as a second one. And there could be a third one after that to adjust the price on this. Okay? And then they will tell you that they were sold. All right, so how do we achieve these kind of results? I think I've already covered that. We follow the process. We're able to identify when institutions are driving a trade and when they're not. Only take trades when both of these are in our favor. In other words, when the institutions are in and when the market internals are in our favor. And how do we do it? Again, triple screen assessment of momentum, trend, money flow, especially momentum. Especially momentum. All right. And this is another template. If you want to, if you buy the software, you'll get a template that looks like this. You get a template that looks like this. Just the current time frame momentum. You can flop them back and forth. This is just for people who are just trading intraday only, not interested in swing trading. I use this one for all of them, so they put that in there because some people just wanted that one. Okay, SPY Super System trade here. You can see the beautiful trade in this one, breaking down green, yellow. Okay. And this is a SPY Super System. I'm not going to talk a lot about this. I put this in there when I was putting this together a couple of years ago to show the results we had on trading the SPY, the Qs, and the IWM. This is the results of those. It's huge winners and a huge number of trades. But you only have one on at a time, and you have to be watching them, right? But these are my results. I can't post them, so these are the results I had. As you can see, they were very, very profitable. I've never had a losing month on SPY Super System trades, ever. Here's one right here. You can see it. You notice it went from red to blue, broken above the VWAP. This is before I had the high volume candles. Up it goes, take it off. That's a SPY Super System trade. There's another one here. That was just two candles and out. Another one here. Another beautiful one right here. Red across the board. So these are just examples of that. These are some of the longer term trades we took. We took a line. We were trying to take a swing trade on this, but we're up 51% an hour. So we took that as a short, obviously, as you can see. This is SMR. This was a daily chart. This was when we went long right here. And this move up, went from selling to buying. We bought it there, made a nice profit in it. There's the Nike trade. We took it right here on the 28th. We held it, got a gap down, took it right off of the open. I have a saying that's in the room is gaps are gifts. If you long a trade and it gaps up, take the profits. And if you short a trade and it gaps down, take the profits. I had the Qs overnight. It gapped up this morning. What did I do? I took it off immediately on the open. Getting in for like $3 and some odd cents. I closed it out for $6.24, I think. Okay. And Sarepta, another one right here that we had a short. These are swing trades. These are daily charts right here. Notice the institutions selling the heck out of these things. HMS long, institutions buying the heck out of this thing. Right. So that wraps up the presentations pretty much. I just wanted to, we've covered these. These are what we do, swing trades. Here's the intraday trades. I just want everybody to see the effectiveness of this SPY Super System software and how well these strategies work. I mean, they really, really work well. And we're going to show you about what we have here for some offers from Rightline. The annual membership for the SPY Super System. This is a software, right? Comes with the software. You get a month in the live trading room. You can get the scanners. I didn't really go into the scanners, but we have scanners that was on the side of the SPY Super System that you might have seen off to the left. We have cascading up for relative strength, cascading down for relative weakness, and several others. And you get all the videos of the training classes, and Brightline will put that on your machine. You don't need to buy Thinkorswim. You can just download it. They'll put it on there for you. It look exactly like mine. Now, normally 1998 is what it is for a year. Right now, they're doing a special with one-time payment, 1998, same price. You get it forever. You buy it once, you've got it forever. You use it all the time you want to, and you'd also get 3 months in the trading room if you buy it for the one-time payment. And you get the scanners, and you get the trading classes, and the installation. All of that on the Spot software. That's the SPY Super System software. Does the software work on MacBook? I don't. Does it? Can you run Thinkorswim on MacBook? If you can run Thinkorswim, it'll run wherever you can run Thinkorswim. It's related to the actual platform, the trading platform. Rory says yes, it does. It's good on MacBook, so I get a lot of people using MacBook. So yes, it does. As long as your software runs there, then that's all you need. It'll look the same as mine. Now, if you want to become a member of the room or the alert service, this is your quarterly memberships here. The quarterly membership has a 2-week free trial. You get the trading room, the text alerts, you get all these videos on trading, and you get a Discord chat. And it's $3.96 for a quarter after 2-week free trial, which you can cancel anytime you want. And a lot of people come in on 2-week free trials. Most people stay. Some people don't, but most people stay. Or you can get the annual membership much cheaper, $14.98 for the whole year. You get the trading room, the alert service. You get obviously all the training videos and the private Discord room. Same thing, except you're getting it for the whole year. And then you can do a one-time payment for $19.98. For $500 more, you're in the room and the alert service forever. Again, the same thing with the training videos, etc. And there's a link in the chat box to this particular offers. Can you install the TOS software on more than one computer? You have to. I don't think you could. There's a problem with that. I mean, I think a swim you can put it. We can do two. Okay, you can do two different pieces of 2 different computer systems for the software. Rory says you can do 2. What is the optimal screen setup? I'm not sure I understand that question, Alexander. Maybe you can be a little clearer on what exactly you mean. What's the optimal screen setup? How many screens do I use? Oh, I use 4. I use 4 screens. But I've got a bunch. I've got the room open, so I got to have it open for the room, and then I have my trading platform open. Of course, this is running all day long here. And this is what, if you're in the room, this is what you'll see. You'll see the SPY Super System up. This is what we talk about all day long. Here's your scanners, by the way. This is a cascading up, which you can do for 5-minute or for daily. And if you click on it, it's going to show you the actual 5-minute candlesticks right now. You notice how you can find. This is where you find stocks that are cascading up. That could be SPY Super System or UMCAT trades, because you can just click on them. Here's ones that could be short. See this meta move, high volume moving down. This core weave actually moving down as well late in the day. So this is where I find these, and these can be switched to daily for looking for cascading daily charts and cascading bearish charts, cascading up, cascading down. Can the software be transferred when you buy a new computer? Yeah, sure. Yeah, you can transfer it. I've done it before. When I bought a new computer, I had to transfer it over. Yep, you've got it for good. And I run 3 screens. I also have a laptop where I run a news feed all day, because I'm always looking for opportunities to do like straddles and strangles on overreacting stocks and things like that. So I keep those. I keep it handy. But yeah, I use 4 screens. And I've got my TC2000 up there. I've got a bunch of scans on one screen. I have the room open on another screen with questions, etc. So it's enough to keep me pretty busy. So there you go. There's the software. Annual of $19.98. You can buy it now. One-time payment, $19.98. This thing is one of the best investments I ever made. I actually bought this before I had this room and used it, and that's what convinced me to talk about Brightline, about doing a room, because I was so impressed with it. And again, that's the software, and here is the trading room and the text alert service. And again, you can just look at it in the chat. It's in there. Okay. Any other questions? I'd be happy to answer any more. Look forward to seeing some folks in the room here soon. Got one more day to go this week. And tomorrow's the first day of May. Good day to start with a new piece of software, 1st of May. And again, the market is extremely strong right now. I'm just looking at the post market on the SPY. It's trading at 718.55. And the high today was 719.85, trading right near the all-time high. Beautiful, beautiful setup. If you want to see again why I took, if you look at, this is why I took the cues last night. I saw it on the SPY Super System. I saw it on my TC2000. You see this pull back to the 8 and then a bounce right off of it here. This is where I took it. I took it and I got this gap up this morning, and that's a lot of money when you get a gap up like that. And I was just trading it off the technicals. All right, thank you everybody. I appreciate you folks coming to the room today. I know you've had a lot of videos a lot of webinars to watch, so I appreciate you hanging around with me till the end of the day. Look forward to seeing some folks in the room tomorrow. And if not, have a great day trading tomorrow. Good luck trading, and we'll see you.